Oh no, I had cap locks on. It's all good. I didn't get very far. Good morning, good morning, good morning. Sorry that I'm a little bit behind. I'm not even really behind. I got to figure out what I'm going to do because just sharing the stream and things of the sort that took nearly almost 20 minutes. So I got to dwindle that down. Normally it doesn't take that long. I don't know why it took so long today. But anyway, good morning, my fine, beautiful viewers, my friends, my fellow traders. I hope everybody is doing well today. I hope you got your sleep. Hope you're ready to go. You probably have already started to trade. We have earnings. Things are about to get fun. Yesterday was a bit of a day where, in my opinion, there wasn't too much going on. There was enough. There was definitely some opportunity. So I don't have much time to sit here and yap, as we like to call it here in the streets. No, I'm just kidding. But you yapping too much, you got to cut that out. So anyway, good morning. It's good to see everybody. Please, the only thing we ask, hit that like button, subscribe if you like the stream and you are a subscriber. My goal today is 10 likes. We get to 1,000 subscribers. Whenever we get there, if you're a subscriber and you've liked the streams, guess what? You are in for the cash giveaway. Straight, cold, hard cash. Okay? That is my, that is my, it's the least I could do to say thank you. I got to figure out which way I'm going to take this stream. But again, here I go yapping again. I have been thinking, I thought about that all night last night, with the direction that I want to go and the things that it is that I'm doing. And just being a one-man team. So anyway, let's get right to it. So we're going to go through some of the earnings, some of the top trending stocks. We'll go look at the overall markets right as we speak. Right now you have Wolf Speed, which is going bananas. BANANAN. Again, our goal today is 10 likes. I know we can do it, guys. 10 likes. Good morning, everybody. And, we can get to 1,000 subscribers. I know we can do it. I'm going to tell you guys right now, I'm not going to trade this pre-market. It's already did what it did. This break here on, this little section here, it's not that I don't like it. I'll just wait and let it. It just shows me that there's not much enthusiasm. There's not much enthusiasm here, but there is a ton of enthusiasm to sell it. So we'll let this thing hang out for the rest of the morning. It'll be on watch. I'm not sure if there's any news with this or not. I doubt that there is. All right. So yesterday, we're going to go right into earnings. We're going to go with the trades that we took yesterday. Really, I only traded one trade yesterday, and that was SMCI. And we'll go into more of that. The SPY, the S&Ps. All right, let's go here. Let's go to the daily chart of the S&Ps. Again, good morning. It's really good to see everybody. And again, if you haven't, please hit that like button, subscribe. That's all we ask. We're just, we're putting in a lot of work here. We're just desperately trying to get to that 1K subscriber mark. I know we can do it. All right, the SPY. We extended off of the 20-day here. Nice little double bottom consolidation here for a little while. And we're extending out to new highs coming into earnings season. It's kind of, pricing in that they're expecting for earnings to be either better than expected or to just be in line and nothing major to happen. That's what the market's predicting for the most part. Wouldn't say it's predicting it. Maybe it's just pricing in if and what it would consider if the earnings are decent. If it's better than expected, expect the market to go higher. If things start to get sour, look for the markets to obviously pull back. Look at the volume, though. The volume's been pretty nice on this breakout. It's been a really nice breakout. Just want to make sure. Okay. So we still did not test that double top from Friday. All right. So I haven't traded the overall indexes. I'd be looking for that pullback. We're not overdone just yet. I would look for more than likely a pop and then a possible pullback. But again, that doesn't mean that that's going to happen. This thing could actually go higher. You could actually print a new high. The probability of that happening is pretty high. Yesterday we had this double top. Oh, that was MSTR. I'm sorry, I was thinking wrong. Watch pre-market highs. Watch yesterday and you know, the highs from yesterday up there around 585. You've pulled away from it. You tested it after hours. But I think you already have started. Let's see where this is at around 9 o'clock. All right, let's go to the QQQ. And really, the only reason I look at the overall market to see where they are, but more so what the index is telling us. Like, look at the Qs. It has not made a new high. All right, so it's lagging to an extent. It's got up to the gap fill. We were targeting 490 2 weeks ago. Into last week, 490. We got up there. We held it. Now we're moving off of it, back up to previous highs. So 500 to 50. What is this? What would you guys consider this? 500 to 503. Let's keep an eye on this area. All right, keep an eye on that area there. In my opinion, again, in my thoughts, I feel like the market has an opportunity to move higher. I do. I feel like the markets can move higher today. Wait. Yeah. And when I mean higher, I mean flirt with yesterday's high, maybe print a new high of the week. A new high of the week, not a new high, but a new high of the week. And I'm going to keep this double top on watch. And it's 498 on watch. Looking for pullbacks. All right. Going to keep my eye on this 498. It's as simple as that. And we're going to look for prior day's high and pullbacks off of that area. And look for a move. You know, we're going to play the range. Play the range. Okay. Because you can see here now. It's a bit extended, but you know, short term. So I feel like today could be a day where things are flat. Just to be honest with you, all right. Doesn't mean that that's going to happen, but the way it's looking is that we could sit here between this yesterday's low and yesterday's high. Sorry, it must have been the window that I have open. I thought I heard my cat. So that's the Qs. The Qs are below yesterday's high. Let's hurry this up real quick. If you guys have questions, again, good morning, Ray. If you guys have questions, throw them in the chat. Hit that like button, subscribe if you haven't already done so. Thumb it up, like it up, love it up. Sub up if you have not already subbed. You guys know the deal. 1,000 subscribers, I'm doing a cash giveaway for you guys. All right, the Dow. Goldman Sachs this morning. Nice earnings, which we'll cover. I need to hurry this up. This is why I get frustrated with myself, because I do this, and I should be worrying about what it is that I'm going to trade today.
On the New York Empire State Manufacturing Index for October.
Bada bing, bada boom, bada bing, bada boom.
With the Chicago Bulls. And we're in Foxtrot Lima.
If that was too loud, I'm sorry. All right, so Canada had inflation data this morning, coming in lower than expected. Good for them year over year. Core was above month over month. Wow. That's what we need. We need those negative numbers. You need to draw this thing down a little bit. And in my opinion, that's not deflation. Having a few numbers that pull back a bit. New York Empire State Manufacturing negative. Blame it on the dollar. Okay, blame it on the dollar. Let me grab my charger real quick, and we're going to just go right into the stocks. Bang, bang. Got that.
ATRO, Astronics, David Brody.
Throw a hat that on. Alright, guys, sorry about that. The Dow and IWM, and we're going into the trending stocks, the news, earnings, and where our opportunity lies. So far, what else do we have today? Consumer inflation expectations. Keep an eye on these consumer inflation expectations. I didn't see this earlier in the week when I went through these, but I think it's important to keep that on watch. It's going to be very important to keep that on watch. Just give me 1 second here. I don't know what Wolf's going to do today. I don't think it's going to do anything. There's other names that are running today. You're starting to see some small caps start to make runs.
Welcome back to Stockmarket. Rick Santella here live at CME HQ with the first breaking news of the week in the form of Empire Manufacturing for the
All right, so Goldman Sachs, nice run up, pullback, QQQ. Let's go look at the Dow real quick. The Dow is obviously, damn, so the Dow is still, the Dow did not make a high. That Goldman Sachs earnings was not enough for it to make a new high. Let's look at the IWM. I'm looking at the top right for those that don't know. All right, so you're seeing some weakness in the IWM and the Dow. So what I'm looking at here is the Qs. So yesterday's close was roughly, so you're just at yesterday's close. Yeah, near below it. So the IWM, as of right now, this can change and will change. This rotation can and will change throughout the day, from morning to afternoon, this, that, and the third. All right, so we got an idea what the overall markets are doing. The Dow, IWM are a bit weaker than the SPY and QQQ. There's some energy talk that we need to get to. Why is this like this? I must have hit it falling asleep in the morning. Not in the morning, but yesterday. Why is this not? They should be perfect. All right. Okay. Let's go to some trending stocks. So there's a few I want to talk about. If you guys have any stocks you guys want to talk about, please throw them in the chat. Now's your time. All right, now's your time. Why is Bank of America's shares moved 1% higher? Dude, Bank of America has been on a rip. Keep your guys' eyes on this. Buffett's been selling this, and it's just been running and running and running and running and running. All right, Johnson & Johnson. Also, healthcare conglomerate saw shares rising slightly pre-market after quarterly results exceeded expectations on the back of a strong sales of oncology drug, and they raised forward guidance for the full year 2024 profit and sales. Nice, nice, nice. That's a good one. Jot that down, J&J. You may want to actually, we might even think about putting this in the long term if they're going to, because here's how I view this. Is that the COVID left. Oh, and look, it's down on that news. Okay, hold up, sister. And look, we're starting to turn this 160 into resistance. So this is why I don't like CNBC at times. It's up, I guess, from when they put it out. But come on now, like, gotta do more work on that one. Scratch that. I mean, even the daily chart is trying to start to put in a... Not really. I was going to say it's trying to put in a base, but it's not. Alright. United Healthcare declined 3.2% despite posting a top and bottom line beat in the third quarter. The company lowered its earnings guidance due to ongoing headwinds from a cyber attack earlier in the year. The cyber attack should have no bearing on you cutting guidance. Sure. Could it like make your guidance flat or so? Well, I don't understand that. I feel like that's just an excuse for other things that are going on. That's just my opinion. I'm not the CEO of the head of one of the biggest companies in the world. Okay, So from a cyber attack earlier in the year, and if any of you guys have any feedback on that, let me know how I could be wrong there. But I have a feeling they're just using that as like a, you know, uh, my friend said she needed help, so I, like a kid saying their friend needed help, so they left at like 9:30 at night, and they're not even like, you know what I'm saying? It's like, well, yeah, I know I'm not supposed to be out, but my friend called and needed some help because their mom was at work. I don't know. You know what I'm saying? So, all right. So that's UNH. Let's take a look at that really quickly. UNH. Let's keep it moving and grooving. SMCI. I know we're going to talk about that. So healthcare stocks are down, guys. Healthcare stocks are down. Walgreens, retail drugstore chain jumped 5% after physical fourth quarter sales and profit exceeded analyst expectations. I guess now might be the time to buy Walgreens. So Walgreens also said it plans to close roughly 1,200 stores over the next 3 years, which it said should increase adjusted earnings and free cash flow and help cut costs. Help cut costs. Well, if you keep closing stores, you're going to have revenue that's down, but the market likes it. So, is it time, guys? Even if we collect on a short squeeze, what do you guys think? Look at the selling pressure into this thing. I got to be honest with you, I'm scared to touch it, but I'll put on a little risk down here for Walgreens. It's hard for me to believe that Boeing and Walgreens may not be here one day. It could happen. It could happen. Damn, this is wild. So sad, man. Some of the best companies we grew up with. Look how long this thing has been a publicly listed stock. I mean, this thing goes back to 1985, 84. Like, how sad. Think about the discount you're getting here. Alright, anyway. Let's keep it moving and grooving. What's up, Ty? Good morning, buddy. I did not see that. Oh, did you? Nice. I didn't see anything about why I should or shouldn't do it. Sorry about that. I just seen your comment. Again, if you guys don't see me get to your comments, it's because I haven't seen it and whatnot. So, all right. $9, $8.96. I don't know what the dividend is on this. Let me do some research on this later on today. I might try this. And look for $1. I mean, listen, if I can get this at $9, $9 to $10 would be a 10% move. Now my cat's gonna mess with me, but she's good. All right. So, damn, that sucks. It didn't hold. We'll talk about this one later. I'm thinking about buying Walgreens, guys. I'm just gonna let you guys know that right now. All right, I may end up shooting my shot with this. I'm not going crazy with it. I'm just gonna be honest. I don't trust it. All right, Citigroup. Shares of Jane Fraser led bank added 1.7%, so they're up. Third quarter earnings and revenue were better than consensus estimates. Citigroup posted earnings per share of $1.50 on $20 billion, a little over $20 billion in revenue, while analysts surveyed LSEG had expected earnings per share to be $1.30 on 19. Wow, beautifully done. They saved some revenue on those layoffs. Citi and then PNC. The Pittsburgh-based regional bank added 0.8% pre-market. PNC reported earnings of $3.49, topping estimates of $3.30 per share. Reported $3.49, estimates of $3.30. So that's nice. That's over what 19 cents. So that's pretty rad. According to analysts, LSE revenue of $5.4 billion also beat forecasts of $5.3 billion. What do you guys think it would take for PNC to be a $10 billion company? I'm kind of curious because I may want to own this, but I feel like there are better opportunities elsewhere. like in this range of market cap, from the Affirms to the Upstarts. PNC is big, but when are they going to start moving south and start really ramping up? You know, I don't know what. See, there's laws with this too. The government doesn't want some of these regional banks. This is, I would say PNC is probably your biggest, one of the biggest regional banks out there. Is pushing, is at the top of the list, right? I would say with at least the top 5 to top 8, or we'll just say 10. Not sure where I got 8 from, but I just feel pretty strongly that PNC is up there. So PNC is up pre-market. Let's keep our eyes on financials today. All right, as we should have last week, but it's setting in now that everyone else outside of Wells Fargo and JP Morgan are doing pretty well. All right. So, all right. So it looks like JP Morgan's going to run back and flirt with previous highs. Let's pull up XLF. Let's pull up XLF. It's making a nice run. I may end up just looking at like Citigroup. See, these are making new highs. I mean, anybody that tells you this is a bear market or tries to tell you otherwise, look at this. Like, this is a beautiful just breakout to a new high. So I would actually let XLF pull back to like 46 if you can get it. I just doubt that you get it. What is that? Yeah, I'm going to use 46 to 45 on XLF if you can look for a pullback. I just don't think you get it because I think this thing starts to take off. If it gives you any type of pullback, look for the pre-market move at like 47 and you could look for a move higher. All right, let's go into what's trending. And let's see, end phase fell 1.8%. Oh shit, hold on. Charles Schwab surged more than 7% after the third quarter beat. Analyst estimates Schwab reported 77 cents in the earnings per share. 77 cents in earnings per share. That in got me. Excluding one-time items of 4.85 billion in revenue. I wonder what this move to Thinkorswim is going to do for them, and if this could double their market cap. And I want you guys to think about that going on for the next year or so. And start thinking about that. It could, because listen, trading is cool and all. It's a nice way to bring in some revenue, but you have to take part in this growth. Don't get left behind. I really feel like PNC or even Charles Schwab could be an $7.5 to $8 billion company in the next few years. This could double. Be a part of it. I mean, it may not, but I'm just saying. Make sure you're if you're able to, you should be able to, or take your profits from your trades, throw them into names like Charles Schwab. I don't remember the ticker. Fuck. I gotta hurry up, man. It's already 8:45. I just gotta get into some trending names and stocks. That's kind of the news of the day. I want to go over end phase. I can't believe I don't know this. I should know this. I do. SCHW. SCHW. It's just been a while. All right, look at that. So there's your runner. There's your runner. We found her. That's a mover. That's a mover and a half. So we're above the 200, all the major moving averages. Looks like we already have this thing ready to go. Top end of this range would be around 80 to 76 to $80. All right, how did I come up with that? This is your previous resistance. This is your previous high where it was holding as support. It broke, and then that next level came in right. So this would be the area I'd be watching on Schwab to try to get itself back up and above $75. All right, so you're in the gap fill right now. You have a gap. That gap fill is at 73.61, and you did it. So watch for this to hold and look to see if we can get back up through into that 75 zone right there. Let's move this over. Let's talk about this, actually. I can remove that. Let me make sure that I'm seeing everything. I like that better. See, it's going to be a zone. 74. All right. This is my target right there, guys. $76. I'm going to keep that there. That 76 is my target. I'm going to get rid of this. And we're going to move over to the other chart. And we need to watch energy because energy is pulling back. All right, and look, we're holding. It's holding right now. All right, we just drew that level at $74. Let's go here. Obviously, it's going to be well above everything and everything. How much is this? 67. This thing has been a laggard, but I wonder if this is the turnaround. I'm going to keep my eyes on this to see if we can buy this. Back to all-time highs would put it around 6 billion, 6.5 billion market cap. What is it? 4.8. So maybe like 7.5. Closer to 8. Let's look at end phase real quick. But this is up. You know, that's the only thing I can say is watch the hold here at 74. You can't see it here because I don't have after hours on. But watch $74. Okay, 74 for 74 to hold. If 74 does not hold, I'll tell you right now, you have a lot of room to fall back down to $70 and that 200-day moving average. All right. And look at this inverse head and shoulders here, guys. Look at this. You guys may not have saw this. I know I didn't. Holy shit. Look at that bad boy. That doesn't really add up, but it's not pretty, but it sure as shit is there. Look, I'll just bring you guys over here. Look at that. Right here. Left shoulder, head, right shoulder. And now let's see if we can break out. And what we'll do is we could use... I just don't like it. I don't like it. It's there, though. It is. It's there. All right, let's keep it moving. End phase. What's going on with end phase? And that's the last one. But we're going to go into, you know, the stocks to trade. Shares fell 1.8%. That's not too big of a move, but it's not bad. Downgraded the maker of solar micro inverters and EV charging stations to sector perform from outperform. So it's not too bad of a downgrade. Slower pace growth next year, not reflected in current consensus estimates. Enphase also makes battery storage units, which is down more than 20% this year. No bueno, my friend. That's not good. Hit that like button. Subscribe. Thank you. If you have questions, type them in the chat. 1,000 subscribers. We're doing a cash giveaway. Make sure you there. Sorry. All right. Wolf speed. Wolf speed. I got to be honest with you. I don't know much about it to even say anything about it. I would just say it's a small cap. I don't know what the news is. Let me look at this at lunch. I would keep. There's a lot of names going today, and my scanner for some reason is like paused. It's not paused. It's like my screen is kind of fudged up. Hold on 1 second here. All right. You guys can't see it. It's on another computer. Hold on 1 second. I would honestly here, like as far as a trade. Where are you trading at? 15? You're already up over 50%. I would wait for a pullback. Look at the volume this pre-market. Look at that. You extended to a new high on lower volume, And that serious volume on the sell side shows you got a lot of sellers up here. What I would do is I would use, like, what the hell is going on? Like, this thing was 100. What is going on with this thing? There's higher after the company announced it signed a signed non-binding preliminary memorandum of terms of up to $750 million in proposed direct funding under CHIPS and Science Act. So they're getting a couple extra dollars from the CHIPS and Science Act. Like, here's what I would say for anybody, like, as far, if you're thinking about, like, versus a trade versus a buy, I gotta be honest, you know, I don't know what their market cap is, which we can look, and then we'll use that $750 million. And we'll use the math as far as, see, they're a $1 billion company, so that's nearly, and so it's kind of counted it in. You know, you have to ask yourself, you have to do the work, and do you think that they can be a, oh, they're 1.4. Do you think they could be a $2 or $3 billion company? I don't know what they do. I just don't know much about them. You know? Come on. All right, let's get into some trades here. This is something I'll get into at like lunchtime or something. For now, I would just keep an eye on pullbacks from prior days low. So you're in it from like a couple days ago. This seems to be the low here. This is really when it started. It started back here, but this was your low. So that's why I put that there. Always put your stuff there for a reason. I would look for a pullback to your 38.2 fib. Roughly, see if you can get a 13 entry. If you can get a 13 entry, then that means 13. Holy shit. Where are we at? 14, 15, 1480. Watch your 20 day. And look, 1360, that's funny. What did I say? 13 something? Yeah, that's what I'm, that's how I would play it. I would be looking for pullbacks into, I just had it. It was like $13. Where did it go? Uh, 14. Okay, if you can pull back and hold 14, okay? Or, I don't want to spend too much time on this. Here's the thing. You have to look at the selling pressure. Look at this chart. Look at this sell side volume. Bang, bang, bang. They got some buyers in there, but they're buying it for the reversal, I feel like, and they could just do offerings out. Like, that's what it feels like is going on to me. They're diluting the shares, which is making this thing worthless. This is not okay. Sure, it could be a good company, but if you're going to dilute the shit out of your equity, it's like a sponge. Like a sponge is good with water and soap, but once you start twisting at it and you just empty all the goodness out of it and what it's used for, it's not worth anything. It gets all dry, like, you know what I'm saying? So I would watch the CEOs and all that. Sorry, by pre-market on Schwab. Would it be okay? That's up to you. Me personally, sorry, but that's for Wolf Speed. I would do some research. I'm gonna wait to see if Schwab, see how it tries to react above these levels. It's already up. Like, if you want to put it in your long term, that's a decision you have to make. Because listen, I would love to tell you, you know, I want to give you guys, you know, I want to be able to give you guys what I would do scenarios. What I would do is I would look for pullbacks. I'm not going to necessarily buy it up here because the whole point of buying equities, even for your long term, is to buy them at discounted prices. And I feel like with the election coming up, guys, don't be in such a rush. This is up over 7%. Okay? I feel like in the next couple weeks, with the uncertainty of the president, because we know what we got with Biden, we know what we can get with Trump, the market doesn't know what it's going to get with Kamala. That is still there. That volatility is still, in my opinion, possibly on its way. And that could give us that slight pullback we're looking for. The uncertainty of a president we've never had. She's never really been a well, she was a vice president. So it's like, you know what I mean? So I feel like that could still give us another pullback for Schwab. Like what I would do, like I'm not saying that this is okay because this is not a good situation here. I would dabble a little bit if I got back down to like $9 in Walgreens. I would dabble a little bit because 9 to 10, and there's a gap fill here. I'm not sure where. There's a gap. Where the hell's the gap at? Where did it go? Okay, maybe it was a different stock I was looking at. I would wait. I would wait for Schwab. I think you get a better price. That's what I'm saying. All right. If you want to buy it, be okay with a pullback. You might buy it, and this thing head back down towards the low 70s to high 60s. All right. Go listen to their earnings call. Maybe we'll play it today. If you guys want to listen to it, we'll listen to their earnings call and see what they're saying. We'll do that around 11, 12 o'clock at lunchtime. We'll see the market reaction. For now, it's just hanging out here, and I think you are coming up into a little bit of resistance up here at 74. I'm sorry, 75. So I feel like we could get a pullback. I feel like we could start to get a pullback. If we don't, we don't. But here's the thing, right? Here's the thing. At the end of the day, this has been an underperformer. And this is the first earnings, in my opinion, where Charles Schwab is starting to turn the tide back around. Okay? So I feel like there's going to be time from now until the next earnings. In between here to another 3 to 4 months, we should have a pullback that should be able to give us a good price. There should be a pullback in there for whatever reason, and we'll take advantage of it. Me personally, I'm keeping it on the whiteboard. It's there. If I get a pullback and I get an entry, because I want to buy this correctly. I don't want to buy it and immediately be red. Like, I'm not trying to be perfect, but it's already up. Let some people that have been in this thing from $60, let them step up $15 from 60 and start taking some profits. They're up 20, 30% on that position. Let them take some profits. If we get the pullback, I'll be a buyer. If you want to buy it, I mean, the earnings speaks for itself. Listen to the earnings call today. It should be coming up at any minute around the bell. All right, I got to hurry up. 9 o'clock. Let's get into it. All right, so yesterday, SMCI. I took a long on SMCI in the morning. All right, it did not hold the 50-day. SMCI. All right, so what I want to see here and keep my eyes on is this is consolidating for right now. Hold on one second here. Let me go back to that Schwab, which, because wait, Etsy wasn't on here earlier. So Etsy tumbled more than 5% after that downgrade. Okay, so the company surged more than 7% after the third quarter beat analyst expectations. Charles Schwab reported 77 cents in earnings per share, excluding one-time items. I got to see what that is, guys. On $4.8 billion in revenue, analysts had estimated 75 cents per earnings and a revenue of 4.7. So they just barely beat. Not barely, but that is, do the math on that, 4.78. What's the percentage on 4.78 and 4.85 on their revenue? And then a 75 cent per share estimate to 77. I don't know what the percentage on that is. Maybe like that would be, we'll just say 8% in, so quarter over quarter. you know, that's a pretty nice growth rate. You know, I would just have to do the work on that. It is what it is. You know, they're doing better than expected. You go see what their guidance is. Division report record year-to-date inflows. Revenue grew 5% from prior quarter on sustained investor engagement. The company Wealth Advisor Division reported record year-to-date inflows. That's good. All right, so they're collecting more and more businesses for 401ks as well. So keep it, you know, we'll do our work on that today. Remind me, please, if you guys are around, send me a message on here. Go back over Schwab if for some reason I forget it. All right, SMC to the I. All right, so this was yesterday's trade. We took a small long on this. I got lucky because I put in like a 20, like I didn't know it. The options traded in 5-cent increments since this inception of the 10-to-1 share split. So I got kind of lucky because when I submitted my order, it pulled back and it never held the 50-day. So I was able to get it pretty much 10%, you know, about 12% cheaper. I could have gotten it 20% cheaper if I was even a little more patient, but that's okay. I'm not going to be perfect. I'm a human. And I'm a not perfect human as it is. All right, so we run to the 50-day. This thing is trying to, in my opinion, put in a base here. We're stuck between the 50, 20-day moving average. You know, we're not too oversold. You know, we have more sell side volume than we do buy side. And what I'm doing right now is I'm adding up everything that I see. All right. I'm kind of curious if we're going to run a test back down to the trade line here at $46. You tested it yesterday to an extent. I don't like that we got above and could not hold that 50-day. We got above and we could not hold it. So let me make sure I'm seeing. So you have some support here at 46. Right now we're trading at 47. This thing is sideways. The options traded pretty nicely. So I'm more than likely. Let me just look at this real quick. You know, I think if we, let me use this. I might, if we can get it. I doubt we will. Damn, I want short-term time frames to be overbought. Please, please. They're not. I was hoping with that bounce they were overbought because then we could get like a nice another little pullback down here. Watch yesterday's low. All right, so I almost went short this as well. So let me pull this up. So this is our range. So we have a range here. Pullbacks into 46, into this 46 zone. I'm a buyer, and up at the 50-day, I'm short, okay, until it proves to me otherwise. We did have a little bit of volume that came in yesterday. This volume was pretty nice to the buy side. It was mixed throughout the day and Friday. If you start adding it up, right? So that's a break above, a fail to hold, a break above, or it went to it. It never really got above it. Maybe it did a little bit. I'd have to look at the daily chart. So fail. So look, fail, 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 fail. So what does that mean? People are going to start to give up. Usually after the 4th, 5th try, if you ain't doing nothing, we are putting in higher lows. So let's see if this 47 holds today or pre-market. I'll probably use this 47 mark on SMCI as a possible short entry, which would be yesterday's rate. Let me see this. I'm going to be patient because I still think this is range bound. I'm not going to force this. All right, let's go to stocks that are trending. My opinion is trade the range. All right, if I feel like if we run a test back up into that zone around 48, maybe you get another fail, or maybe if you get the opportunity, this is a good opportunity here to possibly, man, look at that volume yesterday with that sell side volume. I'm going to scratch this one off the list, guys. There's no trade here for me. Unless we get up to like 47.50 or so and we can get a rejection up there, I just don't see you know, 47.50 to 48 shorts and see if you can get that. See, that's so, oh, that's why. That's a 15-minute chart, not a 5-minute chart. All right, that's where I was going wrong. All right. If you guys have stocks or any tickers, please throw them in the chat. It feels like we're going to start to roll over here. It does. The best thing, in my opinion, would be like, the reason I say 47.50 to 48 is because if we can get short there and maybe go out 2 weeks, we don't have to wait very long. You'll probably have people waiting for the break of 46, okay? And what happens is, all right, if you're new here, this is what I like to do. You have to figure out what it is you like to do or how you like to trade. But I like to pay less to make more, and I like to pay less to lose less. I don't want to pay more to lose. I don't want to pay more to make less, if that makes any sense. And I don't want to pay more to technically lose more. So if I get the opportunity, okay, if we get the opportunity, this little support, it's like there's a little support zone and resistance zone up here at 47.50. I think this thing's going to be range bound. I do. I feel like there could be a pullback incoming. I don't know if that would be off of ASML and TSM earnings. And maybe this could start to, either it's going to start trying to run up in front of these first few semiconductor earnings, or it's just going to consolidate. I feel like I might be trying too much here. I'm going to scratch this off the list, but if you see we struggle at 47.50, guys, 47.50 to 48, which is where that 50-day is, you could probably look for a short there. If you like this for a short, I think that's the area to take it, up in this zone up here. Maybe you get 49, but this could be a nice trade, guys. From 49, and you get the break of 46. You already got the break of 46. Take that to 44. That's a 10% move in the stock. You know, not saying it's going to do it in one day, but this is pretty much what I'm watching for right here. Would be this zone, right? Get short between 47.50 to 49. All right, and I'm looking to take this down there because you're trading in this zone right now, right? You're trading in that zone, and let's see if we can break it down to the next zone, which the bottom of that would be like right there. It would be like right there. So the move, in my opinion, if you don't break above that 50-day, is to look for a possible short up there. And it could take some time. Maybe we look at this as a swing trade. It's just an idea, guys. It's just an idea. I like the way the options traded. All right. Enough is enough. Enough is enough. We do have a wedge forming. We do have a wedge forming here to an extent. All right, there is a wedge. All right, you do have a bit of a wedge forming here. It's kind of not. It's not a good wedge at all whatsoever. Maybe it is. I don't know. It's not too bad of a wedge. I just don't like that there's, like, you're not connecting points on that. All right, enough of that. All right, crypto. Let's go look at Bitcoin. Give me a sec. Let's keep Wolf on here. Let's keep Wolf. What is, does anyone know what the, float is on Wolf? Alright, let me fix my stuff here, guys. Alright. I gotta focus. I gotta come up with a nice trade today and this week. It's time to take advantage of everything. Time, access, boom, boom. Okay. You know what? I might be right on this. I might be right, depending on where we open up at today on this. turn that into support again.
So you can say, I mean, no, I'm not kidding. Most people are not creative. Most people are what, right brain?
Okay. And listen, if you guys have any ideas, please throw them down below. We have 20 minutes. If you guys have any, like, if you guys see anything like semiconductors, anything that you guys see that is, you know, has volume, trending, news, volume because of news, things of the sort. Let me see here. I gotta fix my charts. I do apologize. I gotta figure out how I can be better utilized with my time going through the watch list and stuff.
We're going to talk more about what we heard from Adobe and Micron last night. Some of the other big movers today, though, include J&J and UNH. Joe Wolk was on Squawk today. They do trim the guide, but that's largely due to this V-Wave deal.
Oh, fuck. Come on.
I want to take the other side of the sellers. I'll tell you that. The cancer franchise.
All right. Up. Boom. Oh, that's why.
Flowers to death sentence. No more. Now you have a tremendous level of survival from their bladder drug. Spravato, which is their finally, for people who feel like there's nothing with it. It's worth up to 5%. And against that is MedTech, because they had a Korean doctor strike, and Japan's weaker in China. So you can sell that stuff all you want down there, but remember that right now you're about to get a huge win in tax.
SGD, guys. Sorry, I was a little bit late on this. This one's starting to go. I don't know if there's any news on this. State premium shares are trading higher after the company announced that all site work has been completed for the first phase of its sugar phase. What? In South? Okay. Safe and green. Okay, cool. Okay. ENPH. Alright, so ENPH is down a little bit here. So you can see Monday's low. And you have previous lows down here at 99. Enphase had a downgrade today from Goldman Sachs from a perform or outperform to perform.
That was starting in sort of 23. They kind of redetermined who was eligible for Medicaid. And I guess one of the questions here...
That's a double top. Pretty clear double top. You have some massive support here. There's a lot of support down in this area from 98, 9... What's going on? Damn, this thing has just gotten demolished. I don't understand. $104, $110, $104. And it looks like we're attempting to possibly reject it. Just a little bit here. You know, I think you play the range, guys, until something changes. Alright, you put in a low here. You're not, you know, buyers are not stepping up to buy this thing, I'll tell you that. I will tell you that. Look at the volume here. We'll see what it looks like after today, the volume. Donald Trump's stock would be running from now to the election. Well, yeah. Do you remember a couple weeks ago we talked about that and we timed it right into like the beginning of November? Remember, it was on the pre-market last week. We timed it out between all the moving averages and stuff. It's kind of ran a lot further and quicker than to be expected. I've been waiting for a pullback in this thing, and I just don't get it. Not that I'm fighting the long side either. Let's have a look here. Let's do some analysis on DJT. This is one of the top stocks that's trending. All right, so for anybody that's just joined us, again, please hit the like button, subscribe. We're trying to get to 10 likes today. And if you're not a subscriber, subscribe so you can be a part of the cash giveaway. All right, so we just got the daily chart to be oversold. MACD just going positive. Let's see if we can flatten that MACD out. Got some massive volume yesterday. Some people are getting squeezed here, baby. Just like last week. Remember last week when I told you guys, let's look for a low volume pullback hold of the 50-day. All right, that's exactly what happened. And the low of that candle, if you were to have bought that and just waited till a day or two later, bink, bow, boom. Okay, even just the next day, right? Even just that close. So what are we going to do today? We had this massive support zone. We're a little bit overdone. I think this is more so a major level than this little pivot high right here. Between 29.85, call it 30. Between 30, I want to see us put in a low volume pullback
Verizon ticker VZ.
to hold 30 and or the 20-day or 100-day moving average. See that blue line right there? That blue box? Let's see if we can get an inside-out day, unless sellers really start to step up. All right, just something like this, okay? All right, let's look for something like this today. Same thing as last week. All right, let's look for something kind of like this. You have a tail, and you have a tail, right? Something like that. All right, so let's look for a day where you just get like a little inside out day, kind of like here, 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 here. Maybe it's small and you get two of them. I'm not sure. This is going to make some noise now that it's up above 30, guys. I'm going to tell you that right now. You cleared 30. It's on. It's on. Target's got to be up here at the 200-day at $35. So any pullback lows that can be bought, you know, you got to understand, you're technically buying the highs now. You did gap up, which is kind of a good thing, because any pullbacks are going to pull you into prior day's close, prior day's VWAP, prior day's trade line on multiple time frames. So that's a good look in a way. And that's what I'm going to look for. Like you guys, you know, sure, you're underneath that trade line now, but look at the trade line from yesterday. It's going to come in, and depending on where you are, it's going to be right there. And where's that at? Right with prior day's high. So we look for that pullback, and we look for that at least run the test to retest prior highs up there at 34.35 with prior day's trade line. That's a 15-minute chart I'm using. Let's all notice the sell side. Look at the volume this morning. So this is going to be at the top of the list. Look at the volume. Some pretty serious volume this morning, which is which is pretty obvious, but it's neither here nor there. Why does this keep moving? God, bro, I swear to God, this thing. All right. Any bounce backs? I'm looking to get short and see if we can get a pullback. All right, but I need that up here. I don't know if I'm necessarily going to take the long. All right, what else do we have here? Let's go. I can't believe it's already 9:20. I'm such an idiot, man. Goldman Sachs, it ran. Bank of America. I don't know why Bank of America was doing what it was doing. I don't know if it's just because of... So shares moved 1% higher after the third. Okay, so they did report and topped estimates. Earnings came in at 81 cents, beating the 77 cent. That's a nice beat. That's a beautiful beat. Revenue was 25 billion versus 25.3. That's a problem. I mean, it's good that the EPS was, where it was at, or at least their earnings, but they need to figure out, is it because they're not laying people off, or they're like spending too much money? Like they're making money, and they're making more than a decent amount more than expected, but why isn't that showing from revenue? Their expense costs. So What do I do here? What do we do? 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 Full speed still chilling and climbing. Let's look at Tesla real quick. I was actually... Oh, look at Apple. I was actually going to go long Tesla yesterday, but I decided to be a little patient on that. Apple is... Is that a new high for Apple? I'm not sure, but I have a feeling that's a new high. And
Less
people...
than 10 minutes to the U.S. markets open.
You know, you have to remember, we had the ties to the India market with Apple, guys. They're tapping into a new country, so there's going to be a whole new set of revenue growth. All right, you're pulling back off that gap. Here's a gap right there. There's your gap. Oh, wait, it's starting to hold it. Nah, I still think it's going to reject it. Let's see. It's holding it. So you're deciding right now, what's it going to be? I'm trying to think of some of the names from yesterday. Let's go look at Bitcoin. If you guys have tickers, please throw them in the chat. It's good to see everybody. I hope you're doing well. If you're not doing well, talk to me. What's going on? Talk to the chat. Let's all get us through it. Let's you know. Let's work together to accomplish the goal, and whatever that goal is for yourself. Let's see here. So Bitcoin is just hanging out, right? I'm surprised you haven't pulled away from 66. That's actually surprising, if you want me to be honest. It's really surprising. We did not pull away from it from yesterday to today. Oh, Marvell. Why is it up? All right, guys, we got to watch Marvell because they're talking about it on CNBC. Okay, so there's our trend line. Toot, 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 toot.
That makes it so that he has the correct infrastructure in the data center. The optic infrastructure. Don't know.
Mara's moving.
He also has other stuff, PC, hunt turning, telco turning. I think, David, when you have a guy, other than the guy who bought $100 million Southwest, we never talked about that. No. You're the guy in the open market, a tech company buying $1 million.
Look at Marvell, guys. Marvell's screaming right now. What's that mean for... He had them on his show last night.
So I am flagging a open market buy of an executive I've known for many, many years who is incredibly smart. And he has the optic portion of video for all the stuff we talked about.
They sell them to the data center.
Yeah.
Obviously, along with NVIDIA, and they are compatible with and help.
Exactly.
I hate when it has this like Sunday night because it makes the chart so... You know what I mean. Alright. QQQ. That's a nice pullback, guys, on Amazon. I mean, it did reject once again that 190, but I think that's, look at that. That's a double top. Double top at the highs. You pulled back. Does it hold 187 to try to break through 190? That's a possibility for Amazon. I know some of you guys weren't expecting me to bring that one back up. But let's go. Some of these names need to get going and get back to highs. AMD. All right, so yesterday we called out the 168 to 170 short on AMD. Congratulations today. If you're still in that trade, you are in the money for those 165, 164 puts. And you're below 164. Look at that. So look, AMD. If there's any type of weakness, I feel like this could be a nice trade here, even again today. Pops into 165. Hold on, there's some news coming out, so I wonder if that's going to affect.
Expects net interest income to be roughly flat in Q4, excluding markets.
Oh my God, come on, bro.
Says bank reviewing agreements in retail card partnerships to ensure profitability. CFO says share buybacks will be considered quarterly given upcoming events.
Snowflake, I should have bought yesterday. Oh, we might get another opportunity there.
Group CFO speaking on the
All
conference
right.
call.
All right. It's all good. So look, Snowflake, AMD. I have a long and a short idea. If you look, I'll show you guys really quickly. All right. Just give me uno momento, please. Uno momento. Uno momentos for my breath. No, I'm just playing. I brush my teeth all the time. All right. So AMD. You have a pivot high. This is a nice rejection level that you have here. Every other time you got here, you sold it off. It's already down a little bit. So I'm going to watch. Let me pull up the 4 hour. Let me make sure. Let me double, triple the check. Yeah, guys. I think that's it. And look, we had that perfect opportunity yesterday at 168 to 169. This zone, you guys can see it from over here to the top left. Look, and we gave out this short idea yesterday. I still think there's a little bit of room here. All right, I still think there's a little room. The target has to be 160 to 157.50. Okay. That's got to be the target. They're going to take it away from us. So we'll have to look for a possible bounce back there. That would be the target zone we're looking for if you decide to take it. That sucks. Oh my gosh, I don't have all the time in the world here. I'm just going to go through the day and figure it all out as I go, guys. Alright, the QQQ just broke. It failed to hold. It failed to hold, guys. It can still hold. It hasn't really broke down just yet. But let's keep an eye on Baba Snowflake. Alright. Oh, damn. Look, that's right. They had a bad down day yesterday. William Shatner. 1 minute. Okay, so AMD. I'm going to watch prior day's close, prior day's low on that. Oh, look here, guys. So this is what I was wanting to look at was the daily chart. You have some nice support there at 160. You're going to be coming into the 20 and 200-day moving average at 162. So I would not even worry. You'll probably get a bounce. Off of 162, guys. All right. What am I doing? All right, guys. Let me turn this down. The bell is going to ring. DJT. Let's see if we can get a pop on DJT here. Good luck today, everybody. Sorry that I was on a little late and not as prepared as I wanted to be. We're going to have a great day, though. It's going to break. You turd burglar. Pop. See? I know it. It broke it. All right. Pre-market lows. $32 bounce back into 32 rejections. Possible short entry. It's good to see her, but I hope everybody is doing well. I hope everybody is in good health, good hands. The motherfucker is yelling over the mic, bro. Tell him to calm his tits. I forget the number. Do you guys remember the number? Oh, that was for Wolf Speed anyway. It wasn't for DJT. Dude, what is going on? My shit keeps spamming, you guys. Dude, this thing is going nuts.
I got it.
Mongo must be. I don't know.
Mongo's not an animal. Mongo's a person. He was in Blazing Saddles.
Oh, you think that's what it's a reference to? Really?
Dude, what the fuck is going on, guys? I'm sorry, just hold on once.
Price offers having a move here. And I keep coming back to sales.
Look.
Because of agent force, because of Jensen, because of NVIDIA. You can't tell the difference other than the agent's not surly.
Alright, so it's running up to 35.
The story developing to a certain extent here on those UNH numbers. We did see them. Obviously, we talked
Alright, it's pushing into the 200-day.
we're monitoring the call.
DJT is pushing to its 200-day moving average. Push, baby, push. You guys will see up here as well, this 35 zone is your resistance. I want to look for entries for a pullback up there. That is a pretty mean wall that we have here, though.
Worries about utilization, as you might expect, sort of exiting this year in a more challenging 2025. Why? Well, because of UNH and what they're seeing there. Again, want to get more
I'm going to scan the markets. I'm just going to save my charts really quickly. I'm going to save my charts. There's our pullback to the trade line. Alright, time access. Keep time zoomed in. Apply, apply, okay.
over any period of time. And you can see the plan now. 1,200 stores. They start 500. It is getting a real boost here in the marketplace as a result of this plan. They have a huge loss. Now, a lot of that is due to write-downs, non-cash impairment related to the Village MD acquisition.
GS Goldman Sachs CEO David Solomon on analyst calls they see significant pent-up
Made
demand
a
from
$5.2
clients.
billion investment in Village MD.
I might need a little more time with this.
4 years ago,
Says deal backlog rose.
That's a new land speed record.
Look at that. That's wild, bro. What a shake and bake. What a shake and bake.
but a hit of 5.8 billion on something that
Shares
they
of
invested
Goldman Sachs
5.2
pulling
billion.
back after the open. Now
That
at
doesn't read well.
It's just wild.
Finally doing his magic. I think he's remarkable, Midco. But I would say, David, the 1,200 stores, he's doing the Karen Lynch playbook. Remember, Karen Lynch, who runs CVS, decided no more stores that lose money, and that's where I think he's going. In the meantime, Amazon is the one that is the great destroyer of wealth of the pharmacists.
As we've discussed. And yeah, so again, 1,200 closures. That's over the next 3 years, but they do start off in fiscal year 25.
God damn, look at the sink. That thing is gunning for that downside, you guys, on DJT. Alright, I'm done with these charts. Alright, I'm done. Alright, let's see what happens here. We should get a bounce back off of prior day's close. You should get somewhat of a bounce back.
In fiscal year 2025, adjusted EPS of $1.40 to $1.80. So if you want to figure out your multiples, now that is an adjusted number. So we'll keep an eye on the healthcare.
GS Goldman Sachs CEO.
GS Goldman Sachs. Like, dude. Snowflake. Snowflake is trying to find some support here. Snowflake is going to be a swing trade. Dude, what? I can't auto zoom. Of course I can't. What the fuck is this guy? Excuse my language, guys. I'm sorry. I just don't know what the hell this guy is doing. Or what's going on with his, or what's going on with his mic. I'm gonna have to go grab some crackers real quick for my cracker ass. Alright, so Snowflake. Look here at this daily chart, and I still didn't show you guys. Let's go here. Let's go here. Snowflake. And I'm going to move on to stocks that are trending after this. But look at this. I want you guys to see it because I feel like it's important. Look at this. Look at this zone here. Look at this pullback. You guys see this support zone here? Bang, bang. No, it might be hard. Let me zoom in a little bit. You guys see that? Look at that support. Boom, 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 boom. All right, and then here, bang. Hit it there. You get above it. Look, we pulled right into it. What else do we have coming up? Your trade line. Let's look for dip buys up off of this area. You know, I was hopefully trying to get 115, but I'm looking to continue. I'm looking to try to get this to continue. Yesterday was a low volume pullback, so keep an eye on snow to the flake. Okay? Snow to the flake. Walgreens boots. Look at Walgreens is flying, guys. I knew it. Damn it. This thing's flying right now. WBA flying off the rails. Oh, never mind. I don't know what the heck that was. Oh, a 30-minute chart. That's okay.
Real progress being made on that potential transaction that was reported some time ago. At least the conversation certainly took place, but it wasn't made up. It was not made up. No, it wasn't made up. At the same time, it's not something that is moving quickly to fruition. And I will make the point again, if in fact there ever were to be that, Broadcom would absolutely want in as well, as what I understand.
Hopkins ready to do another deal. Hopkins broke on that company. People gave us usually find
That sucks.
PHUN, Funware shares.
SCHW, guys, what did we say? Look, that's a break, a retest of that prior support zone. Schwab. I had a good feeling that we'd be able to get a better price on that.
stock is still a stock to buy even up here.
While we're in the neighborhood, Commerce signing a preliminary memo on Wolfspeed funding, and another $750 million with an Apollo-led group that would build some in North Carolina and New York.
DJT's a killer. Oh, man.
There's just so, I hope we have enough workers to do all this stuff. I mean, we need robots.
DJT is taking them to the slaughterhouse, guys. Holy cow.
Well, we have a presidential candidate who conceivably is going to be deporting a lot of people.
I'm going to grab some crackers. I'll be right back. I'm going to keep DJT up. There's Schwab. There's the Qs.
And then you wanted to be able to say that you raised more money.
DJT Trump media shares up
And you
about.
were allowed to do, the board let you do some sort of shelf.
The Qs are struggling a bit here. Watch the Dow and IWM for you know, guidance. If they're already heading to the downside, then the Qs and SPY are right there to follow.
That's true. Well, for sure, to your point. And the stock continues to move up with the betting odds that Trump will be victorious in the upcoming election.
It's not an earnings story.
No, it's an election story. It moves with the likelihood of a Trump victory. Back to which I said, you talk about a shortage of labor. If former President Trump gets reelected, he has a plan. He talks about it all the time. I mean, we have a lot of illegal immigrants, and he wants to deport a lot of them. Do they have jobs? Will that impact the labor force?
David, there's a periodically I ride the subway. When you look down the subway, there's this rail. It's not a good rail. And I'm not about to throw myself on that rail for you.
Second, just asking you a question.
I'm not going to throw myself on that rail because you know what? I value
I
my
have to say one thing.
livelihood.
I have to say one thing. Just like the tariffs, they're lying about the man again. He doesn't want to just deport every single one of them. He wants to deport the ones that have broken the law and are acting like piece of shits. That don't have respect to be here. He has already said his stance on this shit. And they continuously lie to people. And that's why he has such a bad name, is because a news station on national television has no, like, just no sense of just keeping their own opinion out of it. He's not just deporting everyone. He's deporting the ones that have acted like dirtbags. So, I mean, he's been really clear. But apparently, I guess, not clear enough for them to continue to say dumb shit like that. Alright, so let's go look. Don't worry, I'm not going into it. You guys don't have to. You guys don't have to hear me aimlessly go after. All right, so these are the trending ones. Drug has been another one that's kind of been going and trying, you know, with the small cap world. Let's see here. Just looking through the scanner. I feel like Apple's running the show here. Watch Charles Schwab. If you guys can hear me chew, let me know. Because I don't want to be chewing on here. And Apple's gone, guys. Look at the volume, too. It's breaking out on really nice volume.
We do have some media news.
DRUG.
Warner's gonna expand Max to some South
Bright
Asian
Lines shares
countries.
posted at the
Taiwan,
highs
Hong
on a
Kong next
circuit
month.
breaker.
Netflix, of course, is
That's
coming
Delta
this
Romeo
week.
Uniform
Avi
Golf,
yesterday says,
DRUG.
look out for a price hike. It's been a couple of years.
Thursday, I'm telling you, the analysts are just going to go nuts. I mean, they just can't seem to. Every day a new one comes out and says good things. I wonder whether Apple will finally address Apple Plus on their conference call. They just won't do it.
Look, I'm sitting here clicking on it, and it's not.
David hasn't expressed enthusiasm as of yet.
I have actually become a much more frequent user of Apple Plus.
You know
It's years ago that I did question them, but slow horses is
You know what we
great.
call you? Do you know what we call you in our office? Jackson Land.
The Stark line is the 20-day, you guys. Okay?
I'm River Park, right?
It'll be your 20-day moving average. Just so we can see it, because if it's too bright, you're not going to be able to see the candle.
I mean, and to a cell, and I don't even know how to put it out of its misery. Brooklyn zone
This is a resistance zone up here
is not good.
on Amazon.
Obviously, it would be difficult to
Up here at 190.
those of us who use it, we just kind of hope for the best here at this point. It's really
Oh my God.
incredible because they can't seem to do it. They can't seem to get the margins right. Josh Silverman used to be a former growth stock and sells 12 times earnings. Wow, that was bad down there.
Guys, we went through a lot of the financials at the very top.
I'm trying to look. I'm trying to find some winners.
At this point are quite
MRVL. Alright, so that's up at resistance. Look, we already had the trend line there for whatever reason.
Leslie Picker will join us at some point.
I'm still worried about that tangible book
Citi
value.
did also report stocks down almost
The
2%.
tangible book value. Now, David, did you see the Citi tangible book value is $89.06. In other words, you close the bank, it's supposed to be $89 there. David, I need that explained to me. No one has ever. My quarterback could not explain to me.
SGD, safe and green.
Oh my God.
Development shares resumed trading after a circuit breaker on the way down. $5.50. That's Sandy Gulf Delta.
I mean, it just
SIDU side of space plans public offering of up to 3.75 million shares.
Space. This had news. I thought this had news.
pivotal year. This quarter contains multiple proof points that we are moving in the right direction and that our strategy is gaining traction. She says, including positive operating leverage for each of their businesses.
That's crazy.
That said, as you see, the stock is
I wonder if this is a dip buy, but not until it starts to like. This is ridiculous. This is why it's hard to invest into Chinese names. You know? Like, think about that. You're talking nearly 120, 118 down to 100, just like that. The second you give them money, they fucking take it. Like,
But the story in banking today, Carl, as you well know, is that Charlie Sharp is going to be on Mad Money.
and I don't even think that's a support zone here. This line I have here, yeah, sure, it's a bit of a resistance area. We'll see if it can hold. I don't have much faith in it that it's going to. So, I wish you guys the best of luck on this. For anybody that, you know, is in it. I mean, for anybody that is, I wish them the best of luck. But I need more proof. All right, Tesla. Tesla. This is nice. It's a nice little setup here, in my opinion. Yesterday, kind of flat. We had a nice rip off the bell here. My options chain might be a little different because yesterday's close, I kind of messed everything up, unfortunately. So I do apologize.
We discussed this yesterday, the fact that the robots at the big event, the robo-taxi event, some of them were human controlled, at least to some extent. As oppressive as they are. That happened previously as well when I unknowingly showed a video some time back of Optimus doing something with an egg, I think, and it was actually controlled by a robot.
220 hold. Watch 220, guys. I'm keeping my eye on 220. Okay, I'm keeping my eye on 220.
It's a key component of the investment theme that Musk is stressing there in terms of, saying these will be on the market in the not too distant future, what, $20,000 to $30,000 a piece?
Well, Jensen was talking about everyone having a robot. I would love a robot.
What would you have it do?
I don't know, there's this new rotisserie chicken down the block. They have chicken.
So food
Or you could get down on Pine
Beer
Street.
run?
I don't want to go there. Robot.
You see a robot trying to navigate the streets of New York City. That thing is not making it too
I probably should have just went short at the 50-day. I didn't really watch Tesla, though, to be able to do it. Hopefully I'm not doing myself a disservice here. Because I had to give Tesla a break, and the minute I gave Tesla a break because I wasn't doing well with her, she started rallying while I was trying to go long the whole time. And the minute I stop, it's like, yeah, it's time to go. Oh, fuck.
Back to work today after the holiday. Empire was fairly weak, the worst since May. We'll keep an eye on the 10-year, which was about 406.
So you have a major support level here at 240. You broke that. You kind of tested it. So, I think I got to target $30. You have a range here. You got to get above the 50 and 225 area. So those are the levels I'd watch. Okay, even though you broke below the support zone at 225, obviously look for the rejection there. And your next, in my opinion, your next area would be the support zone at 220. You break 220, then you start to move down to 210. That's when it gets fun. If that made any sense to you guys. The problem with 225 is you have that 50-day up here. So if we start to notice a double top up here, see, I knew it, man. Oh my gosh! Come on, put in a lower high. It's not going to. Fuck, I missed it. Brutal. Drug is going right now, you guys. Just so everybody is aware. Drug is on its way. It's just going off on the scanners, you guys. It's way above the 50, 200 day. It's way above all that nonsense. It's above $4. And that's your resistance. All right, it's $4. The next level on drug is 6.
days, emergency care, and more. You can keep the doctors
Riot's making a new high,
you know and trust, with no referrals needed.
flirting with the 100-day and this major support zone right here. Bang.
You get a competitive monthly premium and personalized service from a healthcare partner working to make healthcare simpler and easier for you. You can choose from a wide range of standardized plans. Each one is designed to work.
I would look for a move to about $10.
So how do you find
On Riot. Not today, but
your needs and your budget?
in my opinion, if it's going to do anything
Number on your screen.
over the course of a couple weeks or so.
It's just one of the ways that Humana is making healthcare simpler.
All right, looks like you're above the 50-day or the 100-day on Riot.
Questions you have and help you choose the plan that's right for you. The call is free and there's no obligation. You know Medicare won't cover all your medical costs, so call now and see why a Medicare supplement plan from a company like Humana.
So how's everybody doing this morning? What was the stock I just talked about? Tesla? I'm going to put up the four ways. Hold on.
Election night 3 weeks away, and we want to invite you to spend it with us. We're going to be right here.
Schwab is still struggling.
Numbers as they come in. Look ahead to see what it means for your business, your taxes, the stock market, and all
Schwab is still struggling up there at 74.
on CNBC Live.
Oh, man.
Let's see. Up next, it's Stop Trading with Jim.
And there's the flip. There's the flip and rip. Watch if the IWM holds this level. It could be along there. From 222.50 to 223, it's about a 50-cent range. I'd be watching this zone for a hold, and I want to see this thing get off of that area and attempt to make a new high. If it does, it's got room over the course of a couple days or however long it takes. Let's see, that's an hourly chart going back up into resistance. You know, 225 would be the upside. We'll see here. Hold on. Is that a double top on Tesla?
Estimated at $3.8 billion in 2023, expected to grow to $6.3 billion by 2030. Now, Canfite, symbol CANF, a biotech company with
What's your guys' feedback? Let me know your guys' thoughts.
contract with Vet Biolix for an oral
Or some names you guys are watching. We're halfway there to the likes. I want to thank each and every one of you guys that did hit the like button and are a subscriber. I'll be excited. You know, I have a main list of people that I really probably, and it's just between us, but I mean, I might throw the people that show up and are commenting all the time. I'll probably throw them in 2 to 3 times more. 2 to 3 entries for the cash giveaway if we can, and we do get to 1,000 subscribers. Because I'm gonna hold it down. It's just, you know. So these are the 100. 18 October 20. Look at that spread. What's going on with Snowflake? It just went from 90 cents to $1.30. Oh my God. Oh, it's trying to break out. And nobody wants to pay up for it. They want to pay down. That's not good.
Come up, and then you would say lame or hung versus Apple, which is up 5. I think that my colleague David Faber gives me an IDC report about how Apple enjoyed a 3.5% year-over-year growth in shipments this quarter, fueled by strong demand from previous models and launch new iPhone 16 lineup. That's very contrary to what most of Wall Street's thinking.
So that's caught people short Apple.
Look, guys, it's just hitting our levels from this morning.
You might want to buy it ahead of tomorrow when I have
Just hitting our levels.
for our club, and I can't wait to be with you on election night, which is I've been covering elections since 1976. I find it to be the most exciting night ever. Every single time, they're just incredible. I remember when Mississippi put Jimmy Carter over the top.
You remember when Truman eked out that victory over Dewey?
Well, that was the Chicago Tribune.
You were there.
Called that way.
Yeah.
Did you call Van Buren? I think you were the
You did.
Oh, he was the master of Kinderhook, where David has a country house.
You used to play golf with Taft, didn't you? Yeah.
No, I actually.
So that's Thursday's high.
Which party tried to nominate Eisenhower? Both.
So tonight, big show.
Yeah, well, I had this, in Wells Fargo. Charlie Schreiber's never done an interview, so I think, where's the picture? There he is. And I've worked for 8 years for this.
GS Goldman CEO said still have work to do to improve margins for asset and wealth business. That's Dolph Sandy.
Jim, congratulations. Look forward to it.
GSK and mRNA GlaxoSmithKline.
All right, this thing's starting to attempt to make new lows, you guys, on SMCI. We're above, but we're right at yesterday's close.
There is a crisis for women and their families.
BA Boeing, S&P Global Ratings on Boeing says shelf filing is a step toward a widely anticipated capital raise, which we view as an important.
Developing a broad portfolio of products, patent protected, manufacturing our products right here in the United States. We are ready to address this significant market opportunity. With this investment, together we can make a difference. You can help us help women. Invest in the future. Invest in Femesis.
SoFi's still going, guys. What the hell is going on with SoFi? I know that they brought up that stuff, but dude, like, I don't understand. Google putting in some nice setups here.
Hi, I'm Jay Jackson. For almost 20 years, Abacus Life has been purchasing life
S&P
insurance
Global Ratings on
policies for
Boeing says
seniors.
supplemental
And in
credit
just
facility
seconds,
also
you can use the
sees
free calculator.
Schwab is pulling back. I feel like this could be a nice short, but it's hard when the market is strong like this. I mean, the SPY is sideways, but
resolution of the strike.
Don't sell and lapse your policy without going to abacusace.com first. There are no fees.
what I mean by that is the overall financial market and sector of the financial sector is had awesome earnings. So in a way, you're kind of fighting the trend.
Food is simple. It looks like food. It smells like food. It's what dogs are supposed to be eating. No living being should ever eat processed food for every single meal of their life.
It's amazing to me how many people write in about their dogs changing for the better. The farmer's dog is just our
Amazon is struggling.
I can't believe you corporate types are still calling each other rock stars.
You're a rock star.
We're all rock stars.
Microsoft just pulled back to this zone here at 420. This could be a nice little move from 420 to 425. Just figured I'd bring that up to your attention. You have a... Damn, that's such a weird looking chart. I have not seen anything like that in a while. But never mind.
Delivers the best videos of the day right to your inbox. Top stories, key highlights, hand selected daily by CNBC experts. Sign up now for free. Go to cnbc.com/spotlight.
For me, Stockmarket is breakfast with the most interesting people in the world.
It's a privilege to get to talk to them every day.
It's more entertaining than any
You guys remember what we talked about pre-market?
Squawk Box, weekday mornings, 6 a.m. Eastern.
Remember what we talked about pre-market? That 15-minute trade line coming up? To where?
Good Tuesday morning. Welcome to another hour of Squawk on the Street. I'm Sarah Eisen with Pearl Quintanilla and David Faber. Live as always
It's 10 o'clock.
from the New York Stock Exchange.
And I didn't look at oil either. This trade line coming up where?
But a big part of that story is the 10% drop in United Healthcare.
That's with whatchamacallit.
S&P 500 is actually little changed. If you look, just going inside the Dow, the UNH
MCN, Amazon, DSP announcing that
When you know it, what's it doing? You get this pullback.
unveil simplified product launch optimization and measurement.
That's going to start to raise that trend line up a little bit, depending on how it does it. Or if it just sits here and consolidates and just slow volume pullback.
Announced by telecom companies, it impacts on consumers and competition.
It's coming right up into that zone.
That's all helping the Nasdaq. Take a look at Treasuries. We reopened after yesterday's closing for Columbus Day holiday. The 10-year yield a little bit lower, under 4.1%. Remember, we've been worried about
TLT popping. We talked about going long here on TLT.
expectations of Fed cutting. The 2-year yield a little firmer at 3.9. And then energy as well in focus, of course, as always. With
Which I might.
a sharp move lower.
So if we get a pullback here
On WTI crude, Brent crude down
and we do test $94, I'll probably go ahead and take that, guys.
a number of healthcare names on the move on the back of earnings. So Dow members, United Health, as I mentioned, and also J&J among them.
I actually, it's kind of overdone.
The S&P 500 right now, while Walgreens is the biggest gainer on the S&P. And then CoverGirl parent Coty under pressure after a disappointing forecast there, and more results out of the.
All right, Tesla, what are you doing, bro?
Charles Schwab and Bank of America all reporting this morning. We're gonna break down.
What are you doing, Tesla? Like, what are we doing here?
Bank of America chairman and CEO.
It's two tails up there.
A little bit later this hour. As far as what's top of mind, though, in the macro setup today, we did get a Fed speaker that I always pay attention to, which is Fed Governor Waller, because he tends to be, sort of one of the leading thinkers on the Fed, and it particularly surprised me that he backed the double jumbo cut that we got at the last meeting. So here's what Waller is saying right now, and it's a little more Waller to me than a double cut. He says, while we do not want to overreact to this data or look through it, I view the totality of the data as saying monetary
Goldman
policy
CEO
should
said
proceed
the
with more
direction of travel at
caution
this point
on
is
the
back to
pace
the
of
core
rate
business.
cuts
That's
than
off
was
Sandy.
needed at the September meeting. What is this data he's referring to? Well, it's good data. It's the data we've gotten since the last Fed meeting, which on balance has been better. Upward revisions to growth, more job openings, better wage growth, lower unemployment rate. The chart today that I decided to highlight, guys, is the Citigroup economic surprise.
Why?
Index.
Okay.
So this shows where the data is coming in relative to where the economists expected it to come in. And you can see, when we're below that zero line, that was when we had the growth scare and when the data was getting worse and the Fed was gearing up to cut rates. But lately, it's really been on the upswing and it's climbed. And we'll watch it because there's a little bit of a tick down. New York manufacturing today, Empire activity was weak, but still, the data, Carl, has looked better. And now, Waller, I would say, didn't use the pause word like Bostic did. Instead,
I'm ashamed of myself.
or we need patience or anything like that, but does not sound overly exuberant when it comes to more rate cuts. So definitely don't expect the 50 again.
I'm ashamed of myself, man.
You mentioned some of the B of A numbers.
There's no reason why I shouldn't be on this trade with you guys from yesterday.
And on earnings calls, rail car loads.
There it is, guys. You got the trade 160.
Today, I don't know if you saw the fund manager survey this morning, if you built anything, but largest jump in investor sentiment since June of 2020.
Yeah, things are looking up. I mean, it wasn't supposed to be this way just after one little rate cut, right? And in this period of the cycle, what I pulled out was the spending number from Bank of America because we get a retail sales report next week, and we are in consumption this week. Sorry, and we get this is a consumer-led economy. So Bank of America says we expect a spike in retail sales in September. They looked at their credit card spending. It surged by 0.6% month over month in September on a seasonally adjusted basis. It was widespread. Gains in places that have been weak.
Is this a rejection from Monday's highs?
Blues card spending was sharply higher. So if we do get better retail sales later this week,
So not dissuaded by worries about the election.
Right there.
not yet.
That includes travel, by the way.
Falls is snacking.
It's snacking. Well, no,
Snacking in
Ed
airlines.
Bastion from Delta also said it, but I saw travel actually was up in those numbers.
Well, it's only
Potentially.
September, right? This is September spending. So I
It
don't
only
know.
starts when you get to middle of October.
Look, we'll see. We'll see if there's an impact on it, right? I mean, it could impact. It could be one of those things that impacts sentiment, not as much soft data, not as much hard data in terms of spending. Watch what they do, not what they say, when it comes to the
storm impacting That's actually, yeah, I saw this morning TSA checkpoints on negative year-on-year on a trailing 28-day basis.
AEPL,
So
Apple
that's
shares
interesting.
at
Some of the delays largely
237.49
might
now,
be due to the
about
storms.
2.5%.
Sure. I mean, that's going to be
That
an
is an
impact. Also,
all-time
the
high
Boeing
for
strike is going to be
Apple
an impact on the next
AEPL.
jobs report. We know that. So some of the data
There's
is going
got
to
to
be
be something I'm missing here, guys.
messy here. But as far as commentary, maybe
GS,
to your
Goldman
point, David,
Sachs,
not as
and GM.
optimistic as what's in
General
the hard
Motors, Goldman
data.
CFO
Here's
says deal to
Walgreens
transfer General Motors
CFO
credit card
on the
partnership will
conference
close in
call
Q3
talking
of
about a difficult
2025.
environment. The consumer backdrop
That's
remains
GM
a
and
quote
GS.
challenge. We see this with our consumer as sales pressure in the quarter was almost entirely driven by non-essential categories. Value-seeking behavior and new product launches during the year have driven our own brand penetration up 70 basis points in the quarter, finishing at over 17% of sales. And then Coty, the makeup, the makeup and makeup company, they own CoverGirl, Max Factor. They estimated same-store sales growth below the prior forecast because of a slowdown in the United States. They say while beauty remains resilient in many parts of the world, U.S. market growth has slowed.
AREB,
So
American
more caution a little
Rebel
bit
Holdings
from the
getting a pop here
commentary,
to
and
the
that
high.
some jives with what we
That's
got
Alfa Romeo
in
Echo
places
Bravo
like the Beige
AR.
Book, which the Fed pays really
EB
close attention
on
to, where they get anecdotes across the districts, and it has been relatively soft despite these numbers and this economic data, which continues to paint a picture of strength. It's a little confusing.
And we'll stay on top of it. Let's get to the banks now. Goldman Sachs, Bank of America, Citi, all moving in different directions after we got earnings from all three. Leslie Picker has been tracking all of them and been trying to go.
Leslie Picker knows.
In the moment as well, particularly Citi, Leslie, in terms of the weakness there, conceivably in the stock price. But I turn to you for some of the answers
From all three. Leslie Picker has been tracking all of them and been trying to go over.
Confused by the move, which kind of reversed course as the market opened there, because all three beat this morning, but a bit volatile, as I said, once the markets open. Once again, it was those fee-based divisions, investment banking, markets, and asset management that generated significant upside.
Damn, son, where'd you find that one?
All three firms showing investment banking fees up at least 18% the prior year, although those numbers
No way.
below kind of historical averages. Sales and trading were a bit mixed. Equities coming in stronger across the board, whereas fixed income, currencies, and commodities were comparing to a very strong 3Q of last year. So that was a bit mixed across the street. Goldman Sachs kicking off its earnings call a short while ago. CEO David Solomon saying the backdrop is conducive to its business of helping clients navigate risks and position for a range of outcomes.
As I look at the operating backdrop, the U.S.
I love it.
continues to be resilient. Inflation has been coming down. The recent unemployment data is supportive. And while we've seen some softness in consumer behavior, the tone of my recent conversations with clients has been quite constructive. The beginning of the rate cut cycle has renewed optimism for a soft landing, which should spur increased economic activity. More broadly, clients remain highly focused on the trajectory of rates in jurisdictions around the world, policy implications of global elections, particularly in the U.S., and the high levels of geopolitical instability.
On net interest income, there's a sense that despite the 50 basis point rate cut in September, that banks have been able to weather potential headwinds to that profitability metric for loan making quite well. Bank of America is saying on the call it's poised to improve with NII from here, reaffirming that the trough was in Q2 in the rearview mirror.
And that's the thing, to get back over to the launch pad, like, look how it's going over to the right.
I know. So have we cleared up any
It's massively fucking insane, man.
relationship between
It's so insane.
goes with where the Fed rate path goes? I don't know if we
Alright, anyway.
You recall from last week's reporters with Wells Fargo and JP Morgan that occupied a substantially outsized proportion of questioning on
Alright, so we got our short idea. Energy, XOM, CBX, Shell,
changes, and I think a lot of executives,
your oil and gas services,
and then that got changed.
healthcare,
Then there was the 50 basis point kind of
so it feels like some things are turning around, but others are holding up okay.
to really give some very clear predictions.
What is this little section? Gap. Okay, for close.
Clear correlation to kind of the rate path, Sarah. Okay, Leslie, we're going to talk more about this. Thank you very much. A lot more from banks and with bank executives.
Dude, how did Citi go red?
CEO and Chairman Brian Moynihan, he's going to be on this
Yo, Citi went red, you guys.
Charles Schwab
Dude, what the f is going on?
Money movers, that's an exclusive you do not want to miss with that stock of more than 6% on better results.
Meantime, the S&P notching its 46th record close this year.
And do you think CNBC is talking about it? So when the next time they come out with commercials, we want to help you make money. You would think that they would bring up, guys, Citi has went red.
Sentiment, all-time highs. People are looking for some strong retail sales numbers this week. Are you able to poke some holes in any of those things?
Well, I would say this much that, you know, if this was truly an earnings-driven rally,
Let's find out here what's going the heck on. What time is the earnings call? 10:15:24 at 10 a.m. Central Time. Okay. So 11 o'clock.
we've had a 4 multiple point expansion in the forward PE multiple just over the past 12 months. I mean, we're talking about a
That is seriously insane.
event. We've gone from 18 forward multiple a year ago to 22 right now. So that's
So how I would play Citi
it's earnings are still going up
is if we can get a bounce back to that zone and reject up there.
5-6% year over year.
Or technically, you can look at it two ways
34% over the past.
and watch that for support.
So the price action in the stock market has outpaced the actual earnings momentum.
I have a lot of levels
Followed by
for someone who hasn't really traded Citi.
when you look back at the data,
I can't even remember the last time I traded it.
it's a 1 in 10 event. That's what we're living in right now. A world that is extremely rare, but one where there is obviously tremendous exuberance, ebullience, and confidence, and that's what's driving the market higher.
If some of the activity comes in strong or continues to come in strong, do you think that hawks are deservedly worried about a repeat of inflation, or can you maintain your classic deflationary stance?
You know, the low 60s is where it would be headed if, you know, if it's going somewhere, it's going back down to $62 to $60. Like $62.
You also have to have a view on what the supply side of the economy is doing. But the longer the economy stays strong, and you know, I would question actually the veracity of a lot of the data that's been coming out. But if your view is that the economy is staying resilient or strong, you know, within a 5%
It's seriously insane.
policy rate world, then what it has the Fed thinking is where's neutral? And right now they think neutral collectively is 2 7/8. But what's going to happen is that the momentum is going to build at the neutral rate is probably quite a bit higher. Ergo, it's not so much about inflation; it's about that the Fed will not have to recalibrate
I'm going to sign up and get us the earnings call, just so everybody's aware.
that neutral rate would be higher. So I think that's the challenge that's going to happen
We're going to have that earnings right here.
Treasury market going forward. So it's really more the impact on the neutral rate than it is necessarily on where inflation is going to be going.
David, I highlighted the Citigroup economic surprises to show that basically since the growth scare in the summertime, it's been on an upswing and things are
Alright.
moving in better. And I wonder
Just so we're
what you
we're all clear. I'm going to have that
about
this earnings call.
this moment.
I don't know why I'm picking Citi, but it's going to they play a big role in the financial district, but or sector. I didn't mean to say district.
The consensus estimate. So it could well
All right, let's go here. Let's refresh.
at the same time, Sarah,
Trending,
what you get in time and
most active. WBA still one of the most actives. Trending.
as we're all waxing about
Let's go have a look
tables without any recognition
at old WBA.
going to look like. And over the past 12 months, the revisions have been squarely down 3/4 of the
All right, Tesla's back down to 220, you guys.
get a robust non-farm number 1 month, and then they
All right, let's see here.
1, 2, 3 months later, it's been revised sharply lower.
I'm kind of nervous. Not really. I'm just going to give it a shot.
GDP growth, as per the BLS data,
I don't like that the overall market is kind of down.
that's going into September, that 3/4 of the country was either in stagnation or contraction mode. And then I know that, you know, we're looking at monthly
Look, rejection. You're rejecting the trade line there. This might be it, guys.
you are, and I'm looking at it
Look at that 4-hour trade line in VWAP.
and the trend in retail sales volume
It's not good.
and
Hourly, we're holding.
in real inflation-adjusted
Okay.
core capital
Trying
stores
to.
and shipments on a 12-month trailing basis, they're all flat to negative. Now,
15. Come on, baby. You got to bounce off of here. You got to bounce off of here.
interview the government,
Come on.
private sector,
You have to get this thing going. If you want to change... Oh, my God. The 5 minute. 5 minutes going to reject 221.11. And if we go back to the 15 minute chart, 221.11. Oh, my gosh. It's good. Dude, the 5 minute chart's being real shady. I'm going to tell you all that right now. 5 minute chart is being real shady, and I don't like it. So, if you look here, look at the trade line. You're underneath of it short term. You need to recapture that. Because if this rejects, it's going to start pulling the 15, 30 minute hourly chart below all those, you know, intraday moving averages that you want to hold. So it's not a good look. It's not a good look. Ah, fuck it. Let's go for it. I like to take risk. Let's go. I still think this thing might sell off. What do we want to be in? What do we want to be in, Joe? Joey T. Best trader on the street. Where we want to be at? What option price? What time? What entry? Where are we buying this biddy at? Yes, I'm talking out of my ass. Today might be a nothing burger for me, guys. Or not until like later on. I'm just being honest here. I'm just being honest. Just being honest. I ain't listening to my boy Future in a little while. We might have to run up the old copyright while we trade. I'm just being honest. There it goes. Hallelujah. Fuck. Fuck ass. Fuck.
With gold and copper prices pushing towards all-time highs, U.S. Gold Corp offers investors leverage to both gold and copper.
Phone is beep. That's a double top if I ever seen one, guys. 220s holding. What's the target? 225, 230. 225, 225. I got a 225, 225. Can I get a 228? 228, 228. Go, what's going on? 228, 228, 50, 228, 50. 230. Sold. Damn, look at that rip, guys. Fuck, I told you. 230 was sold. That was a mean run. Unless my computer's lagging or something, which could be the case. Oh my gosh. For anybody out there, congratulations. You guys took this. Let's see here. Just give me 1 second. Just give me 1 second here. I'm trying. Where's the overall markets at again? So we're starting to pull back. The Qs are just starting to pull back.
Welcome back to Squawk on the Street. Boeing's making some big moves to strengthen its financials. Shares are sitting down more than 40% on the
Walgreens Boots Alliance, man. This thing's going bananas. which I'm not getting off of Tesla right now, but
First of all, the company announcing it has essentially opened a $10 billion
Boeing still below 150.
They haven't tapped that credit line yet. The other move that Boeing
Got above it, failed to hold it.
shelf registration
Baba, Baba, Baba,
3 years to use
BA,
this
Baba,
as the vehicle
Neo,
saying, look, we may raise
garbage.
we may raise debt.
Why do I have an hourly chart on the QQQ?
So that when they decide to tap either of these, they'll be able to move as quickly as they deem necessary. So what they want to do here is to have the means in place in order to come up with the money to help out their liquidity. And when you look at their liquidity, they ended the second quarter with $12.6 billion.
Dude, this is wild, bro.
Most believe they're now down closer to $9.5 billion. They don't want to go much below
I'm just
that
looking at the
right now.
wrong
We've
things.
always said that's sort of the bottom as far as the
Like, Thinkorswim is so... Just the platform sucks. The IWM's running, guys. Alright, names like MSTR maybe. Nope, that thing's down again. We talked about getting short that, and then look what happened. Wow, right off right off that previous high. Bang, bang. 199.85.
So as you take a look of shares of Boeing, keep in mind that they report their Q3 results next week, and they pre-announced on Friday, so we know the numbers are going to be ugly. There's going to be very few surprises that day.
Might have to be some small caps. Might have to keep my eyes there.
Liquidity level as well as debt levels at the end of the third quarter, and again, that's the results that we get next week. Guys, back to you.
Meantime, Phil, any suggestion that the machinists are going to get back to the table with management?
No.
All right, Tesla,
And we know that the labor secretary was
222.50.
meeting
All right.
with the union as well as the company. Look, everybody believes that Boeing needs to get back to work as quickly as possible. You hear this all the time.
More highs now.
The country needs Boeing to work. Well, that's fine, but the machine.
Sorry, 222 to 222.50.
30% is not going to cut it. We need more than
All right, you see that right there?
There's no indication
You just bounced into it. You rejected it.
that the company
Chances are you go back down to test the low. You know, 200s.
Backlog is still there, I guess. I mean, if there's one bullish thing to say,
Put in a double top.
that'd be it.
Double top.
that is it.
Reject lower high.
Level, David, on the
You're almost putting in a lower low, but you haven't done that just yet.
That's the target that was out there at the end of this year. They're not going to get there. So you're not going to get the 38 per month. How long will it take you to get the 38 per month? And by the way, that's the cap that has been set there by the FAA. You want to go above that if you're Boeing? The FAA is going to have to approve that in the future.
I'm just doing the calculations. I mentioned this earlier. So November 1st is the October non-farm payrolls report, which comes right before the Fed meeting the next week. So Phil, I mean, it will impact the data, right? You should see this in the unemployment rate, and
Yes.
maybe we're already seeing it in jobless claims.
Absolutely, it will have an impact. You're looking at about 33,000 striking machinists right now. And as you know, when these unions go on strike, we saw this with the UAW last year, they then are often reported as,
So we're seeing, I wonder if Walgreens is sending off a bunch of dividend names.
The latest tech names that bet big on nuclear energy. We'll get some details after this. And
I gotta do better, man. I cannot miss trades like AMD short from yesterday. And let me go back to DJT real quick. I'm just letting Tesla do what it needs to do.
the stock market
We did put in a higher low right here.
Eastern time on November 5th, right here on CNBC.
You know, I gotta say that volume is definitely to the sell side, guys. They're so expensive, though. I looked yesterday. They want so much money. Like, to be paying $1 for a 30-cent for a $30 put. I mean, it just speaks volumes. You know what I mean?
Drink less, or to quit drinking altogether. Qualify for treatment today at wordhealth.com.
Like,
The best part of any of
I don't know.
shows is always the transformation they show you at the end.
Like 40 or 50 cents is more appropriate, but like look at this, like 31 puts, they went $2, $2. Get the hell out of here! One rip and you're done.
For example, you're standing here doing the dishes, and these grills totally block your view. With our window style, you can easily see the whole backyard.
The black is really nice too. Okay, here's a question.
That's what I mean. They're not giving you really any room for
By Anderson, different.
to work with there.
A lot of other window companies and contractors don't, and that's amazing financing. A lot of times you can upgrade your windows and
I don't know why I'm so tired this morning. I slept, I thought, for a good portion of the night. Abby woke me up in the middle of the night. My cat. She woke me up around 1 o'clock. She came in and went into the bedroom, well, the bathroom, the bathroom that's in the bedroom, and was meowing. I don't know. She probably wanted to get into the window or something. Now that I think about it, but. So I was up a few different times. I don't know why I'm so tired today, though.
just call and make an appointment. We're the replacement window division of Anderson, so we don't.
All right, let's see here. City, 11 o'clock Eastern Standard Time is going to have their earnings. We'll play that. I want to thank you guys for hitting the like button, subscribing. I greatly appreciate everyone that's here, that showed up. Ain't not a mother, ain't not a nothing watching me, dog. Come on, bro. All right, I might get up out of here. J&J, UNH, trending now. Let me refresh. Let me go after a little something here. You know what? This'll get them. Never mind, I'll do it tomorrow. Oh, I'm gonna get them. Watch this, y'all. We're gonna get a bunch of views tomorrow. Watch this. This is gonna be funny. Alright, so what was I was on to something. Alright. Refresh.
Those gains being driven by a few names: Palantir, Oracle, ServiceNow, all outperforming the S&P now since January.
Well, Google, speaking of, is the latest tech giant to go nuclear.
Watch GDX,
For data centers and AI.
Boeing,
Striking a deal with a nuclear power startup.
MetLife. All these dividend names are ripping, you guys.
New life into the sector. Who would have thought? Nuclear's back. Pippa. Hey, Sarah. Well, Google's announcement with Kairos Power is a new chapter for tech partnering with nuclear because it's the first.
Dude, I own this. You guys know that, right? I owned this before the stock split. This is insane.
It comes as big tech companies race to secure the insatiable power needs of AI without compromising their net zero goals. Google's deal is just the latest example. We also had Microsoft teaming up with Constellation Energy to bring 3 Mile Island back online, while Amazon bought a data center from Talon Energy that's powered by the Susquehanna nuclear power plant. Now, prominent tech players are also backing nuclear. Both Bill Gates and
They did a reverse split,
chairman of nuclear companies,
I think.
has funded a fusion company, and NVIDIA's Jensen Huang has called nuclear a quote integral part of the AI future.
No, they didn't do a split. I'm sorry. They bought back a bunch of shares.
Google funding several SMRs from Kairos will send an important signal about demand and lead to more build-out. Guys? All right, wherever they can get it, I guess. Thank you, Pippa Stevens. Bank of America Chairman and CEO Brian Moynihan joins us next with that stock higher and financials in the lead in today's market. Despite some big losers on the Dow, United Health, we'll talk about that as well, shaving 318 points off the Dow.
Full year net sales of 228 billion euros
Listen to and follow
versus the $27.71 billion estimate.
ASML.
Lima.
ASML. Sorry, I know that was a little.
Shares of ASML selling off here sharply, sold off here 792.15 the low on ASML.
ASML, ASML.
In a rapidly growing $21 billion market, laser photonics, on the NASDAQ as LASD, is a vertically integrated manufacturer and R&D center built on 40 years of history, providing cutting-edge systems like our AI-capable robotic cell and revolutionary solutions for material processing, semiconductor production.
Damn, son, where'd you find this one? Dude, what is going on?
Most power players on Wall Street rate NVIDIA a strong buy today. Yet why are so many legendary investors quietly ignoring that advice and instead selling the stock?
Oh my God.
Every billionaire on your screen has recently sold NVIDIA. Some have offloaded millions of shares. In fact, hedge funds are quietly selling all of their tech stocks at the fastest rate we've seen since 2016. My name is Mark Chaikin. During my 50 years on Wall Street, I helped build 3 indexes
With my Mark
for the
Jacob
NASDAQ.
goggles.
That means I know how to recognize these signals from the tech market and exactly what they mean for you and your money. I explain everything in my new free market briefing, including the truth.
DRUG shares halted again on a circuit breaker. Delta Romeo Uniform Golf at the highs now $7.59. Shares up 200.
There's no way.
DRUG.
I mean, there is a way, but... Bro, if they really got him, that's going to be so funny.
I just chose my products, added our logo, and placed my order. Bring your own team together with custom gear. Get started today at custommake.com.
ASML shares making more lows now. Alpha Sandy Michael Lima.
So, oh shit, it got through $6. That's insane, bro.
$65. That's Alpha Sandy Michael Lima.
10 minutes a day can improve their memory and concentration. So pick a book, any book, and read. The more you know.
Pick a book, any book. Go ahead and read that son bitch. Drug. Drug. It's halted. How is it making new highs if it's halted? All right, 1450. All right, Tesla broke down. If we get a pop.
S&P futures falling here.
When he was a reservist and not intervening, he went on to kill 18 people in Lewiston, Maine last October. The Army has 6 months to
Brian. First on CNBC to break down the quarter. Welcome back, Brian. Nice to have you.
It's good to be here, Sarah. Good to see you.
You too. I mentioned the investment banking and trading. The net interest income was a beat. How do you characterize the environment that you're operating in right now?
Dude, look at the Qs. Look at the QQQ. Is that all from ASML? Hold up. No, 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 no. What in the hell happened here? What's going on? NVIDIA. Oh my god. I knew it. I fucking knew it. I 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 fucking knew it. I'm such an idiot. I saw it.
Yeah, I mean, there's so much focus on this from the analysts and the investors, where the net interest income goes, especially in a world where the Fed is lowering rates. So how, to what degree does
That ASML news hit.
if you do expect net interest income to continue to rise?
Let's see here.
It's a complex question, but we disclose our sensitivity beyond the curve. But given the curve that we see, the one in the market, we don't make it up. We take the market's curve. We see growth in NII next for the fourth quarter and beyond, and so we feel good.
All right, so I'm watching this zone here. I assume the semiconductors is why this is happening. I don't think it happened to the IWM. Come on, bro. Why is Thinkorswim doing this? Like, I click it, backspace, all that fun stuff. Look, the Dow is not moving. So it has to be semi-related. Alright, it has to be off of that ASML news. Guys, look at this. This is insane. You guys seeing this? This is all... This is all after that ASML news.
That's from the Wall Street Journal. SQ Square is the largest shareholder in South Korea's SK Hynix chip company.
Oh my gosh. Alright, shares of chip stocks are trading lower in sympathy ASML, which fell after issuing soft guidance. Some stocks in the sector may also be down. On reports indicated the U.S. is discussing curbing chip exports to some countries. Cantoneros, you're not getting no more chips. Some cantoneros. Cantonero. Sorry. ASML is trading lower after following soft Q3 guidance. Chip stocks fall. We read that. Reddit. AMD did not participate in that because they're not necessary. Oh, they did. Never mind. I take that back, Jack. Fudge sickle. Fuck. This was our idea yesterday that we gave out, which was a short up here between 168 and 170 yesterday. You know, again, it's fully recorded. I can go back on here and you guys will see me say, guys, a nice trade idea would be short AMD on the semiconductors 168, 170 if you want to give that a shot, you know. Oh my gosh, are you serious? AMD, you're not going all the way back down to 155. AMD's getting rid of her butt. She said, I weigh too much. It's too hard for me to walk around. I need to lose some weight. You don't need to lose no weight. That's crazy. All right, well, this is cool because this will give us an opportunity to buy again. For anybody that didn't get a chance to buy down at the $80 to $100 zone, you get back down into that low 100 zone. You got, you know. Or don't be upset when this thing's, you know, left. The train is left, and you never stepped up. That's funny.
No landing might be the best choice if you're thinking it gets down about 1.5 to 2% growth, which is where it was sort of for a lot of years prior to the pandemic. If we can glide into that level and keep the inflation, which is down a lot now, continuing to move down, that would be a no landing. In other words, we never had sort of a real bottom off the, you know, get down to no growth for a quarter or two, and that's pretty good. Now the question is, a lot of things can go wrong in that path. You know, there's existential factors out there, extra factors, extraterritorial factors, even global political that you just are describing.
150, 149. This sucks. It's all good.
Being something we can't control and can't drive. What we see from our commercial client base is very strong, very solid, and good, and consistent with a low growth, low inflation economy.
I was going to say, no landing with no flare up in inflation. That's really the sweet spot, isn't it? And that's what you're expecting?
It would be, but right now our experts have the GDP rate kind of drifting down around. Where you know, sort of in a normal quarter, we'd run up to 2.5, and that was kind of all driven by all the refinancing going on in a low rate environment. So the pipeline's full, the activity level's high. There are, you know, people are out there thinking about deals, trying to do deals, and activity around that. The IPO markets are, you know, moving to being open a little bit more, and that is all good things because at the end of the day, the capital formation of the U.S. capital markets is the key for not only the U.S. but the rest of the world.
What do you think it'll take to get a more robust IPO market and increased M&A? Is it lower rates? Is it the election?
Well, I think the uncertainty around as rates come down, the financing costs for a deal go down, so the LBO markets and others will pick up. Hopefully, the uncertainty getting deals through. We've spoken about that before. It has been a constraint on activity because people worry that if you put a company under a contract and it takes you a year and a half to get an approval, there's a lot that can go right or wrong with those two companies during that time frame. So I think if people can move the process along faster, analyze the deals they don't like, take an opinion on. But at the end of the day, the length of time is one of the great uncertainty factors we see, whether it's in our industry, not that we can make any acquisitions, whether it's in our industry in financial services or other industries.
Yeah,
that's
I
what our
caught
clients
that on
tell
the
us.
acquisitions. Speaking of IPOs, tech, AI, it's obviously captivated the market. You talked about it a little bit today and how you're incorporating it into the business. How much of an impact is it for you on performance at this point, and where does that go?
Well, the AI on one day, it's going to change everything. Tomorrow morning, on the next day, it basically is not as real as people think, and everything in between. The reality is, it's already here, it's already working. It's a movement forward off another type of machine learning and digitization of activity, and we see it today. Our product called Erica, which interfaces with a customer, has had 2 billion interactions. If you look back over the last 4 or 5 years it's been out there, it has saved 2,000 plus person years in work. And even about half of the activity is just insights we give people to help our relationship with them. The other half is actually takes work out that would have been done by a call or a text. So it's real. It's taking out work, and we're allowed to take that. We take that activity that would have been doing more routine tasks and plow it into somewhere else. In the area of computer coding, writing code, we've implemented across thousands of computer scientists who are using it and learning from it and bringing it out of pilot into full operation. And we see it a lot of places. Any place where you have data transformed and put back into a memo, or data transformed, put back into a pitch book, or data transformed, put back into another spreadsheet or a financial report, we think it has great applicability. But you have to be very careful. The data has to be perfectly arrayed. You have to be able to analyze it. You have to be able to check it, because at the end of the day, we're responsible for the answer, whether the machine gives the answer or we give the answer. So, we have high hopes for it, but it's going to be a little slower than people think as we learn how to use this activity even more and more across the franchise.
So slower. I was going to ask you how you think the AI hype is going to live up to expectations on how it might transform a bank like yours and the financial metrics.
Well, it's going to help. If you look at our company through machine learning and digitization, in 2010 we had 295,000 people. We peaked at 305,000 people. We have about 213,000 people right now. That is all due to all this work. And so it'll just continue that trend. Now, meanwhile, we keep repositioning resources from work that goes away to work that needs to get done. And we've been lucky to be able to manage that. If we basically have a chance to not hire 1,500 people a month if we don't want to, and then the headcount could come down, so we can manage headcount relatively carefully. So the human side of it we try to manage, but the application side we try to push very hard. And it is clearly not piffle here. This is really an important trend in business. But on the other hand, it's got to be used right and managed right, and make sure we can actually apply it with the discipline, integrity, and the regulatory rules around it, and the compliance rules and our customer experience we want at the same time.
Another big trend we've been talking about here at CNBC and in the markets is private credit. And on looking at your page 27 disclosures on commercial credit exposure, 27% jump year over year in loans to finance companies. Is that private credit, and how do you view that? Is it an opportunity for growth or ultimately a threat for your business?
Well, at the end of the day, they're providing credit sometimes we can't provide because of the amount of leverage a fund can take versus us. But what gives us the strength in commercial banking is the customer relationships, the operating accounts, the lines of credit, and then also the ability to work with customers when things go bump in the night. And I think that'll hold us in good stead. We've always sent credit off our balance sheet to other people, whether it's other banks or whether it's other investors, and we'll continue to do that. And they're competitors. They're looking to try to do a sort of a stem to stern deal and take a whole deal down from the equity to the mezzanine to all the different tranches to the term financing, and that's competitive. But on the other end of the day, a company like Bank of America with the talent and teammates we have, we can compete against anybody.
And finally, Brian, I know you got this question at the Barclays conference when we were there a few weeks ago, but Berkshire Hathaway continuing to sell shares of Bank of America, now under 10%, so it doesn't have to disclose more, but it's been going on for months. You said at the time you hadn't spoken to Buffett about it. Have you since, and do you have any sense of why?
You'd have to ask Mr. Buffett and Berkshire that question. I haven't spoken to him about it. He's been a great shareholder. He invested 700 million share equivalents in 2011 and another 300 million in 18-19. He sold down. He still has a lot of shares as of the last report, and he's been a great investor and helped our company at 2011 through a difficult time. And if it created the courage, if you'd invested on common stock, you'd have fared as well as he did at the same time at that day. So he's been a great investor, great supporter of our company. I'll let you ask him that question.
Well, I'm sure we will. Brian, thank you very much for joining us today on earnings and talking through all those things.
Thank you, Sarah. Well, good to see you.
Good to see you, too. Brian Moynihan, CEO and chairman of Bank of America. And I think the big headline there is he got the headline "No Landing" from Brian Moynihan, which, a lot of people, he's always been more optimistic than, say, a Jamie Dimon on what we're seeing in terms of the environment. But he backs it up with the consumer data. And he said a quarter ago he was more worried about it. And now things have stabilized.
Yeah, I heard that and listened closely to it. Obviously, to that point, he's been right.
He
to
has
have been more positive than some other banks.
That's why the market's outperformed and the economy.
Yeah. All right, let's get to some healthcare names that are moving this morning. Chief amongst them, of course, United Health Group. Bertha Coombs has some key takeaways for us from all that. Bertha.
Hey, good morning, David. United Health's third quarter results beat on the top and bottom line, but high medical cost trends are weighing on the stock. On the call, CFO John Rex said that they're continuing to see aggressive upcoding by hospitals. That means making patients seem more acute in order to charge higher rates, but also an unexpected increase starting this summer and continuing now of expensive brand names being prescribed, which they attribute to the out-of-pocket caps from the Inflation Reduction Act for Medicare patients, which they didn't think would be as big a factor until next year when that cap goes down to $2,000. As a result, United is lowering the high end of guidance for this year amid higher costs for the Change cyber attack earlier this year. That's one of the reasons as well. And now anticipating full year 2025 earnings below the Street's estimate. And as United goes, well, so go its rivals this morning, likely experiencing many of the same issues. Johnson & Johnson, meantime, beating on the top and bottom lines, driven by beats across the portfolio in oncology and immunology drugs. Economic weakness in Asia, though, weighing on J&J's medtech business, and ongoing talc litigation continues to pose a headwind. Meantime, take a look at Walgreens, seeing its best gains in 4 years as earnings beat on the top and bottom line. But among the highlights, the healthcare unit, which includes VillageMD, where they've made a lot of cuts, posted positive operating income, offsetting continued headwinds in pharmacy. And to that end, the company is going to close 1,200 stores over the next 3 years, shrinking the footprint by 14%, which CEO Tim Wentworth says will be immediately accretive. Back over to you, David.
Thanks, Bertha. That VillageMD deal for Walgreens, just terrible waste of shareholder money. $5.2 billion. I think they took a $5.8 billion hit and a $12.4 billion impairment. Want to come back to United Health, though. On the conference call, Brian Thompson, the CEO, talked about upcoding to inpatient stays versus what they feel is more appropriately billed as outpatient. What is he talking about there, and what does that mean?
Well, we've been hearing for a while that inpatient stays in hospital is one of the things that's been driving up the medical cost. So there are different rules that have shifted where patients can stay longer. It's called a 24-hour rule. And also, they claim that hospitals are upcoding, meaning, if you have diabetes, they might add a cardiovascular, they might add something more acute, which allows them to charge more. So that's what they are saying is happening with the hospitals. Of course, if you talk to the hospitals, they're saying that, the insurers are putting too much pressure on them, not paying them for as much of their care. So that continues to be a friction point here. Carl?
Bertha, thank you very much. Bertha Coombs watching some of the healthcare stocks. Meantime, we do have some activity in tech. NASDAQ was down about 1% a moment ago. Shares of ASML dropping sharply on their guidance. And for that, we'll turn to Seema Modi. Hey, Seema.
Carl, this is the Dutch microchip equipment maker reporting earnings that came in better than expected, but its guide for 2025 is weaker than what Wall Street had anticipated. It expects 2025 total net sales to be between 30 to 35 billion euros. The street was expecting around 35.8 billion. And we have comments here from their CEO. While there continues to be a strong development and upside potential in AI, other market segments, he says, are taking longer to recover. It now appears the recovery is more gradual than previously expected. ASML is a key supplier to NVIDIA, Taiwan Semi. It makes a very specific microchip that many other companies cannot make. So this will be an interesting read here across the entire semiconductor sector as we watch names like NVIDIA trade in record high territory. Guys?
Yeah, although not right now, Seema. NVIDIA down 4%, AMD as well. Do you believe it is on this related to this news?
It may be. Expectations have been very high, David, going into earnings season, ASML today, and then we have Taiwan Semi, which reports in about 24 hours. And given the whole story around demand, those comments from Jensen Huang about insane demand for Blackwell, again, expectations have been high.
Yeah, well, again, NVIDIA and AMD both down. Of course, ASML a lot more than that. Seema, thank you, Seema Modi. Would point out as well, you know, when we came into the session this morning, NVIDIA was creeping up in market cap towards Apple's 3.5 trillion, but that disparity has actually grown given NVIDIA's 4% loss. Apple shares up some 2%, perhaps on some data from IDC we got this morning as well. You can take a look at NVIDIA, but Apple shares benefiting from a nice move higher this morning, up some 22.6% for the year. Interestingly, right in line with the performance of the S&P, which, though down a bit this morning, is also up 22.5%. Our live market coverage continues after this.
All right, y'all. I just went and made some coffee. Markets are pulling back. It's starting to get fun here. I still need to check in on SMCI. Dude, what is going? Like, you see how long that took? See how it lagged? Pulling back once again.
There's a better way to get a fast small business loan. Go to ondeck.com, and if approved, get your funds as soon as the same day. Your loan is on deck.
I was hoping we would hold up here. The Qs are trying to. Hold on here. Come on. So I wonder if they knew this.
PHUN Fundware shares resumed trading and continuing higher now, near $8. That's Papa Hotel Uniform November.
Eucora makes effective urinary tract health products. It truly works miracles. The peace of mind.
All right, we need a bounce back.
Go to eucora.com to learn more.
Take the bull by the horns every morning with Jim's Top 10. The biggest headlines, earnings reports, and Jim's hot stocks right to your inbox. Sign up now for free at cnbc.com.
We need a bounce back rejection at 160. This is wild.
Good Tuesday morning again. Welcome to Money Movers. I'm Sarah Eisen with Carl Quintanilla live from Post 9 at the New York Stock Exchange. Today, shares of Charles Schwab surging up more than 7% now on the back of results. Both the incoming and
Yo, look, they said Charles Schwab up 7%, right? Let's see.
Shares halted on a circuit breaker.
Let's see. Okay, so it is still up 7%. They're lucky. They're lucky. Lucky as hell. SMCI. Come on, bro. SMCI. Alright, so SMCI held up. So we're getting Citi that's turning around. We have Citi earnings that are coming up. Keep an eye on Citi, you guys. Their earnings call is coming out. Dude, I'm getting so sick of this fucking...
Rising just 0.1% for the year. Medical costs falling to their lowest point since February of 2020. The perceived probability of losing one's job in the next 12 months unchanged at 13.3%, and the perceived probability of finding a new job if a job was lost increased by 0.4. Expected household income growth declined by 0.1 to 3%, still above pre-pandemic levels, and the perceived probability of missing a minimum debt payment increased.
11 a.m. Eastern Time. I wonder where these people are at. If they're in Delaware or if they're in...
Yeah, for sure, Carl. I think it's mostly a steady picture as you kind of went down the list. I think we're a little bit liberated from really fixating on the inflation expectations piece because the inflation numbers themselves have been okay. So this basically, I don't think should change the story too much. In fact, if anything, today's huge drop in oil prices is really putting a weight onto yields, which had really been close to a level people thought maybe you had to pay more attention about a possible upside breakout. Also, the rethink on China seems to have that effect as well.
You must accept the privacy
Five
policy.
businesses. Our businesses performed well as the rate-cutting cycle began, with a double-digit increase in fee-based revenues, reflecting the growing diversity of our earnings mix. We continue to have share gains in services and banking. In wealth, we saw a sizable increase in client investment and flows. We brought expenses down whilst continuing to invest in our transformation and businesses. And we continued to attract the top leaders in the industry and successfully combine them with our own teams in banking and wealth. So while we are not yet where we want to be, the impact of the changes we're making is clearly evident in our momentum and our improving performance. Turning to the macro. Now, while growth is a notch slower than last year, global economic performance continues to be surprisingly resilient. Whatever you want to call the U.S. landing, the sentiment around it is more optimistic, supported by the recent positive payrolls report. And we see a healthy yet more discerning U.S. consumer and a U.S. corporate sector on its front foot. Manufacturing weakness is restraining a modest rebound in Europe, which continues to struggle with more structural challenges around its competitiveness, as highlighted by Draghi's report. And in China, consumer sentiment and the property market remain a concern as markets await details on the expected fiscal stimulus. India, ASEAN, Japan, the Middle East, Mexico, and Brazil are all notable bright spots globally. Today, we reported net income of $3.2 billion and earnings per share of $1.51, with an ROTCE of 7%.
7%.
Overall revenues grew by 3% ex-divestitures, with each of our core businesses delivering growth and positive operating leverage. While we continue to make substantial investments in our transformation, the efficiencies gained from our simplification and other efforts drove a 2% reduction in overall expenses. Turning to the five businesses, services delivered a record quarter, with revenues up by 8%. Fee growth, the best indicator of underlying momentum, was significant.
Revenue was
and this,
3%.
combined with loan and deposit volume growth, drove this quarter's excellent performance.
But they cut
Treasury
it by 2%.
and Trade Solutions
They didn't cut it
was
by
up
2%.
4% year over year, reflecting good
Telling a different
underlying
story.
momentum in the core drivers. And Security Services was up 24%, reflecting the benefit of new mandates and an increase in assets under custody. Both TTS and Security Services achieved over 10% wallet share in our target markets, through the first half of the year. Last week, we announced that we are the first global bank to complete the integration of our cross-border services with MasterCard Move. Now, this will ultimately enable near-instant, secure payments to the vast MasterCard debit network, starting with 14 markets, with more to come early next year. And this is another great example of our continued investment in market-leading innovations. In markets, revenues were up slightly on the back of a better-than-expected September. Equities was up 32%, with robust performance across all products. Our continued strong performance in equities validates both our strategy and execution to grow prime and cash. Fixed income, however, was down 6%. Our rates and currencies business didn't match last year's standout performance. It was a particularly pleasing quarter in banking. Despite the muted IPO market, investment banking fees are up 44%. That's driven by investment-grade debt issuance as our clients pulled forward activity ahead of the U.S. election. Corporate sentiment remains positive as boards pursue strategic transactions, such as the $36 billion Mars acquisition of Kellanova, where we are the sole advisor and the lead financier. Our strategy in banking continues to gain momentum. We are steadily growing our share in key target sectors, such as healthcare and tech, with a healthy pipeline ahead. And the significant upside of our franchise continues to attract the top talent to Citi. During the quarter, we announced an innovative $25 billion private credit partnership with our longtime client, Apollo, giving us the ability to source new transactions without using our balance sheet. This partnership positions us with another solution for debt financing for our clients, and it allows us to engage in private credit with the same depth and expertise as we currently do with syndicated debt markets.
Hold on.
We're also starting.
I can't. We talked about a pre-market. Just look for a low volume consolidation and hold above the 100-day. And then
franchise with revenues up 9%. It's a notable example of the traction that I referenced earlier. As Andy and the team intensify the focus on our investments business, we grew client investment assets by 24%.
That's nice.
And we were particularly pleased with the performance in Asia and in Citigold. I continue to be excited by the opportunities and the sheer potential of our franchise. During the quarter, we signed an agreement to exit trust administration and fiduciary services as we continue to sharpen the focus of our wealth business. We have more to do to reach our medium-term margin and return targets, but this quarter is a good indicator that we are on the way there. U.S. personal banking revenues were up 3%. We grew branded cards revenues by 8%, with account acquisitions, spend, and payment rates all driving higher interest-earning balances. Lower discretionary spending is impacting our retail services portfolio. However, we continue to see lower payment rates contributing to interest-earning balances. In retail banking, we're growing our mortgage portfolio as the rate environment shifts, as well as growing overall loans. The U.S. consumer dynamics remain remarkably consistent with prior quarters. Our customers are healthy but more discerning in their spend, with signs of stress isolated to the lower FICOs. We've maintained strong credit discipline, and our card portfolios continue to perform very much in line with our expectations. In terms of capital, while uncertainty about the Basel III endgame prevails, our capital position remains very robust, and we ended the quarter with a CET1 ratio of 13.7%. During the quarter, we returned $2.1 billion in capital, including the repurchase of $1 billion of common shares. We will continue to repurchase stock as we evaluate the right level on a quarterly basis. As you know, our transformation is our number one priority. This quarter, we closed another long-standing consent order which related to the effectiveness of our anti-money laundering systems. We have increased our investments in areas where we have not made sufficient progress, such as data quality management. I and the management team remain steadfast and determined to get this transformation right and to get this done. We will close out this pivotal year with momentum and with determination to continue to improve performance in each business and the firm overall. We are committed to meeting our revenue and expense targets for the year, as well as our return target for the medium term. I am very proud of our senior leadership and the entire organization as we demonstrate the potential of our unique global franchise. It is a privilege to lead this firm. With that, I would like to turn it over to Mark, and then we will be delighted, as always, to take your questions.
Thanks, Jane, and good morning, everyone. I'm going to start with the firm-wide financial results, focusing on year-over-year comparisons for the third quarter, unless I indicate otherwise, and then spend a little more time on the businesses. On slide 5, we show financial results for the full firm. For the quarter, we reported net income of approximately $3.2 billion, EPS of $1.51, and an ROTCE of 7% on $20.3 billion of revenue.
Repurchase stock program.
Total revenues were up 1% on a reported basis. Excluding divestiture-related impacts, revenues were up 3%, driven by growth across each of our businesses. As you can see on the bottom left side of the page, net interest income, excluding markets, was down 1% year-over-year, largely due to lower interest rates in Argentina. And non-interest revenue, excluding markets, was up 9%, as we continued to see strong fee momentum across services, banking, and wealth. Year-to-date revenues were up 1% on a reported basis and are up 3% excluding divestiture-related impacts.
Right there, just a little.
Expenses were $13.3 billion, down 2%, largely driven by savings associated with our organizational simplification and stranded cost reductions, partially offset by volume-related expenses and continued investments in the transformation and other risk and control initiatives.
Revenue.
Year-to-date, expenses are up 1%, primarily driven by the FDIC special assessment and civil money penalties. Cost of credit was $2.7 billion, largely driven by net credit losses in cards, as well as ACL builds across the businesses, primarily for portfolio growth and mix. At the end of the quarter, we had over $22 billion in total reserves, with a reserve-to-funded loan ratio of approximately 2.7%. And year-to-date, excluding the divestiture-related impact, we generated positive operating leverage for the firm,
this was a really good
and reported
quarter,
an ROTCE of 7.2%.
We did better in the markets last quarter.
On slide 6, we show the expense trend over the past 5 quarters. This quarter, we reported expenses of $13.3 billion, down 2%, and 1% sequentially. As we've said before, we will continue to increase our investments to address data governance and data quality related to regulatory reporting, and are committed to spending whatever is necessary to address these areas and the transformation more broadly. Although a lot more work remains, we have started to see benefits from our prior investments play through. We've continued to simplify our technology infrastructure, retiring over 450 applications year to date, and now over 1,250 since our 2022 Investor Day. We've upgraded 100% of our over 2,300 ATMs in North America and Asia Pacific to next-gen software for better customer security and monitoring. And we've streamlined our cloud onboarding process, reducing time to onboard applications to the public cloud from over 7 weeks to 2 weeks. Each of these initiatives will result in both improvement of our operating efficiency and our safety and soundness. And in terms of our full-year expenses, we continue to expect that we will be at the higher end of the guidance range of $53.5 to $53.8 billion, excluding the FDIC special assessment and civil money penalties. And as we've said before, we, of course, will continue to look for opportunities to absorb the civil money penalty. On slide 7, we show net interest income, loans, and deposits, where I'll speak to sequential variances. In the third quarter, net interest income declined 1%. Excluding markets, net interest income was up 4%, largely driven by volume growth in USPB, as well as higher deposit spreads in services and wealth. NIM declined by 8 basis points, driven by a decline in markets due to seasonally higher dividends in the second quarter. Average loans were up 1%, driven by growth in services and USPB, partially offset by modest declines in banking and legacy franchise. Average deposits were roughly flat, as growth in services was largely offset by a decline in legacy franchise. And as you think about guidance for NII ex markets in the fourth quarter, as short-end rates continue to come down, we expect a headwind on floating rate assets, which will be somewhat offset by disciplined deposit pricing. Further offsetting that will be a continued benefit from securities being reinvested at higher yields. And as a reminder, we expect an ongoing NII headwind as legacy franchises, loans, and deposits continue to come down. So taking all of this into account, we expect NII ex markets to be roughly flat sequentially in the fourth quarter, and for the full year to be slightly down, better than we had previously guided. On slide 8, we show key consumer and corporate credit metrics, which reflect our disciplined risk appetite framework. Across our cards portfolio, approximately 85% of our loans are to consumers with FICO scores of 660 or higher. Based on what we see, the U.S. consumer continues to remain healthy and resilient. Spend and payment rates continue to normalize, and underlying credit performance remains broadly in line with our expectations. NCLs increased year over year as card loan vintages that were originated over the last few years continue to mature at the same time. Sequentially, NCLs declined while delinquencies increased, both in line with historical third quarter seasonality. Absent this seasonality, we continue to see stabilization in early stage delinquency. We remain well reserved with a reserve to funded loan ratio of approximately 8.2% for our U.S. cards portfolio. Our corporate portfolio is largely investment grade, and corporate non-accrual loans remained low at 31 basis points. As such, we feel very comfortable with the over $22 billion of total reserves that we have in the current environment. Turning to slide 9, we provide details on our balance sheet, capital, and liquidity, which are a reflection of our risk appetite, strategy, and business model. Our $1.3 trillion deposit base is well diversified across regions, industries, customers, and account types. $840 billion are corporate, spanning 90 countries, and are crucial to how our clients fund their daily operations around the world. The majority of our remaining deposits, about $400 billion, are well diversified across the private bank, Citigold, retail, and wealth at work offerings. And of our total deposits, roughly 70% are U.S. dollar denominated, with the remainder spanning over 60 currencies. Our asset mix also reflects our strong risk appetite framework. Our $689 billion loan portfolio is well diversified across consumer and corporate loans. In the quarter, deposit growth outpaced loan growth, resulting in higher cash balances, which contributed to available liquidity resources of approximately $960 billion. We continue to feel very good about the strength of our balance sheet and the quality of our assets and liabilities, which position us well to serve our clients and execute on our growth strategy. On slide 10, we show the sequential CET1 walk to provide more detail on the drivers this quarter. First, we generated $3 billion of net income to common shareholders, which added 27 basis points. Second, we returned $2.1 billion in the form of common dividends and share repurchases, which drove a reduction of 18 basis points. Third, we generated 12 basis points from unrealized AFS gains. And finally, the remaining 9 basis point reduction was driven by an increase in RWA as we continue to invest in accretive growth opportunities. We ended the third quarter with a preliminary CET1 capital ratio of 13.7%, relative to our target of 13.3%. As a reminder, effective October 1st, our new CET1 capital ratio requirement is 12.1%, and we still plan on holding a 100 basis point management buffer on top of that for now. As we think about the coming quarters, there are a few things that we will continue to consider as we manage our capital levels, including client demand, as well as how the macro and Basel III endgame evolves. We will take all of this into account as it relates to capital levels and the level of share repurchases on a quarter-by-quarter basis. Turning to the businesses on slide 11. In services, revenues were up 8%, reflecting continued momentum across security services and TTS, both of which continue to gain share through the first half of this year. Net interest income was roughly flat, as the benefit of higher deposit volume was largely offset by a decline in interest rates in Argentina. On a sequential basis, net interest income was up 7%, driven by volume growth as we continue to onboard high-quality operating deposits and the benefit from higher deposit spreads. Non-interest revenue increased 33%, driven by a smaller impact from currency devaluation in Argentina, as well as continued strength in underlying fee drivers in TTS and security services. Excluding the impact of the Argentine peso devaluation, NIR increased 11%, driven by growth in cross-border transactions, U.S. dollar clearing volumes, and commercial card volumes. Expenses increased 3%, primarily driven by investments in technology, other risk and controls, and product innovation, including the expansion of the CitiDirect commercial banking platform into additional markets. Cost of credit was $127 million, primarily driven by a build related to unremittable corporate dividends being held on behalf of clients. Average loans increased 5%, primarily driven by continued demand for export and agency finance, as well as working capital loans. Average deposits increased 4% as we continue to see growth in operating deposits. Services generated positive operating leverage and delivered net income of approximately $1.7 billion and continues to deliver a high ROTCE, coming in at 26.4% for the quarter and 24.7% year to date. On slide 12, we show the results for markets for the third quarter. Markets revenues were up 1%, driven by growth in equities, partially offset by a decline in fixed income. Equities revenues increased 32%, driven by momentum in prime, with balances up approximately 22%, growth in derivatives, and higher cash volume. Fixed income revenues decreased 6%, driven by rates and currencies, which was down 10%, partially offset by spread products and other fixed income, which was up 5%. While rates and currencies declined from last year, which was the strongest third quarter in the previous 10 years, we did see good momentum in FX from increased corporate client activity. Spread products and other fixed income was higher, driven by financing securitization volumes and underwriting fees, partially offset by lower commodities on lower gas volatility. Expenses increased 1%, primarily due to higher volume-related expenses. Cost of credit was $141 million, driven by an ACL build primarily related to portfolio mix and spread products. Average loans increased 10%, largely driven by asset-backed lending and spread products, as well as margin loans in equity. Average trading account assets increased 18%, largely driven by client demand for U.S. Treasuries, foreign government securities, and mortgage-backed securities. Markets generated another quarter of positive operating leverage and delivered net income of approximately $1.1 billion, with an ROTCE of 7.9% for the quarter and 9.7% year to date. On slide 13, we show the results for banking for the third quarter. Banking revenues were up 16%, largely driven by growth in investment banking. Investment banking revenues were up 31%, and fees were up 44%, with increases across debt capital markets, advisory, and equity capital markets. DCM benefited from continued strong investment-grade issuance. Advisory benefited from strong announced deal volume earlier this year. And in ECM, we saw stronger follow-on activity, which was offset by fewer IPOs amid market volatility in August. Both year-to-date and in the quarter, we've driven wallet share gains, including in the healthcare and technology sectors where we've been investing. Corporate lending revenues, excluding mark-to-market on loan hedges, increased 5%, primarily driven by a smaller impact from currency devaluation in Argentina. Expenses decreased 9%, primarily driven by benefits of headcount reduction as we continue to right-size the workforce and expense base. Cost of credit was $177 million, driven by an ACL build primarily for portfolio mix changes. Average loans decreased 1% as we maintained strict discipline around returns. Banking generated positive operating leverage for the third quarter in a row and delivered net income of $238 million with an ROTCE of 4.3% for the quarter and 7.2% year-to-date. On slide 14, we show the results for wealth for the third quarter. As you can see from our performance this quarter, we're making good progress against our strategy and expect that momentum to continue. Revenue was up 9%, driven by a 15% increase in NIR as we grew investment fee revenues on momentum in client investment assets, which grew 24%. NII increased 6%, driven by higher deposit volumes and spreads. Expenses decreased 4%, driven by the continued benefit of headcount reductions as we right-size the workforce and expense base. Cost of credit was $33 million, largely driven by net credit losses of $27 million. End-of-period client balances increased 14%, driven by higher client investment assets and deposits, both in North America and internationally. Average deposits increased 4%, reflecting the transfer of relationships and the associated deposits from USPB, partially offset by a shift in deposits to higher-yielding investments on Citi's platform. Average loans decreased 1% as we continue to optimize capital usage. Wealth generated another quarter of positive operating leverage and delivered net income of $283 million with an ROTCE of 8.5% for the quarter and 6.8% year-to-date. On slide 15, we show the results for U.S. personal banking for the third quarter. U.S. personal banking revenues were up 3%, driven by NII growth of 2% and lower partner payments. Branded cards revenues increased 8%, with interest-earning balances growth of 8%, as payment rates continue to normalize and we continue to see growth in spend volume, which were up 3%. Retail services revenues were down 1% due to a slowing growth rate in interest-earning balance. Retail banking revenues decreased 8%, driven by the transfer of relationships and the associated deposits to our wealth business. Expenses decreased 1%, driven by continuous productivity focus, partially offset by higher volume-related expenses. Cost of credit was $1.9 billion, largely driven by net credit losses and a modest build for volume growth. We continue to expect branded cards to be in the 3.5% to 4% NCL range for the full year. In retail services, we continue to expect to be around the high end of the 5.75 to 6.25 range for the full year, driven by both the impact of persistent inflation and high interest rates, as well as lower sales activity at our partners. Average deposits decreased 23%, largely driven by the transfer of relationships and the associated deposits to our wealth business. USPB generated another quarter of positive operating leverage and delivered net income of $522 million with an ROTCE of 8.2% for the quarter and 5.2% year-to-date. As we've said before, the USPB segment creates a lot of value for the firm. We knew 2024 would be a tough year.
I think it's really going to get good when after Jen speaks, they should take questions. The questions are really going to... This thing's at highs. So this is going to be determining whether or not this thing's going to continue to go back to highs or make new highs.
Environment.
And if Citi's not going to do it with the rest of the financials, that's our trade.
Turn over the medium term. On slide 16, we show results for all other on a managed basis, which includes corporate other and legacy franchises and excludes divestiture-related items. Revenues decreased 18%, primarily driven by closed exits and wind down.
We still have Goldman Sachs. We still have Goldman Sachs to get through if you guys want to listen to that. Where's my earnings calendar at? So we have United Healthcare. I think we should listen to Walgreens, possibly United Health as well, and damn, there's like a lot. This is earnings season, guys. This is earnings season. It's what it's about. I just wanted to see Citi, and have them answer some questions here.
$81 billion full-year guidance. As I mentioned, we now expect NII ex-market to be slightly down for the full year. And with year-to-date expenses of $40.4 billion, excluding the FDIC special assessment,
data shows public expects inflation to ease more over time, fully expects economy to see bumps, disturbances, and scares. As Daly says, job to achieve soft landing is not complete. That's from the San Francisco Fed President Mary Daly.
The time has finally come. We have completed the F12 engine and it is ready to go into the car right now. For the final time, this thing should be running very soon. But to get that to happen, we need to drop this thing in the car and bolt it all in place. We've got my wiring guy who's gonna come down and finish up all the wiring on it so we can get all the electronics in place and hopefully everything will go off without a hitch and we can get the tuner over here and we can fire this thing up. So let's get started. So we've got pretty much everything ready on the chassis for the engine. We've got the fuel pressure regulator in place, the fuel feed lines, the brake lines are fastened down to the chassis. We've got the steering shaft in, the subframe is in, oil tank is in, the breather tank. Basically everything surrounding the engine is there, it's bolted down, and it's ready to go. So we're gonna drop the engine in, tighten down the motor mounts, put the transmission mount in, we can hook up the shift linkage, and start putting that crazy exhaust system that we made on this thing. And man, I'm so excited that this car is finally coming together, and it's gonna be running soon.
Well, luckily we don't have to do this too many more times, hopefully. Should be the last time we have to do this, so no more in and out with this thing, banging it up.
We have put this engine in the car quite a few times. It wasn't complete, it was basically just the block and the head sitting on top. No crank, no pistons, no rods, no oil pump, all the accessories weren't on it. It's actually going in the car now. We have the clutch, the 4-plate Tilton clutch and flywheel bolted up, the bell housing, the Samsonite sequential transmission. It is looking like a complete engine. Once we get that intake manifold and the exhaust manifold on it, it's really gonna look good. All right, Tim, let's bring it in. All right, go up a little more. Ooh, just clears that water outlet there. You can go up another ½ an inch or so. One more little bump, okay. Now we need to get the jack underneath the transmission because right now it's angled like this, so we got to get it leveled out. That's going to clear this water line. It'll be below there, and then we can actually shift the engine slightly forward because we're a bit too far back at the moment to get past here. And if we need to, we can pull the steering rack out. This is the first time that the engine has gone in with the steering rack in its new position. So I measured everything before and it looked like it was gonna clear, so hopefully it does. Okay, go ahead and go up a little more.
How's that?
Yeah, keep going.
Going. Looks pretty level here, I think. Oh yeah, they're lining up.
Yeah, all right, so yeah, there we go. Engine mounts are just about lined up. That was really close, but that's what I figured it would be, nice and tight right there. So we will have to pull the steering rack out, I think, because we have to do a final torque on that, but that's going to be a lot easier to do when it's in the car. Because when it was on the engine stand, trying to put hundreds of pounds of torque on that bolt, the thing just kind of wanted to tip over. Once it's in the chassis, solid mounts, everything is going to be in place, and that's going to be much easier to torque. These engine mounts are different left and right, and we didn't mark them, but we got them on backwards. So this is actually the passenger side mount, and it's just slightly offset by about 3/4 of an inch back. So we lined up the transmission mount. Everything needs to move back, which means we're going to have more clearance in the front, which is what I thought, because I felt like there was more clearance when I was measuring everything. And luckily, yes, the engine's going to move back, but I just got to swap these mounts from side to side, and we should be good to go. All right, so we got the motor mounts swapped from left to right, so they're on the correct. Tighten them yet. That way we have just a little bit of wiggle room from left to right and front to back. I mean, have the cams actually move while the engine is running to optimize the cam position for every point in the RPM and under load. You can actually make it spool up way faster on a turbo car. You can build way more power in the mid-range and have a lot of power on the top end. Just really optimize the entire power band with the adjustable cam timing. So yeah, something that I've used. Have the cams actually move while the engine is running to optimize the cam position for every point in the RPM and under load. You can actually make it spool up way faster on a turbo car. You can build way more power in the mid-range and have a lot of power on the perfection all the way across. And this is just another component and dialed in. It's a pretty large diameter, and that is because the larger the diameter of the tube, the stronger it is. So you can actually run a thinner wall tubing with a larger diameter and have a lot more strength to it. So yeah, this thing is awesome.
All right, I can hold it flat.
We'll just stick a net
Not
on.
this long, and then we should be good.
Oh yeah. Right, we've got the 2 lines going here to the rails, the 2 lines coming around to the front of the rails. So that's all pretty busy. The valley is busy. Whenever you're ready to do that, we'll pop those on in 2 minutes. I'll make that back panel for the PDM right now. That'll probably take me 20 minutes. And now that the car is up in the air, we are going to drive shaft through and getting to a nut on the backside. We'll have these basically the nuts in there so we can just put the fasteners in from.
Honestly, no one wants to think.
Give me 1 second, guys. I'm trying to get this up. Come on. Sort of fucking God.
Had you ever been called out to the address before?
No, not that I recall.
And when you got there, did you see any people outside?
No, not that I recall.
Were you the first responder?
All right, I'm gonna let you guys know if I get into
Yes.
anything.
And,
all right? If I get into any trades or anything, guys, again, please hit that like button, subscribe, guys. If you guys want to donate to the stream, if you guys want to give back, if you guys want to buy me a coffee, anything, that link's in the description. If you want to sign up for a one-on-one, you want me to shout out your business, anything of the sorts, links in the description. Greatly appreciate your help. I do this for you guys. All right, I do this for you guys and like-minded traders. So all we ask is, maybe throw a donation or two and, hit the like button and subscribe. It doesn't take much. All right. The one thing we don't do, all right, is steal your information. We are not a data analyst. YouTube and all the other ones might be, but make sure you understand who you're giving your information to. I'm gonna leave that for what it is. Make sure you trust them. If you go to whatever groups and this, that, and the third, and you're paying for groups, make sure you understand what that entails.
Okay. What, if anything, did you learn?
No, I don't believe any other homes were hit. We spoke to some neighbors that just heard the gunshots.
This is so stupid. What is going on?
Without saying what.
Why is there another guy from the state?
Right.
Do you know if did you see any shell casings at that location at that time?
I don't recall any. I think I remember like when the crime scene techs got there, they were picking up shell casings. I can't say that I really recall myself seeing any.
Okay. Was a crime scene technician called out to that location to process the scene?
Yes.
And do you recall if the person's name by any chance?
The crime scene technician? I don't.
And did you include any mention of any collection of shell casings in your report? Do you recall?
I don't recall.
All right. Did that pretty much conclude your involvement with this particular matter?
Yes.
At this time, you're going to stay as a further questions.
Any questions for this witness?
All right, let's run them through.
Thank you for your time, and you are excused. Call your next witness.
Thank you again, Little Gaming Channel. Somebody write TLGC in the chat.
Okay.
Yeah, she was a cutie.
Are they ever prepared? Shout out to Beth in Seattle who hit me with the 20. Thank you, Beth.
Big shout to Beth in Seattle.
Full drinking, half thinking hit me with the 20. Thank you.
So can I ask you guys a question saying you guys heard shots? If they don't pinpoint who
Renee G. Charleston.
Can you
RENEE.
determine who was the shooter if you didn't see them?
The letter
So again,
G.
I'm just trying to figure
Charleston,
out the point of all this. And how it ties to RICO.
CHARLESTON.
I'm not talking about the actor shooting, we're talking about a RICO here. Remember that.
Was there a time that you were employed with the Atlanta Police Department?
Yes.
And how long were you employed with them?
22 years.
And in what capacity did you work for the Atlanta Police Department?
Crime scene.
All right. When did you leave?
2017.
Why did you leave?
I retired.
Congratulations.
Thank you.
Did you retire in the official capacity as, were you ever promoted during your time?
I retired as crime scene supervisor.
I want to direct your attention to the day of February the 10th, 2015. And I am going to approach the witness at this time to retrieve state's exhibits 1 Delta M to state's exhibits 50 Delta M, which are already shared in the discovery process and have been placed before the witness. Would you take a second to answer a few questions, Ms. Charleston? Have you had a chance to review the state's exhibits that are before you and you can open prior to coming in today?
Yes, sir.
And do those state's exhibits 1 Delta M through 1 Delta 49, 149 Delta M, fairly and accurately, well, what are they?
They are my crime scene photos for that day. Not for that day, for that damage to property on Hendricks Ave.
Okay, all right. And do those photos that you took fairly and accurately
Biz are pushing on You look across these businesses and you see positive operating leverage across the board. So that means that Andy Morton as well as Gonzalo are two looking at their cost structures at expenses that they can take out or productivity that they might improve. And so there will be additional costs that we have to incur. We incurred additional costs this year, but there'll also be additional productivity savings that we continue to tease out to ensure that we get to these targets.
And Mike, let me pick up on part of the second part of the question in terms of the progress on the transformation. As you know, as Mark's talking about, the transformation reverses historic underinvestment in cities' infrastructure. It enhances our risk and control environment. And it's a strategic overhaul, as we've talked about, that goes well beyond the consent order to simplify and to strengthen Citi to the benefit of all of the stakeholders we have. We are already a very different Citi today. We've made enormous change over the past 3 years, dramatically simpler business model, significant org change, so we align our structure to that model. So we now have a flatter organization with greater accountability. And as Mark talked about, through the investments in our transformation, we're focused on simplifying our operational model, modernizing our infrastructure, risk and controls, and all of that reduces risk as we go. We're well on the way in executing the transformation plans. We've made meaningful progress, as was acknowledged publicly by one of our regulators. And it's a wide range book of work. We've made significant strides in areas such as risk management, compliance, and accountability. And that's well beyond the big bodies of work about consolidating our platforms. So we had 1,250 retired since 2022, as Mark mentioned. Other areas of progress: enhance our stress testing capabilities. They're faster, more frequent, more precise assessments. We put in place new target operating models for wholesale credit risk, enterprise risk, price risk firm-wide. A huge body of work reducing risk in high-risk processes, such as payments and markets, through systemic preventative controls. We've been implementing the Zing platform. This is this strategic cloud solution for market risk analytics that values trades on demand and at scale. And we've embedded risk and controls into our performance management framework and tied that to compensation for the full firm. So these are just giving you a flavor of these big body of work that we are executing and getting done that's risk. I was very pleased that we closed the FRB AML BSA consent order, particularly given heightened risk and scrutiny in this area. That is the third consent order we've closed since 21. And we've been very transparent where there are areas in which our execution is delayed against our original timelines. As is the case with our data work, we take a step back, determine what we need to change in those areas, and get back on track and make the relevant tech and people investments. So I feel very confident about the strategy we've laid out for the firm, the deliberate path we're on, the huge progress we've already made, and that we will continue making with determination and with clarity going forward.
So just one follow-up. And you do have the amended consent order that's not new anymore, but is this a problem with your dealing with clients, or is this an issue with giving the regulators the information that they need? And just, again, you don't, just to confirm, you don't have an asset cap now. Is it fair to assume that you don't expect an asset cap anytime soon, or could you have an asset cap and we don't even know about that? Thanks.
We don't have any problems dealing with our clients. Quite the opposite. We're a source of strength for our clients in terms of the provision of their payments businesses, their trading businesses, the consumer credit businesses, all across the board. So I would say quite the opposite. We're a source of tremendous strength for them, and you see that in the results of this quarter, which were very pleasing across the board in every single one of our businesses. We are working closely with our regulators. We incorporate their feedback as well as our own lessons learned if we fall behind in an element of the consent orders, but do understand the breadth of the consent order work, as I laid out, and the meaningful progress we're making across multiple areas. And when we fall behind in an area, we increase the investments needed and look at any lessons learned in the approach and address it. So I feel very comfortable.
So again, we're not talking about issues as it relates to client information, client data, client reporting. We're not talking about information as it relates to financials. We're talking about regulatory reporting, right? And regulatory reporting, as I've mentioned in prior calls, we're a global firm. We've got over 11,000 regulatory reports. And we're talking about ensuring that the data that we capture at trade entry is the data that's required to ultimately show up on these various regulatory reports in the way that we need it, ensuring that we've got the proper controls on that front end, so we don't have to do a lot of the reconciliation and manual adjustments to that data in order to get it how we need it in the report, and ensuring that we have standardized rules and controls around that process so that we can do it as efficiently as possible. But this is largely around ensuring that we improve those regulatory reports that we have to produce by starting with the underlying data that's required to do that.
Our next question will come from Jim Mitchell with Seaport Global. Your line is now open. Please go ahead.
Hey, good morning. Mark, consensus expectations, and it's just another expense question in a different way, but consensus has you not hitting your revenue growth targets, and you're certainly free to disagree, and I think that's fine. But they also have your expenses at the high end of your 51 to 53 billion range in 26. I guess, does that make sense, or do you feel confident that if revenues do sort of disappoint your targets, that you could come in you should or can come in at the lower end of that range to help get to your ROTC target?
Yeah, so let's take it in pieces. So I think the first thing is that I think Jane and I have been very consistent with trying to give guidance on full year performance for the past couple of years. And we've largely actually delivered on that guidance. If you look at the top line growth since Investor Day, it's largely consistent with what we talked about in the medium term. If you looked at the expense guidance that we've given, largely consistent with that, including this year. Even as I look at the $80 to $81 billion revenue guidance we gave for the year, and you look at the 60.6 that we've done year to date, and you think about what we have to deliver in order to hit that target, that is achievable, particularly when you remember that we had a large Argentina devaluation last year. That fee momentum required in the fourth quarter is very achievable. And we believe that we will obviously hit the high end of the range for 2024. As I think about that outer year period and the guidance that we gave there, look, you all want proof points before you actually believe that we can deliver on that medium-term target. I'm pointing you to proof points. I'm hopeful that as you see those proof points through 2024, full year and each of the quarters, that you will start to believe in that revenue momentum that's required in the medium term. The fee revenue is a very good indicator. What we delivered this year and this quarter is a very good indicator of the momentum we should see across these businesses in the next couple of years. I also hope that you would then see that as we deliver on the expense target, that we have a path to continuing to deliver on the medium-term expense target, the drivers of which I mentioned earlier. Yes, if revenues come in short of the target that we've set for ourselves, you would naturally expect for the volume and transaction-related expenses and compensation expenses to come down in a commensurate way with that revenue decline. And you would also expect that we would look to see if there are other productivity opportunities that we can tease out in order to still deliver on that operating efficiency target that we've set for ourselves.
No, that's great color. I appreciate it. And maybe just as a follow-up on the capital question, I guess one thing that's been a bit of a headwind over the last year has been sort of growth in the DTA deductions, do we start to see that become a tailwind again? How do we think about that accreting back into capital over the next couple of years?
Yeah, the main driver of our DTA utilization will be driving higher income in the U.S.
Yep.
That's going to be the major driver. And as you think about each of the strategies that Jane has described for our business, you will often hear the importance of winning in the U.S. You'll hear it as it relates to banking and the activity that we saw, the strong performance we saw this quarter in Viz's world. You hear it as it relates to the wealth business and the importance of its growing investments, particularly in North America. You see it in USPB, which is largely a U.S.-focused business. That DTA utilization is about us increasing net income or higher net income in the U.S. And as we work to execute on our client-driven strategy, we're looking for opportunities to do that. We're incenting the business to drive that momentum. And that's what's going to give us, a higher utilization on a quarter by quarter in the coming years.
Our next question will come from Erica Najarian with UBS. Your line is now open. Please go ahead.
Hi. I think we've
Morning.
slid over to the afternoon. Good afternoon, guys. The first one is for you, Jane. As I speak with longer-term investors, they often offer, the commentary that, clearly, the path from the 7% ROTCE this quarter to the 11 to 12% is,
Sorry, but for those that don't know, Jane is the one who shows up at Congress when they all show up.
Progress is made. They really sort of want to see more, capital optimization. And this question is not really the same question I ask you about buybacks every quarter, but really maybe a progress update on Banamex.
Look at that. Just like that, 70 cents, guys. They're already damn near hitting 70 cents from 58. I should have went for it. That's a nice trade. That's a beautiful trade. You guys see why I'm watching Citi?
Unlocking that excess capital versus, taking it out of the P&L.
Yeah, I'd be delighted to, Erica. And I would also, just before I jump into Banamex, point to a laser focus on capital optimization. It's been a mantra for a long time in our markets business, in banking, and a discipline that we've driven throughout the organization. And I would say there isn't anyone at Citi that is not keenly aware of the focus around optimizing our capital, returning to shareholders, particularly given where we're trading, and making sure that we drive to returns. So if I turn to Banamex, our singular focus right now is the separation of the two banks, which we expect to complete in the fourth quarter of this year. This has been an enormous body of work because we are creating effectively de novo Mexico's 8th largest bank. We've just now got the core regulatory authorizations that we need to proceed with separation, although there are a few other approvals pending. We are in the very final stages and are working with our clients to prepare them for this switchover later on in Q4. Once the separation is complete, we will turn our full attention to the IPO itself. And the successful execution of the IPO is the highest priority for our head of international, Ernesto Torres Cantú, to run Banamex, and our incoming Banamex executive chairman, who starts this quarter, Nacho Deschamps. We plan to be ready to IPO at the end of 2025 based on the factors that we can control. But I think as Mark and I have always said, the timing is going to be driven by market conditions to ensure we maximize the shareholder value. And we're making the necessary investments, to continue growing share. And I was very pleased that Banamex outpaced the average market revenue growth year to date, good expense discipline being maintained despite the complex separation process and the environment. So I'm pleased with where we are, and I hope that gives you a bit of a flavor of what the path ahead looks
Nice job,
like.
guys. Take that money off the table.
In terms of the second part of your question, a couple things. So one, we've been seeing good growth in our Mexico consumer business. We've also been investing in it appropriately so to make sure that we protect the strength of that franchise as we prepare it for separation and ultimately for the IPO. Eric, if I understood your question right, if you turn to page 16 of the deck in the bottom right-hand side, we show the P&L for Mexico consumer for 22 and 23, and so you can see the contribution from a revenue and expense point of view. So about $1.5 billion in 2023, and we probably I think it's about $4 billion or so of TCE that we have associated with this business. So that gives you some sense for the contribution, but it continues to perform, quite well as we manage it through this process.
Perfect. Thank you. And as a follow-up question, I'm sure it is frustrating for you to see the stock reaction in a quarter where you had, PPNR strength and better expectations for net interest income in the fourth quarter. So maybe I'll frame the question this way for you, Mark. As we think about the gyrations in interest rate expectations globally,
think this has anything to do
maybe
with the
remind us is it fair to assume that
it's not as much? I just think it's the overall sector. You have semis. I don't think it's just their
domestically. How should we think about late fees? I know you told us that late fees going to $8 were part of your initial your initial guide for the year. And additionally, I think, perhaps because, capital markets is so strong across the board, across all of your peers, maybe that's not why you're getting, quote, credit for your strength this quarter. So as we look into 25 and having NIR be that bigger contribution to your revenue CAGR, maybe walk us through what are the other sort of, core fee strengths that we should look forward to other than FICC and banking remaining strong and coming back, that could, bring into that path to 26.
Okay. There's a lot there, but thank you for the question. I would like to see the stock reacting much more favorably because this really has been a strong quarter for us.
Yes, it's not,
and in fact, as you mentioned, NII, when you look through it, we've in fact taken our NII guidance up just a tad bit, as we referenced that the full year would be slightly down versus modestly down, with a fourth quarter that's flat to the third quarter.
NII?
And so that is an important takeaway. I mentioned the headwinds and tailwinds earlier, and we shouldn't lose sight of those. We will get lift from reinvesting the securities as those mature. We will continue to see volume growth, and those are important drivers of tailwind activity for us. You rightfully mentioned our interest rate exposure analysis that we do on a quarterly basis that reflects the asset sensitivity of our business. And last quarter, it was about $1.6 billion or so of a negative, assuming 100 basis point decline across the curve, assuming a static balance sheet and cross currencies. And as you look at that asset sensitivity, again, you rightfully pointed out that we skew non-U.S. in terms of the magnitude of that decline in NII should we see that parallel shift. And in fact, it's as much as $1.3 billion or so of that $1.6 billion is non-U.S. dollar related across 60 currencies. And so you'd have to see all of that move in tandem for that drag. And the U.S. dollar drag is about $300 million, assuming 100 basis point shift. And that's been coming down. If you look back over the quarters, we've been thoughtfully managing that down, and that's down to about a $300 million number. I would expect when we print the third quarter Q, it'll be down a bit more. And so, again, we are asset sensitive, but it does skew outside of the U.S. And thank you for asking the question, because I think it's important to remind our investors and analysts of that dynamic, which in many ways may be different from that of other institutions.
There was an error.
In terms of the late fees, we did say that we were including late fees in our assumptions, in our outlook that we've given. I'll state the obvious, Erica, which is that we want people to obviously pay on time, and we do everything that we can to assist and ensure that they do that. With that said, we don't have a definitive timeline on late fees, nor are we overly reliant on late fees to drive revenue for our firm. And so it looks like that decisioning will likely kind of fall closer to sometime in 2025. And so there is a small adjustment in the last quarter of our revenue forecast, but it's inside of the guidance that we gave and doesn't materially change, that in any way. And then the last part of your question, I think, was around NIR and the fee revenue. And as I mentioned earlier, I'm not going to give guidance for 2025, but I think your question was around where are we likely to see continued momentum as it relates to fee revenue growth. And I'd start with services, where fees were up some 33% year over year. And yes, we should adjust for the Argentine peso devaluation, but even if you adjust for that, it's double-digit 11% year over year non-interest revenue growth. And when you look at those drivers, they've been consistently strong. Cross-border transaction value up 8%, U.S. dollar clearing volume up 7%, commercial card spend up 8%. In the supplement, you'll see that it's mid to high single-digit year-to-date growth across those KPIs as well. We expect that will continue with our corporate clients and as we bring on new commercial clients as well. I'll turn you to, if you look at banking, we talked about already, so I won't kind of lean into that too much, but except to highlight a really strong quarter, in banking, in investment banking fees in particular, the rebound that we've been talking about, but importantly, us capturing share in that rebound and these important partnerships that position us well as sponsors start to lean back into the market, the investments that we've been making in talent and sectors we need to strengthen. All of those things are going to play to continued fee momentum, as we go into 2025. Wealth, again, really strong performance this quarter with revenues up 9%. But look at the client investment assets up 24%. The client balance is up 14%. That's driving fee momentum, and it's a keen area of focus for Andy and that team that he's pulled together. And it's a real opportunity for us, given the $5 trillion or so of assets that our clients hold away from us, and we're better positioning ourselves to capture that. And then finally, you can see kind of continued momentum on USPB. But it's across the board is what I'm saying, Erica, in terms of that fee momentum. And it is important. It's an important aspect as we think about getting to those medium-term targets and at 4 to 5% revenue.
Our next question will come from Gerard Cassidy with RBC. Your line is now open. Please go ahead.
Hi, Mark. Hi, Jane.
Morning.
Mark, you touched on in your prepared comments about growing the U.S. personal banking ROTCE to higher levels. And you mentioned two items, one, innovative products and the normalization of credit costs. Can you elaborate on those two items that will be, contributing to the driver, aside from the efficiency improvement that you also touched on?
Yeah, sure. So obviously USPB is a combination of, the cards businesses that we have in the retail banking business. And that cards portfolio has both branded as well as retail services as part of it. And even within branded, we have proprietary cards where we frankly have been looking to how we can come up with new innovative products. So an example of product innovation is the recent refresh that we did of our Strata Premier card, which was designed to drive acquisition and engagement with a new rewards offering. And with that, acquisitions are up some 7%, both quarter over quarter and year over year for branded cards. So that's an example of product innovation. Another one is we also launched FlexPay at Costco a few quarters ago, and you can see good installment loan growth as a consequence of that. up some 15% or so. And so that type of product creation is important to acquisitions. It's important to ensuring the card stays top of wallet, and important to kind of driving some of that top line performance. And then the other thing that I mentioned, you're right, was around cost of credit. And that really is the continued normalization of cost of credit. I mentioned a couple of times now the idea that multiple vintages are maturing at the same time, and that has to play through and for us to kind of see a more normal level of credit, and that'll be important to the returns. And again, we are starting to see stabilization in both the cost of credit line, but also in delinquencies, and that's a good indicator for us.
Very good. And just following up on credit, in the banking division, you guys mentioned the cost of credit was, I think, $177 million due to ACL build of $141 million. And it was due to a change in the mix in the portfolio. Can you share with us what that mix change was that drove this provision?
You know, there's nothing. It's a mix of kind of different asset classes and clients that we've lent against. There's nothing material or significant, in that number. When you look at the non-accrual loans, that ratio is still 31 basis points. So it's a mix change of our exposures, but nothing material there.
Yeah, and we continue to see a very healthy corporate sector really across the world.
Our next question will come from the line of Vivek Juneja with JP Morgan. Your line is now open. Please go ahead.
Hi. Two questions, Jane and Mark. One is on expenses and the other is on your response to the asset cap question before. So first one, expenses, an easier one. You had earlier in the year, you had said you expect about $700 million to $1 billion of severance charges in the 53.5 to 53.8. Did you have any in the third quarter, expect any in the fourth, and do you expect to be done with those this year, or any to continue into next year too?
Yeah, so that number was a combination of restructuring charges and severance charges or repositioning charges, and we break out, obviously, restructuring so that you can see those. And this restructuring component was largely driven by the org simplification. That'll be done this year. The normal severance or repositioning charges that we take as a normal course of BAU, you'd expect that to occur in any year, and it certainly will be part of 25 and 26 going forward. We did have some this quarter. I would expect that we will have some next quarter, but I don't see us being outside of, by any stretch, the range that I gave. And again, the range was for the combination of both.
Okay, thanks on that. And shifting to the asset cap question, Jane and Mark, we didn't hear a clear answer on A, do you have an asset cap? And B, even if you don't, what is the effective implication or impact of what the regulators have said?
So let me be crystal clear. We do not have a asset cap, and there are no additional measures other than what was announced in July in place, and not expecting any. So then the implications of what we're doing is, as I've laid out, we've increased investments in the areas where we were behind, particularly in the data related to our regulatory processes and regulatory reporting. We're increasing investment behind it, and we continue to make progress, material progress, on the orders in place, including closing the BSA AML order this quarter, the third order closed since 21.
And you don't expect anything meaningful, Jane, that would impact business? Like there was this news story about the China some license that you didn't get approved by the regulator. Anything more meaningful like that might be occurring that may be...
Absolutely. Let me be crystal clear. Absolutely nothing.
Okay.
Right. He
Great.
said that.
Thank you.
Like, Like,
Our
is
next
there
question will
anything
come
you
from the
want
line
to
of
tell
Matt
us
O'Connor.
before we end this? Like, that was some shady shit. That was a little
Hi, just a couple
conniving.
of clarification questions. I guess first on Banamex, are you on track to still IPO at the fourth quarter of next year, or does it just get pushed out by a quarter with the legal separation taking a little bit longer?
Look, I think as I mentioned in response to Erica's question, we plan to be ready to IPO at the end of 25 based on the factors we can control. The timing is going to get driven by how we maximize shareholder value, and that will be market conditions. So that's where we stand.
Okay, so I think that means it's by the end of 25. They talk about 1Q26, but that was kind of my clarification question on that.
I
thought you needed 4 quarters. I thought you needed 4 quarters after you legally separated it to officially IPO it.
We believe, as we stand at the moment, we would be ready to IPO at the end of 25. It's much more a focus on what the market conditions at that point will be.
That's a nice reversal.
And Mark and I are very, very much focused on the shareholder value and maximizing that over rushing over one quarter versus another quarter.
And there's no hard rule on. Sorry, go ahead.
There isn't, there isn't a hard rule on you have to have got full quarters after you have separated.
I see. Okay, that's super helpful. We just haven't had that many of these, so that's helpful.
Yeah.
And then just separately,
that was
I think in the
damn near
prepared remarks,
100%.
you guys mentioned
75
a modest provision within services for some of the unremitted corporate dividends. And I just want to clarify that and what country is that? And I guess I thought there wasn't really much liability to you guys from that. So any clarification on that? I know it was a small amount, but that might be helpful. Thank you.
Sure. It's a small amount, and if you look in the back of the deck, we have a page on Russia exposure. It's related to that.
Okay, but still feel like there's not risk to you guys from all those kind of trapped dividends, and I guess why take a small reserve if there's legally no risk to you guys?
Well, it's the way we treat the exposure there. We're following kind of the guidelines on how we need to treat exposures, in the country that we aren't able to distribute to clients, but we actually have to hold on their behalf, and so we have to book a reserve associated with that, and so we do that. We obviously show on the page what the exposure is in the event of a loss of control, and you can kind of see how that ultimately nets out. But
thanks, Joe, for making life harder on everyone.
What's required for reserves of that nature.
Got it. Okay, thank you.
Yep.
Our next question comes from the line of Ryan Kenny with Morgan Stanley. Your line is now open. Please go ahead.
Hey, thanks for taking my question. I have one from Mark. So you mentioned that services NII is a tailwind as rates decline. Can you just unpack how that happens? Is there any benefit from swap roll-off or pay floating swaps that we should be thinking about that's embedded in that statement?
There are a couple of things kind of to keep in mind on the services business. So one is obviously this is a client business. It's not just a deposit-taking business, and so how we think about pricing to those clients becomes really important. You've got the U.S. and non-U.S. dynamic that's playing through where, for institutional clients, we've largely been holding to the higher betas that we saw as rates have ticked up, again, with the relationship in mind. And we have some offsetting pressure outside of the U.S. as those betas kind of catch up. But I think importantly, you also heard me mention the reinvestment into securities at higher yields. And that reinvestment or those higher yields ultimately play out through the businesses. And so, that will show up as part of kind of NII as we think about services, but the other businesses as well. And so those are important components of the NII story for services. I think when you look at
Now that's
but
strength.
in-quarter
There you go. You're hitting
performance and
225.
NII is down 5%.
Might be able to scalp a
A
reversal
big
off
part
of
of
it
that
up
is
there,
driven
but I
by
would
the
not fight that strength.
Argentina
gears are down
lower
1%.
rates
This thing's up
movement
1%.
in the quarter versus last year. So lower rates we're earning in Argentina playing through that line, particularly in this quarter. If you adjusted for that on the NII line, it would be flat to slightly a little bit better. So that's really what it is. It's kind of management of client relationships as well as the higher earnings on reinvested securities contributing to that, as well as volume from operating account growth that we expect.
Thank you.
Yep.
Our next question comes from the line of Saul Martinez with HSBC. Your line is now open. Please go ahead.
Hey, guys. A couple quick questions. First, just a follow-up on Banamex. Jane, as you know, there are concerns about judicial reform in Mexico and the implications for rule of law, and Mexican asset prices have suffered as a result. I think the largest Mexican bank trades at something in the neighborhood of 7 times earnings. If market conditions don't improve and Mexican asset prices remain depressed and these concerns persist, then what? I mean, do you just wait till market conditions improve, or how do you think about this process in the context of what seems to be a deteriorating macro backdrop for Mexico?
Yeah, we've got to wait and see what the market conditions will be. But the North Star for me and for Mark is crystal clear. It is optimizing and maximizing our shareholder value. So if the conditions are not appropriate at that time, then we will wait until they are. In the meantime, the business is performing well. It's accretive to our returns. It's not a drag here in any shape or form. So there is no there's no need to rush for a suboptimal result here. But we will IPO and we will exit Banamex. But we won't do that in a reckless manner.
Down there coming in.
We'll be disciplined about it, as
Take
you'd expect us
advantage
to
of
be, and as I think we're demonstrating
Just
that
give me a pullback,
we are on
please.
multiple different dimensions.
We're not going to get it.
Okay, fair enough. And then I guess a follow-up on the U.S. personal banking.
I want to get long, guys.
ROTCE improvement, and the normalization of the cost of credit seems to be a big component of that. But Mark, can you just remind us, where you are in terms of cost of credit versus what you would think a more normalized level is for branded cards and retail services? I guess how much of a tailwind does a more normalized credit environment entail in terms of credit costs?
Again, I don't want to get into 2025 at this stage. I mean, I assure you we will give more color and commentary on that as we get into, the fourth quarter earnings in January. What I will say, again, as you think about these businesses, we do see continued top line. We do expect continued top line momentum. We've had 8 consecutive quarters of positive operating leverage in USPB, 49% this quarter. So we're managing the expense base well. We think there's more upside to the top line. We're very focused on growth across the portfolios. And I do think that cost of credit, again, if for no other reason but the compounding effect of those vintages maturing, as well as kind of inflation starting to come off, rates trickling down, that should be better for the consumer and should start to play out in both the macroeconomic scenarios that we run for CECL purposes, but also ultimately in delinquencies and NCLs. And we're starting to see that improvement in delinquencies in its stabilization already somewhat. So I don't want to get into guidance, but that's kind of how I think about the drivers or contributors to improve returns over the medium term.
65 calls.
Our next question will come from the line of Mike Mayo with Wells Fargo. Your line is now open. Please go ahead.
Hi. Thanks for the clarification on the asset cap. question that I asked earlier. And I know you are limited in how much you can say about regulators, but just to be clear, because a lot of email traffic going back, you did say there is no asset cap and you don't expect one, and you don't expect other additional actions at this time. Okay, thank you for clarifying that.
Let us put in a double bottom to try to extend higher to the end of the day.
I'm an ex-regulator. Paul Volcker was my hero.
Pull it back, Jack.
I respect regulators.
We're almost at 10 likes.
And nobody wants to see you cut corners to get to your $51 to $53 billion of expenses. But I'm just wondering, and you have consolidated systems, apps, layers, bureaucracy, and you're divesting lots of activities. So it's just, even the amended consent order was surprising because you have taken so many efforts. And if you should have had an amended consent order or other actions, they probably should have been in place 1, 5, 10, or literally 20 years ago. So that's just confusing on the outside. So with that said, is this a matter of spending more money or about doing these tasks more intelligently? In other words, if you put more gas in the tank, the car's not going faster. So is it a matter of resources or just being more intelligent in terms of resolving some of these regulatory issues?
So let me break it down to a couple of pieces. So I start off just remind everyone the consent orders are very, very broad, and this the action that was taken was because we were behind in a narrower area, which is the data, particularly regarding our regulatory reporting, where we're behind as the main area of focus. We moved swiftly to address it. We're very transparent about it from early on in the year that we were falling behind on this. And overall, I'm pleased with our progress. And as you say, Mike, I listed a number of areas of progress and trying to make it as tangible as we can, given what we can and can't say, as this is supervisory. I'm pleased that our businesses continue to improve their performance while the transformation is going on. They're the two priorities we have this year. So I think effectively, yes, we can walk and chew gum at the same time. And the huge benefit of all of the simplification on the business, on the organization, the other efforts, is making it easier for us to execute and be very focused. Well, maybe, Mark, I pass it over to you.
I think your question's helpful in the sense that you said, is it kind of a rethink on our approach, or is it the need to spend more money? And one of the things that we've done, Mike, is take a step back and look at how we've been approaching data, for example. So this is, and we have made some changes to our approach. And those changes relate to how we get after resolving data issues that are identified, ensuring that there's engagement from the front-end business, from the functions that are most relevant, and that there's consideration for what's required on reg reporting, in order for us to get that process streamlined and correct. And so there are aspects of this that require a change in our approach, and we've been taking that change and making that change, and we'll make more changes accordingly as we've taken that step back. And then there are aspects of it that require, at a minimum, review of what is causing either the delay or us not moving at the pace that we'd like to move, or that our regulators would like. And that is, in fact, what the resource review plan was that was in the amended consent order. It was basically a statement saying that you need to ensure that you have sufficient resources and that they're allocated towards achieving the timely and sustainable compliance. And so part of our process is, in fact, that, taking a regular review of what is on track in the way of our milestones and deliverables, where we see things that are being delayed or going red. What is the underlying root cause for why? Is it a resource issue where we need to put more dollars and people or technology to it? Is it a process issue where we need to reconsider our approach? And on the other side of that root cause, taking action to fix it. And so your question is spot on. The answer is that in many instances, it will be a little bit of both. But importantly, our processes include that type of analysis and assessment so that we can get after the execution on this in an effective way. I hope that helps.
And all of this drives productivity and other
I
benefits
missed
for
it.
our shareholders, as well as making sure that we're strengthening Citi from the regulatory perspective.
And then last follow-up, to the extent that you see...
I was just going to say, man, that'd be real cool if we could get 41, 38 to 38, 39 to 41 cents. And then it just took off after he was talking. And the market's starting to rebound. I don't think this pullback had anything really to do with their quarter just yet. From the way I see it, I think it was more so the market in general.
Yeah, it's clearly, given where we are trading, it is we're very focused around the opportunities to buy back stock and mindful of the importance of it. And equally, yes, we are proud of the performance of the franchise this quarter. It was a very strong quarter and an important set of proof points for our investors that we are on a deliberate path. We're making the progress that we need to, and actually pretty excited about the path ahead of us and the potential that we see.
Damn, that's not a good look.
There are no further questions. I'll now turn the call over to Jen Landis for closing remarks.
Damn, bro.
Thank you, everyone, for joining the call. Please follow up with IR if you have any additional questions. Thank you.
This concludes Citi's third quarter 2024 earnings call. You may now disconnect.
I wonder what they're having for lunch. I don't know why. I don't know why they sold off like that, but what I do want to do is let's go back through their earnings. I should have just did earnings. See stock earnings. I know. Just keep it simple. You did too much. All right, well there you go. It's pulling back 47.49. I was trying to get the high 30s, low 40s. Okay, number of employees. Think about this, guys. They have 229,000 employees. That's insane. So financials 2024, 2023. I'd like to be able to go back 5 years. The rest of these names, for the most part, are up. Bank of America, J.P. Morgan, not sure. Why Kraft Heinz finds itself, why Ketchup finds itself between Wells Fargo and J.P. Morgan, not sure about that. I wish there was a way here that we could go back and make things real easy. We'll say 4 years. Past 4 years. Let's just see what the NASDAQ has for us. See, this is for today. I knew this was going to happen. Okay, hold on. So here we go. All right, so quarterly earnings surprise amount, yearly earnings forecast. This is their forecast. Yearly for quarterly consensus. Oh my God. There's got to be an easier way to do this. I got to keep this level 2 up. Give me 1 second. So we're there. 43, 44, 45. Historical. Okay. Okay. Market chameleon. Let's go. You need me to sign up, huh? Instead of just putting it up on a chart like this. Okay, so here we go. And today is 6:30. Today's the 10:15.
SMCI
All right.
Supermicro getting a pop here. Company adds new petascale JBOF all
I knew it, guys. SMCI.
failed 3 DPU for AI data pipeline acceleration. That's CD Michael Charlie India.
We had this on our list. Hold up. Damn it. Market's going too quick for us. Okay, Citi. So we are there. 38, 39 cents. What's Citi doing? Shit. And there's so much going on right now. Like, I love earnings season. I love it. I fucking love it. I got to be honest, guys. I still want to go long. I still want to try to take this. I'm just waiting for this 1 minute chart to pull back a little bit here. And I would like to attempt a long on Citi. Alright, I would like to try it. I don't like that they're down and everyone else is up. That's not a good look. That's not a good look. I don't understand. That's a nice pullback. Hold on. Oh, this is the problem. This is the problem. They broke 65. I think that was the issue. They broke this major support zone. Yep. 65. 65 was it. Shit. Guys, SMCI is bouncing. At some point, the risk has got to be... There's got to be a risk to reward setup here. Where we can run back to these previous highs. Today's Tuesday. I missed it. We had a chance to get it at 33 cents right there. Damn. 5 minutes pulling back now. Oh, shoot. Wow. Okay. Fuck, they're already up to 36. Come on, man. Citi, please. Pull it back, Jack. Pull it back. I can't. I'm not doing it here, guys. I need the low 30s. We just saw it. And look, you're bouncing with low volume here. You should still have a little more room here. I'm going to throw out a limit order at like 35. I'll probably... Oh, my God. No. That's 10 cents on 30 cents. Do the math on that percentage, guys. That's why I'm why I'm being a little girl about it. We literally had our window right there. We might get it again. We might be able to get this 63.51 area. We might. Let's just hang on. 63.51. You can give it to us. Come on. It's already made its support. That's the level. Pull back. Double bottom right there. Come on, man. I put out a limit order for 35 cents. I have a limit order out for 35 cents. Let's see here. My stuff's messing up for whatever reason here. All right, I'm filled. I'm filled. I knew it. I knew I should have dropped it. I knew I should have dropped it. It's all good. I was going to go down to 34 or so, but I figured, you know, don't try to be too perfect. Oh, God. Ultimately, I would like to get a bounce here. Let's go back and see what... Holy shit, I'm in trouble, aren't I? I just caught a falling knife, didn't I? Yeah, they're getting short. I feel like this was a recovery of the down move. That was profit taking there. Fudge, that sucks. It's all good though. Yeah, that's not a good look. That's not a good look, man. The fact that we just had no volume come in to help pick this up, oh, that's not cool. And you filled the gap right there. You just turned the gap into resistance. I gotta be honest. I think that's what that was. That was profit taking from that short. So we'll see, man. I don't see why Citi had such a bad quarter. I'm trying to go look now. I'm going to actually start pulling off some profits here because I don't even want to. Oh my gosh, what is going on with my stuff today, man? Alright, I got one out there for 40 cents. Let's go. Pop it, pop it, pop it, pop it. Let's go. I got Phil, guys. Nice job. That's all we needed, baby. That's all we needed right there. 41 cents. As soon as I put it in, it popped. It got right into my order. I still think that this is... I don't know. I honestly don't know. You got to get above this gap. I think this could actually turn out to be a big winner. And it's just what I think. Look at the volume coming in. Let's go look. Let's go find out. I don't want to take any guesses. I think this is, they overkilled this. And if you, I'm just saying, the risk to reward is worth it. If you see another run back to the highs, which it's trying to do now, you got to get above $64. Let's go look at the earnings. Let's go see here. You can see the 64 on the daily chart. Look at that level. It's a major level. You pulled back, hit that 20-day. Now buyers are stepping in. They said, okay, we'll step in. You had shorts come in and hammer this thing down. Remember what JP Morgan did. Don't forget what JP Morgan did. Did the same thing. The earnings came out, right? Let's go. Let's go to a 5-minute chart. You remember what happened? What happened? Earnings came out and it sold off. It sold off on the earnings call, I should say. And then from the earnings call, it reversed. It reversed after the earnings call. 1877 cause for kids. Cause for kids. This song is crazy. Like, feels like it would make people want to commit suicide. Bank of America is struggling a little bit here. Earnings call bounced. It's kind of just sitting there. What is drug doing, man? This thing is still going. Holy shit. You gotta be kidding me. $20. $20. Wow. Insane. We were talking about this morning at $4. That's a big hitter there, guys. Big hitter.
Says we're officially launching the first ever Roblox Teen Council, 5-month program in the U.S. designed for us to collaborate and hear from teens on platform features.
I'm going to pour some coffee. Here's some news on Roblox. I'm gonna go pour some coffee, you guys. So far, what is that? 5-0, 4-0 from last week. I'm telling you right now, guys, this thing gets above 64, and it very well could. If it does, say hello to my little friend. 66. And that 30-cent call at 65 cents should be 200-300% if you get to 66. Especially if you get there by today into tomorrow. Yeah, it's got a 30-cent delta. So, read them and weep. 369. Damn, she fine. We got a few more days left in the end of the week. Till the end of the week. Damn, she fine. SMCI.
Donald Trump on Bloomberg TV.
Damn, this is a high volume consolidation. We wanted a low one. All good. All good. All right, I'm going to grab my coffee. And we're going to look at this inverse head and shoulders here on the SPY. I don't like the left shoulder on that tail there. $1.88 cause for kids. Oh my god, that shit just is like, you could throw that song in a horror movie, bro. Alright, so I'm going to go pour this coffee. I might run to Wawa. I don't know yet. It's 1 o'clock. I may run to Wawa. Appreciate you guys. We are trying to get to 10 likes. I did write 15. I'm sorry. 10 likes. We're trying to get to 10 likes here. Watch this inverse head and shoulders here on the SPY. I think we did a good job. If you pull up a 4-hour chart, if you pull up a 4-hour chart here, one of two things. We have this level here down at 574 to 575. But before we worry about that, we need to focus on 580. So we have 580, 577.50, 574. Those are the three zones I'm watching, just like the motherfucking police. The three zones. All right, I got the hood on lock. All right, got the hood on lock. All right. The thing is, I'm for the people. So sell your shit. Just stop killing people. Tell them, go in that damn abandoned house. If they're going to do their junk, just keep it off the streets and keep it away from the kids. I get it. Y'all ain't got no opportunity. I get it. I feel. I want y'all to get your hustle. I'd love for it to be another way, but sometimes it just is what it is, and it's out of all of our control. So, I got the three boroughs on lock. All right, 380, 375. Sorry. 580, 577.50, 574. The three boroughs. Got them on lock. Streets is on lock. Now, this support level from yesterday, it's a mild support level from early in the morning. You put in this little, whatever you want to call it, head and shoulders. Okay, well, VWAP is now there, and you're underneath that support level. Just like the judge, when you see the judge, and the judge is like, what do you think's going to happen? You're out there smoking dope and selling dope. What do you think's going to happen when you break support, huh? It becomes resistance. Yeah, I know. You hang with dogs, you catch fleas. Anyway, so keep an eye on VWAP, and if we run a test to VWAP, again, remember the IWM is still just having a party. It doesn't know shit got shut down, right? It doesn't know that the phones are jacked, or whatever you want to call it. The phones are tapped. I don't know why I said jacked. Because the IWM seems like it's jacked off its tits, and it just doesn't care what the market's doing. Look at it. Look at it. Look at it. Just like, yeah, I'm having such a good old time. Having such a good time. Shit is going to hit them like a ton of bricks as soon as that shit wears off. You know what I'm saying? Shit is going to hit them like a ton of bricks when that shit wears off. All right. The Dow. The Dow's probably okay. That's like saying the Dow can handle its beer. City can't do nothing to the Dow. It's down, but it's still in an uptrend on the day. So It drank City like it was nothing. That ain't nothing to the Dow. That's puts that stuff in his Cheerios. What else do we have? What else do we have? What else do we have here? So really, it's just tech, you guys. So let's talk about Snowflake SMCI. Snowflake is still up. It's one of the stronger names. Actually, it's red. It is red. I'm not gonna lie to you. You know, even. But I feel like it's just holding up better, and that's all it's doing is holding itself up. That's it. It's not doing anything. So is it holding itself up if it's not doing anything? All right, support level looks like it's picking its direction right as we speak. Look. The cameraman comes, we start doing an interview, and they all come out. Now we're on the chase. Now we're on the chase. Try to tell him to pull over. My ear's ringing. Fuck. Major support level down here. I may need to get my CMT, but never mind. I'll talk about it later on. There's no real reason to talk about it right now. Alright, dude, drug is still going? Are you serious? Snowflake's falling, guys. This could be a nice little short here. So every time I click and backspace, it doesn't want to do anything. There's your first rejection at $20. I had mentioned this a little while ago. I said, you know, you need to worry about $20 before you worry about $50. Like, if you find yourself doing that, sometimes I'll do it, but I'll backtrack.
ULCC Frontier pilots vote overwhelmingly to strike. Uniform Lima Charlie.
Wait. Uniform Lima Charlie? What the fuck is this? I don't even know what? Hold on. Let me see here. I can't really see. But as I was saying, worry about getting through, like, because it's funny, like I can see here on all of the on like these forums, like, even I'm sure Wall Street. I'm not looking at Wall Street Bets right now, but they're like, will we get to 50? Are we going to 50? Like, they're asking, like, other people, like, are we going there? And it's like, let's worry about $20 before we worry about 50. In the first gap, right? That gap happened here, where the halt. So worry about the upcoming obstacle. This is insane. And we were watching this down from like $3 to $4, and then I was like, damn. So this is 700%. Fuck. What are you gonna do? What are you gonna do when they come for you? This is a lunchtime breakout. Be careful. Be very careful. All right, guys. I'm gonna go grab some coffee. I will probably, yeah. I didn't get lucky there, but that was a nice trade. So listen. Why does Citi keep doing this? Like, for real. Like, unless it's gonna sell off, it needs to sit its ass down and hold support and do its motherfucking job and get above 64. And just hold 64 and hang out. I don't understand why they're struggling. $1.52, $1.51. Okay. $1.50. What is that? A 8? Is that a 6? It's a 8.
APO, Apollo, AMZ, and Amazon. IYR final trades on CNBC.
3 o'clock Eastern, we have Jenny Johnson, Franklin Templeton, President and CEO, and Matt Brown, he's the host here. He is the founder, chairman, and CEO of Pace, and we'll catch up with both of them in a couple hours. Let's do final trades. Joe, what do you have for us today? The Joe T ETF is 28% financial exposure. Apollo, private equity, sticking with the theme of the conference. Okay, all right, Josh.
All right, guys, I'll be right back, okay? Good luck. I'm going to put this on here. I'm going to put on some, do you guys want Charles Schwab, Bloomberg, CNBC? What do y'all prefer?
SMCI and NVDA, Supermicro, liquid cooled super clusters for AI data centers started by NVIDIA.
See, SMCI is getting news. And NVIDIA. This is why I still have it on my watch list. This is crazy. Whoever is saying, oh my god, fucking people are idiots. You guys see all this news coming in here? All this news flow? They're really trying to get semis to bounce back to get this market going. Read it and weep. Remember when it first started? I had mentioned it. For anybody that was here, I was talking about how the sentiment started to shift. So I'll be right back, okay? I'll be right back. I promise. I promise. I promise. I promise.
We were actually
and we'll look to trade some more at the end of the day.
High. So again, drifting towards those session lows right now.
Keep your eyes on City if you want. You watch whatever it is you want to watch. But I'm telling you guys right now, shit, I want it. Oh my gosh, Strokes halted again, and that's okay. Let them have fun. And that's a rejection. I would like to put in a double bottom here. See where we can get these contracts. I mean, this thing could really start to pay. Hit that like button, subscribe. Buy me a cup of coffee, please. Donate to the stream. If you guys have learned anything, if you guys just want to give back, continue to help this be free for everyone. There's a lot of things that I would like to do with this channel, a lot of places I would like to take it. With your help, you could help me do that. I'd like to be able to bring on traders. So listen, if you're a trader, reach out. Or, you know, come in the comment section, email me, follow me on Twitter, like message me on Twitter. Ask to follow me and then let me know in the comment section, whatever. We could do a podcast, we could talk, we could have like a Zoom video, we can go over charts. These are some of the things that I would like to do. So hit that like button for me. Help me get trending. Subscribe. Follow me on Twitter. At Ivy League Trades. At Ivy League Trades. And you guys can, you know, donate to the stream any which way you would like. If you would like a one-on-one, if you want to donate to the stream and would like some one-on-one help with just, you know, a long term, because I don't just do trading, learning and just getting into stocks. Okay, the one thing that I do bring is the fact that your data, your personal information is safe, and I think that's the most important thing that people don't think about within this industry, and the same people that aren't the industry are the industry. You know, so whatever its uses are for, you know, whether they make money from your data one way or another, they do. Okay, whether they directly sell it or they use it to keep track and follow you around for the rest of your life, it's one or the other. Where there's a will, there's a way. So, you know, outside of YouTube and Google, So thank you guys for being here. We're almost at 10 likes. 10 likes is our goal today. Contribution link is in the description if you want to buy me a coffee, if you just want to give back, and more so that money's going to the stream. It's not going to me. I've made my money, and if you want to help us with the stream, it's going to it costs some money to get some people on here and stuff like that. I've been reaching out the past couple days. I've been reaching out and kind of figuring out where I want to go with this. But thank you guys. I'm going to run to the store. It's only 2 seconds away, and I will be right back. I love you guys. Please, let's get us to 10 likes.
The table.
Right. The complete evaporation of geopolitical risk with regard to this market. So the question is, this decision by Israel to not strike Iranian oil facilities, is that something that's going to hold? If it is the case, will Iran essentially stand down? Is this going to be an Israeli strike like we saw in April, a very targeted strike? Last time it was the Isfahan air facility. Is it going to be something like that? Or are we going to see a serious Israeli strike on Iranian military sites? Will that potentially create an escalatory spiral? Remember, Brian, Iran has already warned countries in the region that if it provide any assistance for an Israeli strike on Iran, they could be targeted. So the question is the Israeli action going to lead to an off-ramp or escalation? Yeah. I think it's too soon to say.
That's it. And Citigroup had a note out this morning, John, I don't know if you saw it, where basically they said our base case is Brent at 60. There's just a lot of oil in the world. China's slowing. But they also have a worst case, this is Citigroup, a worst case scenario of 120 on Brent if things were to, big if, I get it. Talk to us about where oil stands fundamentally versus geopolitically.
Well, I think you can't exclude completely the geopolitical risk factor.
No way, zero, right?
Right, no, but I will say, I mean, looking at what Iran has tried to do over the past year now, to me, their military prowess and or their mettle or stomach to do something significant just is completely lacking. So I have a hard time anymore pricing in much in the way of a geopolitical risk premium as it relates to Iran. If I were any of Iran's neighbors, I wouldn't be one bit afraid of any kind of retaliation from them. Fundamentally, though, Brian, look, when you have the United States position continuing to be what it is, #1 oil producer, major exporter of crude, recent ramp up in gasoline exports to the rest of the world, the LNG exports that we're doing, the Guyana reservoir,
Brazil maybe going to 4+ million by next year.
Libya finally figuring out that it's really not in their interest not to sell their oil to the global market and play along necessarily completely with the OPEC plus quotas. There's supply abounding out there, and you have China also as well. I know you're having a guest come on and talk about that, but China is also sitting on this Middle East situation, telling the players involved, don't disrupt our oil supply and wreck our economy with prices that could go easily.
John, quickly, fair to say, you could make a pretty, I think, salient argument for $50 oil, right? I mean,
no doubt about it.
Just supply demand taking the risk off the
Especially
table.
if the Saudis do follow through on adding more oil to the market.
So Halim, I'll go back to you obviously on that because I know who you talk to, and it's the highest levels. Okay, we'll leave it there. And we'll say this, which is, we always talk about the Fed put in the stock market, the sort of the idea the Fed's got your back, they could cut rates, do some stuff. Is there a Saudi put? Because if something were to happen to Iran, the Saudis, I think, very quickly could fill that hole in the global markets.
Well, first of all, I would say that the White House was sufficiently concerned about Iranian retaliation and escalatory spiral that they really worked very hard to get Israel to walk back its potential target list. So I do think they're taking seriously in Washington the potential that Iran could escalate. And we certainly saw in 2019 that Iran did have the capacity to hit regional energy infrastructure and quite significant regional targets. But if we think about potentially, some type of blow up or de-escalation, the question will be, what will OPEC do? And I do think the Saudis will be in a very sort of cautious mode about bringing barrels back if there is some type of escalation. They'll want to see that there's a physical supply disruption before they really jump in front of this. And they also have an OPEC deal that extends through 2025. I don't think they want to break that up. But the question that John was bringing up about what the Saudis are going to do in December, that will really hinge on what happens with Iraqi production, Kazakhstan production, whether they comply with the terms to compensate for overproduction. that will dictate the pace with which Saudi Arabia brings back their voluntary cut of 1 million barrels, not the collective cut that extends through 2025.
But the one thing I do want to remind the audience about, John, is what we talked about. Yes, the IEA is trimming its demand growth forecast. I want to remind everybody they still see growth. And I think that they're not cutting from where they were. It's just a slower pace of add. I do think that is something we need to remember, even with a world that is awash in oil.
And things could tighten up, Brian, and the structure of the market does reflect that. So we're not out of the woods. We're never out of the woods with this.
It's oil.
It's exactly.
You're one mine in the Strait of Hormuz from a $10 pop,
or even the talk of one.
Yeah,
for sure. But I do believe that, again, given these other reservoirs, given the Saudi spare capacity, another overhang for this market, that it's really hard to make a bull case for oil, short of the Middle East situation really devolving into something spectacular.
And Halima, the White House certainly can ask Israel to do specific things. The White House cannot tell Israel to do. Israel is a sovereign nation that will ultimately do what's in the best interest of its country and itself. So there is still that risk that, to your point, I think you alluded to it at the top, Israel strikes something, not energy, Iran does something back, and then Israel says, enough's enough.
And Brian, even if you read that Washington Post article closely and based on our conversations we had in DC last week, administration officials do acknowledge that if you have Israel hit something hard in Iran, like let's say they do a serious strike on a military facility, let's say there are casualties in the Revolutionary Guard, there is a significant chance Iran could respond back in a way that just escalates this. And it's not clear at all whether Israel's taken off the cards a potential strike on Iran's oil facilities in that type of scenario.
Yeah.
Are they holding the oil card in reserve depending on what the Iranian response looks like?
Yeah, and there's a big, listen, Iranian politics, I'm sure you know a lot more about it than I do. It's kind of a vague world from the Western side. We don't get a lot of real inside baseball. But everybody I've talked to and everything I've read, including your own stuff, Halima, suggests that while the Ayatollahs may be the more aggressive, that the relatively new president of Iran is trying to strike a more moderate tone on the domestic economy. So there is still some good news chance that Iran does, for lack of a better term, stay calm. Is there not?
Well, that is the question. Will they behave like they did in April? Remember, when they had that Israeli surgical strike in April, the Iranians came out and essentially said, okay, we're done with this round for now. The question is, who's going to be calling the shots in terms of what happens with the Israeli strike? Will it be the Iranian president? He's not seen as someone having a lot of sway over military affairs. Will it be the Revolutionary Guard? And people say that Iranian ballistic missile attack that we saw earlier this month, which went beyond what the White House was actually expecting, it was the guardsmen who basically orchestrated that. So the question is, who is going to be dictating policy in Iran when Israel does launch its strike?
Brian, I would just have to point out that the Israelis took out a senior Hamas leader in Tehran itself during a funeral time. If the Iranians aren't going to respond to things like that, when now they've taken out 3 senior Iranian generals from the IRGC and still nothing, then these sort of flailing missile attacks on Israel twice in a row, God willing that nobody got seriously hurt, really, except there was a casualty or two, not to make light of that.
Yes.
But the worries about Iran, I think, are considerably overblown.
Well, the market clearly agrees with you because you got oil below 70. And I would add this. I look at marine traffic, which is the live website for tankers. The Persian Gulf, Arabian Gulf, is full of ships. So clearly the shipping market and oil buyers and sellers right now have not been too scared off. Halima Croft, John Kilduff, thank you both very much.
Thank you, Brian.
All right. Now, let's get to the China angle of this story, because this goes to the demand side, because we have seen a slowdown in demand in China, in part, well, a lot of reasons. Number one, pretty fast-paced, cheap EV adoption, slowing economic growth, demographic changes, more people traveling by train, a lot of things. Let's talk more about this now. Joining us, Derek Scissors, Senior Fellow at the American Enterprise Institute. Derek, thanks for being patient on that. Where does China demand stand right now?
It's hard to imagine a big spike in China demand. The economy right now is quite weak. We're going to get GDP Friday morning in Beijing, and they're probably going to say, oh, 4.9% GDP growth or something like that, near 5. But it's not credible because Chinese money supply, including the monetary figure that's most closely linked to GDP, they already announced it declined 7% in the first 3 quarters. You just can't have narrow money, which is what declined that much, and then say GDP, which is a transaction measure, rises 5%. So they're going to exaggerate the strength of the economy. It's weak. We know that from sentiment. We know that from their own monetary figures. And we also know it from stimulus. And the stimulus case, I think the oil market has responded properly to Chinese stimulus. First of all, it's vague. But second, it looks to be mostly transfers to local governments. Local governments have a debt problem. The central government takes over the debt problem. Fine. But that's not really stimulus. That's putting an underside into local government debt risk. They might spend more money, but they might spend more money on EVs, as you mentioned, or solar, or other projects. So there could be a little bit of an upside in Chinese stimulus, but that weighs against the long-term trends that you mentioned and the current weakness of the economy. I think the oil market is reading China right, that there's not much to be optimistic about there.
But what about the rest of the world? I understand China is a massive consumer of petroleum and refined products, but India now has more people than China does. This massive growth in non-industrialized nations that are becoming industrialized. And to my earlier point at the top, Derek, OPEC and the IEA both, they have different numbers, but they both still see growth, just slightly slower growth.
Right. I think both, if you looked at India or Indonesia, which is, getting up near 300 million people itself, for the future, those are both bullish for oil. I think the case against is that can they replace China? Maybe not, as we lose Chinese demand. India is absolutely going to demand more oil. It is a huge population. They're going to have an increase in transport using oil, both by car and by rail. They're not getting there very quickly, though. So if you want to be sort of long-term semi-bullish on oil, India is a good story. I think Indonesia is a good story. But it's not going to push the market up in the fourth quarter or the beginning of next year.
Yeah, and we look at, again, oil is one of the reasons I really like talking about this market, covering it, is that it's supply-demand. There's geopolitics, but it is one of the few truly global markets out there. You heard our earlier conversation, Derek, about just pure math. Supply-demand, take the geopolitics out of it. Could you also make a case, I know you're not an oil specialist analyst by nature necessarily, for $50 oil? When you look at supply-demand, which I'm sure you do, it's pretty much covered on the supply side.
Yeah, I mean, that's a decision by the major producers, of which the United States is one. I don't think anyone thinks the world economy is going to pull the price of oil up, that we're heading into a boom year in 2025. And so it's not going to be on the demand side. So if the major producers, Saudi Arabia, of course, but also the United States and several other countries, you mentioned what was going on in Latin America, I mean, if they want to produce more oil, then $50 is in reach. And so because demand is going to have fairly limited upside, it's a question of whether the suppliers like higher prices or higher volume.
Yeah, and that's the whole market share versus higher price battle, that the battle of words right now. We'll see if it turns into a battle of actions. Hopefully OPEC will. They're supposed to meet in person on October 1st. We'll see. They've moved some in-person meetings. I think the world's energy journalists are hoping that meeting still certainly happens in person. Just quickly, macro China. Derek, where's this going? Demographic cliff. Xi Jinping, probably president for life, almost self-named, and you know what I'm talking about with the Communist Party. Where does China end up? I mean, will the stimulus work? Is this going to reinvigorate an economy that's really just tied to real estate?
The stimulus is not going to work for more than a couple of quarters. I mean, there's all this stuff about if we spend enough money, magic will happen. It doesn't work that way. You can get better quarters. You can have a better fourth quarter than a third quarter, or a better first quarter of next year. So if you're looking about can stimulus improve the economy for a couple of quarters, then it could. We haven't seen what the stimulus is yet, so we don't know that. But that's on the table if the Chinese want it. In the longer term, it's what you said. Demographic is going to kill them. They're still limited by a lot of debt, which may discourage them from an intense stimulus program. They ran up a lot of debt with their stimulus program in 2009. So the trend in the short term is hard to see because it's a policy choice. But in the medium and long term, the trend is down. If you're expecting more from China macroeconomically, you're not going to get it. In demands linked to aging, they'll have a lot of that demand. They'll have a lot of demand in cleaning up the environment. But you're not going to get macroeconomic boosts from China beyond the next couple quarters because they're heavily indebted. Xi Jinping doesn't like the private sector, and they're a rapidly aging country.
I mean, harder to control the private sector. Derek Scissors, AEI. Derek, thank you. All right, folks, we are just getting started on deck. We have the action, the story, and the trade on airplanes, big trucks, and warehouses. But first, your next guest is a growth investor, and that makes some of her latest picks, including this one that we're going to name so surprising. There's your mystery chart. I guarantee you won't get it, but we'll tell you what it is coming up.
This is The Exchange on CNBC.
You got this.
And welcome back to The Exchange. As you can see, or I'll tell you if you're on the radio, the markets today, they are mixed. You've got the Dow Industrials down about 0.4%, but the small caps, the Russell 2000 is up nearly 1%. The NASDAQ is a little bit lower, and let's be a little bit optimistic, right? And here's an RBI for you. The S&P 500 closing at its 46th record high this year. Amaze your friends with that. All right, so where now, though? With all these record highs, do you find growth and opportunity? Well, your next guest is looking to healthcare as maybe the place to be. And a moment ago, we showed you or told you about a mystery chart. Certainly not a household name. It was Alcon. It's a Switzerland-based maker of contact lenses and other eye treatments and surgical products. Alcon is up 24% this year, does trade here under ALC. Let's talk more about this and maybe healthcare in general. Bring in Emily Lavelle, portfolio manager at Thornburg Investment Management. Emily, here's a dad joke.
Brian. How are
Here's
you?
a dad joke for you. What do you and your team see in this contact lens maker?
Yeah, absolutely. I was wondering what the mystery chart was going to be too, but
and this is you gave us the chart, Emily. You gave us the chart.
Happy to talk about contact lenses, and I think it actually dovetails really well into the discussion you were having earlier with your previous guest about China. You know, we are fundamental growth investors. Within our growth portfolio, we want to be exposed to really diversified sources of growth. And, you know, one of the clearest structural trends that we see globally is an aging population. As the population ages, the demand for cataract surgery, the demand for contact lenses increases across the world. And, you know, China, the United States, Europe, these are trends that we see sort of across the world. So as international growth investors, you know, it's a clear area of focus for us, no pun intended. But so Alcon, you know, is a leader in providing not only contact lenses. So this is a pretty stable market with 3 or 4 main players in the contact lens market. We really like the the competitive nature of the market. We like the pricing power that companies have. But Alcon is also one of the global leaders in the equipment and lenses for cataract surgery. And this is an even a market with even higher barriers to entry. Just to give you a sense, the demand for cataract surgery grows about 4 percentage points every year. And that's simply because of the population that's aging into cataracts. Everybody is going to get cataracts in their life if they live to, 65, 70 years old. So that's really the reason that we like Alcon as an investment. We think it's a good, steady grower. They're also incredibly innovative. You know, not only do they have this surgical component, but they've got actually a really interesting ocular pharmaceutical eye drop optionality that we think could play out in the next few years. So, we think that the market tends to fade these long-durated growth companies pretty quickly, and we think it's going to last for longer than that.
All right, 3 things. Number 1, you fully meant the pun, and I love it. Number 2, it's not just need-based. I actually met somebody with pink eyes like a couple weeks ago, and I thought, oh, pink eye. And then I realized these are colored contacts. It's kind of the narcissism trade, if you will. You can change your eye color through contacts. Pretty cool. And then more macroly, Emily, Europe, it's got a lot of problems. Switzerland doing better. But do European stocks as a whole now sort of trade at a discount almost merely because they are in Europe?
The discount that we see between the S&P 500 and, the rest of the world has been present for many years. And you're right to say that part of the reason for that is just because growth outside of the U.S. has been slower. And so some of that discount is warranted. However, we can selectively find really interesting and world-leading companies outside of the United States. You mentioned Europe, for example. There we find leaders in the semiconductor space. We find leaders in healthcare. We talked about Alcon, but Novo Nordisk is obviously, a leader in the GLP-1 space, which we think is a transformative platform for healthcare and the treatment of obesity, diabetes, and a number of other areas. So when we look to invest, we're not really paying attention so much to the macro as we are looking at the fundamentals of the businesses that are in those countries. And in Europe, a lot of businesses have a lot of exposure outside of Europe simply because growth in Europe has been slower over the last 2 decades.
Yes, it has. Emily Lavelle, I love it. A brand new name, Alcon. We're watching it. Emily, have a great day. Thank you.
Thanks. You too, Brian.
All right, coming up, AI can either be a killer or a catalyst. A lot of it depends on the industry you're talking about and the business model. And another, look at a bonus mystery chart. That name you're looking at could be in trouble. Plus, we had to break. One group today that is working has to do with the Bloomin' Onion. Restaurants, Bloomin' Brands, parent company of the Bloomin' Onion, Cheesecake Factory, Brinker, parent of Chili's. They're actually all up very nicely. A little run in restaurants today. We're back.
be victim blaming here.
Good afternoon and welcome back to The Exchange. I'm Tyler Matheson with your news update at this hour. A Georgia state judge ruled today that local election officials must certify election results, saying concerns of fraud or abuse will be settled in court. It comes as a Republican member of the Fulton County Election Board went to court, claiming she was required to refuse to certify results if she believed the results were wrong or unreliable. Nearly one-third of the surveillance cameras along the southern U.S. border are not working. That's according to an internal Border Patrol memo obtained by NBC News. It says the outages are due to severe technical problems and blames the FAA, which services the cameras. The memo said Border Patrol leaders are considering replacing the agency with a contractor. An FAA spokesperson declined to comment. And get your panda cam ready. The giant pandas are now home at the National Zoo. The pair of pandas arrived in the U.S. this morning via a FedEx Panda Express flight. Look at the truck. Yeah, they bring bears. They were trucked over to the zoo. You know, you have to be there and sign for delivery, Brian. They'll live there as part of a 10-year breeding and research agreement between China and the U.S. That's something we apparently can agree on. Those pandas like the bamboo, and they arrived by FedEx, baby. Love it. Back to you, Brian.
Did they like drill giant holes in the side or the top of the truck? I didn't see. You know, you catch a frog as a kid in a mayonnaise jar. Tyler, you punched a hole to make sure it could breathe.
Yeah, they must have holes in there, ventilation for the pandas. That's a big thing. But you got to be there to sign to take delivery. That's the key.
That joke was purely pawful. Tyler Matheson.
Ooh, very good.
You're welcome.
Good to see you, man.
Tyler, thank you. All right, meantime, the mad dash to develop and deploy AI chips intensifying. Amazon now linking a new deal with the startup called Databricks, in which it'll use Amazon's custom AI chips to train the AI model. AI training AI. Kate Rooney is here to hopefully make sense of all this and how it could spell a new chapter in the AI race as part of today's Tech Check.
Brian, great to see you. So, yeah, this is key to Amazon's long-term strategy. In AI, at least, it's looking to compete with NVIDIA for some of those custom semiconductors by offering a cheaper option. As part of this 5-year deal with Databricks, Databricks is going to have to, or has agreed rather, to use Amazon's custom chips. They're called Trainium AI chips. They're going to power the training, hence the name, of Databricks AI models. Databricks did buy Mosaic ML last year for $1.3 billion. The big draw here to Amazon, and those chips, it's all about price. Consensus in Silicon Valley, at least, has been that Amazon's chips, they're not quite as powerful as NVIDIA's, which has really been the gold standard, but that's also expensive. So Amazon's Trainium is seen as sort of the discount version out there. Amazon does say that customers pay 40% less than they would if they used other hardware, and Amazon has leaned on this partnership route and this partnership model. They struck deals with SAP, with Anthropic, which they're also an investor in, to train AI models. Dan Ives earlier telling me that Databricks and this deal, it's another stamp of approval for their chips. He expects a lot more partnerships with software companies to get some of the chips out there. Amazon, hardly the only alternative to NVIDIA, though. You've got AMD, Google, Microsoft, Cerebras, all developing their own AI chips. And then this strategy, it's key to that long-term competition here in AI. You can think of it as sort of a marathon race. So OpenAI, Microsoft, Google, they might have won what you would see is sort of the first 10 miles of that marathon with large language models. Amazon, it's been in the race, kind of chugging along, but this infrastructure layer with custom silicon and data centers is really how I'm told they could pull ahead in the back half of the marathon, Brian.
Another day, another new development in AI. Kate, thank you. All right, on deck, we fly, float, and store stuff. It's all coming up on Earnings Exchange.
All right, y'all. All right. My fault. Again, I had to run to the store. All right, let's get it. AirPods are probably not hooked up. Give me 1 second. Give me uno momento. And we're going to see what we can't do going out the gates here, coming into the end of the day. I am satisfied with my city trade. It wasn't a big one. I missed the short. I didn't miss it, but I missed it. If that makes any sense. I know, it doesn't make any sense. I just missed the entry and didn't want to pay up for it. Although paying up for it would have worked. I would have been okay. But, you know, you do that to yourself over and over and over, you're bound to get hit. And the odds, in my opinion, are kind of against you. If you just, you know, it's just overall better. I'm just okay with missing something than paying more and losing, or paying more to make less and to lose more. Potentially. Allegedly. All right. So let me know who's all here. Is there anybody here right now? I'm probably talking to an empty room in YouTube. Probably nobody. But I think there's a few people here. Oh no. Hold on. I was going to say, did we lose the stream? Is drug really going again? That's seriously insane. Come on. This fucking I hate
reporting today, the stock's moving in different directions. Leslie Picker.
Sorry, I didn't know that was still on. There we go. Okay, cool. Drug is apparently still going, man. What a big winner. Did he get through 20? A little bit. This is crazy. Listen, this thing's holding up. That's actually pretty wild. What a huge fucking... Dude, this is going to be a monster. I should have just traded this at $4 to $5. Wow. So we talked about this down here at like $250, $350. And here we are at $30. Holy fuck. This is the type of trade that if you connect, and listen, you're never going to know. Guys, you're never going to know when it's going to be the one. Okay? You just put the risk on, take your money when you get paid, maybe add back to it, and just slowly, I wouldn't recommend adding back if you're a newcomer, but for anybody that's been trading, you know, trade the chart. You've had a few opportunities to attack this. This is absolutely insane. This is awesome. I can't remember, honestly, guys. Unless it's because I haven't watched small caps in a while. I can't remember the last one. Wasn't there one between HKD and this one? Like, I mean, I guess this is there. I thought there were like a few, like one or two that went from like $2, $3, $4 to 20 to 30. It's a pretty big run. Wow. What's GME doing? Everything's going to start popping. It's heading down. All right, guys. Give me 2 minutes, and I'm going to be right back. I'm just going to go throw something comfy on real quick because I just ran to the store.
Obviously, we have a couple of idiosyncratic components to that. Citigroup, JP Morgan, which is going to see some headwinds, which they mentioned on Friday. So we have a little bit of movement between the different entities, but in general, the industry is moving towards a more beneficial cycle, Fed easing, and Bank of America is one example of that today in terms of iterating kind of positive NII as we track through 25.
Why is Citi the outlier today?
Well, I think Citi had a couple of idiosyncratic components to it. They talked about that expense headwind going forward. They delayed their IPO of the Mexican operation, so I think that was a little bit of a disappointment. And then they have this regulatory overhang, which there was a number of questions on the call about that in terms of, what's the ultimate cost and what is, potential penalties, et cetera. So I think that uncertainty is going to be weighing on those shares for the time being.
Leslie, how much of a factor is it that they have set aside more money to reserve against potential losses?
Well, it caused about a 9% hit to net income, so it was sizable. A lot of that has to do with credit cards, both the fact that people are using more credit cards and also that they have to set aside more allowances for those credit cards. And they were seeing some lower FICO band customers struggling a little bit more in this higher interest rate environment. Although the dynamic changed toward the end of the quarter, it's still impacting people. Credit card rates do take some time to really come down as the Fed cuts.
They never come down all that much.
They don't.
To be honest with you.
When you look at them, I think the average right now is about 21% or 22%. It's very high.
Maybe they'll come all the way down to 19 or something like that.
One could be so lucky.
Yeah. So, McCrae, as you look forward to an interest rate regime where rates are likely to decline, whether by another half point this year and then how much next year, who knows, what is that going to do to these big banks?
Well, I think you really have to go and dissect it, balance sheet by balance sheet. Today on the call with Bank of America, they talked about, some of the HCM that's rolling off, 10 to 20 billion a quarter. That is on there, pretty low rates, and so that will be reinvested. And even as the Fed brings down rates, the forward expectations are that they will still be able to reinvest that with an improvement in NIM, which will affect NII, obviously. And then also you have growing deposits. So this is the 5th quarter that they've had added deposits. We hope to get some more loan growth going forward too. So that'll also affect the outlook for NII. And so you had a similar situation with Wells Fargo on Friday and that outlook. But on the contrary, JP Morgan is a little more asset sensitive, and to the extent that loans start coming down in terms of that impact, they're going to see some headwinds. And so they expect to inflect, potentially at the end of 25, maybe before then. But a little behind in terms of the other banks. But they are really earning much more than the other banks. So a NIM closer to 3 with Bank of America's NIM closer to 2.
McCrae, I'm curious your belief in this capital markets recovery, because we saw in the numbers today and on Friday that there are sizable jumps in investment banking fees, for example, but a lot of that has to do with debt capital markets. There was some M&A advisory among the banks, some kind of late in the quarter closures, but the commentary around it is a little mixed, and obviously last year was a pretty low base by which they're increasing from. So I'm curious where you see the revival and kind of how you're modeling that in terms of what types of stocks within the banking community you're assigning more weight to.
So I think David Solomon expressed that in terms of the numbers. So this quarter, M&A is down 13% from the peak. It had been as low as down 25% from the peak in the first 9 months of 23. And so we're operating in this environment where we're still kind of underutilized in terms of that capital market activity, realizations, et cetera. And my colleague and I had the chance to meet with a couple of alternative investment managers in the last couple of weeks. And you can tell that there's some urgency to get out there and monetize those assets with the markets opening up. In terms of the elections getting done and then the Fed easing policy. So there's a couple of catalysts, I think, that are going to weigh into 25 and provide a better environment. And the banks, as facilitators of those transactions, both in advisory and capital markets, are well positioned to take advantage of those trends.
All right, McCrae, thank you very much for being with us today. McCrae Sykes, Leslie Picker, always good to see you. Thank you. Former President Donald Trump speaking in Chicago today. That discussion just wrapping up. I believe, Eamon, it was at the Economics Club of Chicago, an event collaborated with by Bloomberg. Eamon, give us the details.
Yeah, that's right, Tyler. It was Bloomberg's editor-in-chief, John Micklethwaite, at the Economic Club of Chicago, sitting down with the former president here. Just over an hour of conversation. In it, a number of economic items I wanted to bring to you, including the fact that the former president talked here about tariffs. The former president has called for tariffs of as high as 10% across the board, and now he's saying in this interview that he thinks those need to go much higher than that in order to entice foreign manufacturers to bring manufacturing back into the United States. He said those tariffs could have to go as high as 50% to really incentivize manufacturing to come back quickly to the United States. He also said that he wouldn't commit one way or the other whether or not he would remove Jay Powell as Federal Reserve Chairman. He said that he believes that the President of the United States, particularly a president with business experience like himself, should be able to call up the Fed chair and say to the Fed chair what he thinks should happen on interest rates. He doesn't say that he thinks he should be able to order interest rates to go up or down, but he does say presidents should have the ability to sort of jawbone the Fed chair over the phone directly, something that presidents have really avoided doing in order to preserve the independence of the Fed in recent years. He also was asked whether or not he would want to break up Google. He said, I would do something about Google. He said they have too much power, but he declined to say specifically that they should be broken up, because he also said that the United States has an interest in having big, powerful, strong tech companies that can compete with Chinese competitors. And he was asked about TikTok. He said he sees TikTok as a threat. He sees a lot of things as a threat, he said, but he declined to say that TikTok needs to be banned in the United States. And one more thing, Tyler. Micklethwaite, in this fairly contentious, as I said, interview, asked him about the reporting in Bob Woodward's recent book that he has been speaking with President Putin of Russia, former President Trump, saying here that he's not going to say whether or not he has had phone calls with Vladimir Putin. He said, I don't comment on that, but if I did do it, it's a good thing. Tyler, back over to you.
It was, as you say, a contentious conversation, and I thought the back and forth on tariffs was especially so because the former president talked about raising tariffs to 100%, 200, 300%, even more on certain categories of goods, most notably automobiles. And he doubled down on his comments about Detroit being effectively a third world kind of environment, comments that he made in Detroit earlier this week.
Yeah, this is the former president, really coming up against sort of the business and economic establishment on tariffs. Trump saying here, look, you guys got it wrong. He said the Wall Street Journal got it wrong. He said, John Micklethwaite, you personally got it wrong. He was very aggressive on this point, saying tariffs are actually a good thing. Tariffs will give the United States the ability to force the trade imbalances back the way I want them to go. Micklethwaite pushed back on that to some degree, saying, hey, wait a second, you're going to cause prices to go up. You're going to cause costs to go up for businesses. A lot of businesses in this room won't necessarily like that. And Trump said, you and the establishment, in effect, have simply been wrong on this for 25 years.
I believe he said tariff is the most beautiful word in the dictionary, among other notable things. Eamon Javers, thanks very much. Appreciate it. Coming up, oil prices slipping 5% amid growing fears of a supply surplus, coupled with easing tensions in the Middle East. The details and an inside look at some unlikely bedfellows in the energy industry, plus a power rundown with former FDA Commissioner Scott Gottlieb. We're going to talk about medical supply shortages, the FDA's U-turn, and France versus the bird flu. Power Lunch is back after this.
Welcome back, everybody, to Power Lunch. Oil prices taking it on the chin today. Look at that, down 4.74% for WTI. It's the first time that we've seen that since the end of September. Pippa Stevens joins us now to tell us why we're seeing such a decline.
Yeah, heavy losses today, Contessa, and that's because it looks like Israel will not target Iranian oil infrastructure, with 3 senior administration officials telling NBC News that Israel plans to limit its retaliation to military targets. Oil was bid up as the market waited to see how Israel would respond, fearing that Israel might destroy Iranian oil facilities. But traders are now unwinding the risk trade and are back to focusing on the fundamentals. And the global market is still oversupplied and potentially facing even more barrels coming back on the market from OPEC beginning in December. Still, CIBC Private Wealth's Rebecca Babin told me the market is being short-sighted in believing that just because energy infrastructure might not be a target this time, that we're in the clear moving forward. If there are more tit-for-tat responses, oil facilities could once again be in focus. WTI has all but given up its gains since Iran fired ballistic missiles at Israel on October 1st and on the verge of breaking below 70. We're at 70.37 right now.
Let's switch and talk a little bit about nuclear power and technology, or big tech getting involved in it. Nuclear power has sort of gotten back into the conversation.
Yeah, I mean, this has been a really big trade over the last year, and it comes because tech companies are in a little bit of a bind because of AI's energy demands. You know, they've made these commitments to transition to zero emissions, and now they all need more power than anyone imagined to compete in the AI race. By 2026, global electricity use from data centers is expected to double, consuming the same amount of power as Japan, according to the IEA. So the solution is nuclear power. It can generate electricity without any pollution, but it's expensive to get a plant up and running. Some have also faced project delays and ballooning costs. But with big tech buying the power, even if it's at a higher price, that could jumpstart new builds. Google's deal with Kairos Power is just the latest example. We also had Microsoft teaming up with Constellation Energy to bring 3 Mile Island back online, while Amazon bought a data center from Talon Energy that's powered by the Susquehanna nuclear power plant. Prominent tech players are also backing nuclear. Both Bill Gates and Sam Altman are chairman of nuclear companies. Jeff Bezos has funded a fusion company, and NVIDIA's Jensen Huang has called nuclear a, quote, integral part of the AI future.
Is the regulatory hurdle lessening then? Is the not in my backyard pushback lessening?
So there are 2 factors there. There's first the not in my backyard, the NIMBYism, and then there's the regulatory piece. On the NIMBY front first, nuclear power, support for nuclear power is now at the highest level in more than a decade. A lot of that is coming from millennials and Gen Z. Gen Z especially, you look on TikTok and Instagram, and there's a lot of prominent backers just because they don't have necessarily the same association of what can happen with a meltdown. On the regulatory front, that still is a question because these SMRs, the future, the small modular reactors, they still have to get those permits from the NRC. Kairos has a demonstration project they're building in Tennessee, but not the full-scale project yet. And then also these SMR...
Wait, like a proof of concept project? Or more than that?
It's more than that. So they're building it and the NRC approved it. Then the NRC has approved TerraPower, that's Bill Gates' companies, their construction permit, but not their nuclear reactor permit yet. So this is a long timeline, 2030 at the earliest.
You've got AI fueling the need for more power, but you've also got electric vehicles, which certainly are going to be a part of the future. And to rely on electric power to power, let's say it's a third of the auto fleet in this country eventually, that's going to take a lot.
And Bitcoin mining, by the way.
And Bitcoin mining.
And also reshoring. I mean, data centers are the latest and kind of the grabbiest headline in terms of power consumption, but it was already growing. And remember, utilities forecast their load growth, their facilities, a decade in advance. And now all of a sudden, it's kind of, every single day there's a new forecast of just how much power AI is going to use. And so that's why these companies are now going directly to some of the nuclear companies.
Yeah.
Pippa, thank you. Still ahead, our trader says investors are starting to rotate out of oil and into a different commodity. This one trading near all-time highs. We will reveal it next.
Stocks at Night.
Lunch, quick check here on the markets. You can see down off by 0.5%, the S&P 500 the exact same 0.5%, and NASDAQ Composite down by 0.8%. Dom Chu, let's get to today's market navigator. And does all that shines brightly indicate gold?
Well, we're gonna kind of link the last segment you guys just talked about with Pippa Stevens on the oil trade, and then link it with gold. So what we're looking at is the crude oil trade, right? Prices are slipping. Traders continue to keep an eye on those Mideast tensions. At the same time, though, gold is climbing to new highs. Our next guest says the two are actually kind of connected, and he's here to help us navigate the flow between those two commodities. So joining us now is Phil Strebel. He's the chief market strategist over at Blue Line Futures. Phil, let's talk about the oil trade. We just dove into it a bit more in depth in the last segment, but I'd like to hear your take about why you're seeing the decline in prices and whether or not that rotation, mini if you will, is going from gold into commodities elsewhere, or is it going from oil into gold?
Yeah, I believe that the sell-off in crude oil could boost gold up to new all-time highs, and there's two takeaways. It's the inflation expectations and the rotation. There's an interesting dynamic between the price of crude oil, inflation expectations, the strength of the dollar, and Fed policy. The correlation between crude oil and the dollar index is a positive 85% since the recent escalation in the Middle East. So we've seen crude oil prices, they've collapsed over the last 48 hours. You got OPEC. They cut the demand forecast for 2024 and 2025. Israel's walking back from its escalation and proposing of striking some of the oil and nuclear facilities. So how does it benefit gold? Well, over the past few weeks, we've seen this little reaction in the gold market with any kind of escalation. And now with inflation pressures relieved, the Fed can focus on the fragile labor market, take more of a dovish stance. And what we see is the dollar will begin to weaken. And with a 54% inverse correlation to the dollar, gold futures benefit. So where the rotation takes place is that money managers, they cut their bullish bets on the gold market to the lowest level in 8 weeks, and they chased inflation and they chased crude oil prices higher. Now that crude oil prices are coming off and the Fed looks like they're going to shift more dovish, they want to rotate back into those asset classes. So if you look today, you got the Russell 2000 pushing up, was up about 1%. You got bonds up over a handle, and gold futures marching higher. So the CME's Fed Watch tool shifted to a 90% chance that the Fed will cut 25 basis points in November. And we really don't believe gold prices are going to stop there. We think that central banks are going to continue to purchase as well.
All right, so then what's the trade? How do you capitalize on that? How do you kind of take that macro view and translate it into an actual event or trade?
So you look at the consolidation that we recently had in the swing low that we had. It's been about a $50 range, $26.50 on the downside, $2,700 on the upside. We believe that you buy the micro gold futures contract at $26.50. You put your stop loss just below that recent swing low, about $26.20. So you're risking $300. And we don't believe that this thing's just going to make new all-time highs. We believe that we're going to march to the end of the year on up to $28.50. So that would be a $2,000 gain and a $300 risk, giving you an optimal risk to reward.
All right, so there's the trade. A minimal amount, relatively, of risk for that kind of bigger reward if gold prices keep going higher. Phil Strebel, Blue Line, thank you very much. We appreciate it.
And Dom, well, it sounds like, you know, if those would be great odds if we were at the roulette table in Las Vegas.
Yes, I figured talking to the gaming correspondent, you kind of like that risk-reward accent. But a lot of people are using those micro futures as well. It gives people a little bit more ability to get on some of those trades and contracts without having to put up so much money as collateral, as margin, to make some of those bets happen.
All right. Thank you, Dom.
You got it.
Tyler?
All righty, coming up, hurricane damage is disrupting the medical supply chain, of all things, hurting hospitals and dialysis centers across the country. Up next, we'll look at one manufacturer that's bearing the brunt of the impact and speak with former FDA Commissioner Dr. Scott Gottlieb about some potential solutions to strengthen the supply chain. Power Lunch is back after this.
All right, guys, I'm back. Let's see here. Let me use the restroom really quickly, and we will. So the SPY is still pulling back. I wonder if the IWM pulled back off of 225. Yeah, it is. It's pulling back off 225, 225.50. It's failing to hold these previous highs. It looks like. The Qs are holding up, you know, so now tech is somewhat dragging the market down. Let's look at snow. It's holding up pretty well off of this level, guys. You know, I don't know if I'm ready to attack it because it's still, you know, unless we start climbing towards the end of the day here. You know, I did not only want to be long snow, but I also wanted to buy it and add it to the, you know, own it, you know, own it outright. For a few different reasons, but give me 2 seconds. I want to thank you guys, you know, for where we are. I know we're trying to get to 10 likes. We'll get there eventually, one of these days. And I want to thank the new subscribers. It's happy to have you guys. I just want to be able to do a great job for everyone. You know, we're going to have our good days. We're going to have our bad days. We're going to have the in-betweens. We just have to recognize when the market, okay, when is it us forcing something on the market that's not there? Are we in the right place? Do we have our stock selection down? Okay, stock selection is a big key. Is probably the biggest key, in my opinion, to being able to put on winning trades. You know, once you find the stock, you obviously want to really, you know, be able to hone in the direction and really what's going on and what the price action is telling you, or us, I should say. But more so you may interpret it differently than someone else. So again, yeah, I just want to try to do my best here and provide market commentary. And if you'd allow me to do so, you guys can, you know, just hit the like button. We're trying to get to 10 likes. Subscribe if you haven't already subscribed. I'm doing a giveaway as soon as we can get to 1,000 subscribers. We're almost at 5, which is awesome. I feel like I gotta put out more watch list at night. Maybe I'll do a different channel or something of the sort, where we just do like a watch list and we go over trades from the day. But all in time, guys. I just want to thank the new subscribers. If you guys want to follow me on Twitter, Twitter handle is @IvyLeagueTrades. Okay, @IvyLeagueTrades, and you'll see the description of the same profile picture. You should. Secondly, if you guys want to donate to the stream, stream contributions are in the link in the description. There's a few different ways you can do that. You know, if you want to, you know, anything helps, right? It is, you know, that stuff I want you guys to know does go to the stream. It's not, you know, even if you say otherwise, I would more so prefer it go to the stream. Again, that's what it's for. There is, you know, a finish line that I would like to be able to get this to, and with your help, we'd be able to get there. And if you guys want to come on stream, all right, you guys want to go over charts, you guys want to have a bit of a podcast, or just come on the stream and talk markets and go through different trade ideas, different sectors, this, that, and the third. Reach out if you want to do a sponsorship of your company or anything. You want to donate to the stream and, you know, promote your own company, this, that, and the third. Reach out. All right, you guys can get a hold of me down there in the description. Give me 2 seconds. I'm gonna log back in and get all my stuff situated. So give me about 2 minutes. And we're going to kick this off and see if we can't find something here going into the end of the day. City did not hold up. And that's why I was urging as soon as I actually want to say that I didn't get lucky, but I definitely put my bid literally in the right spot. I put it in at like 40, I think it was 41 cents, not 40. Because I got filled and I thought about dropping it because I felt like I wasn't going to get the continuation I expected. And this pop from, you know, for a few different reasons, again, understanding what's going on, this huge down move and this massive volume coming in, this is, you know, anybody that was short, anybody buying puts or whatever, what have you, they were taking profits. You have some nibblers on, you know, on what they feel the asset is at a discounted price. So you may have some buyers down here. They're still holding it up at $63. This was a nice little trade. We got this down at the low 30 cents and we took it all. We got 11 cents out of 30 cents on that. Mind you, 15 cents on 30 cents is 50%. So, you know, it may not sound like something, but, you know, so You know, it all depends on how I'm doing. 80, like 99, I don't know why I was going to say 80, but 95 to 98% of the time, I go for a percentage based on my delta and taking account the gamma. But we can go over some lessons and stuff you guys want. But I want to go find us a trade here this afternoon. Let me get this going really quickly. Let me log in, and we're going to get
Puerto
right
Rico,
to
we
it.
saw the same problem with Baxter. Big manufacturing facilities there. When the hurricane goes down and takes out.
Keep an eye on the Dow here. If you get a retest of this of the lower day, and you crack the lower dates of today and Monday's pivot low, there might be there could very well be a trade here. You can look for this in the next couple of days to be down to 425. There's a trade idea for you right there. But you may run back to test VWAP. Right? You may end up going higher before you go lower, right? You may pop, and then you get the break, you know. So just want you guys to understand. You have to look at your indicators and everything else to kind of see what's going on. If you don't know how to, listen, donate to the stream, and I can help you guys hone in on the triggers, on whether or not the probability that this is going to holds or not. What is the probability? Is it about an 80% chance? Is it a 10, 15, 20% chance that it's going to hold and pop back to VWAP? Is it an 80% chance it's going to run back to VWAP? There's ways you guys can find out.
For far less money than it would cost to buy the, say, Eli Lilly brand.
Yeah, look, compounders are allowed to enter the market when there's a declared shortage of drugs. And there was a declared shortage of tirzepatide, the Lilly active ingredient, also semaglutide from Novo Nordisk. Lilly has increased manufacturing, and the shortage was subsequently lifted. I, first of all, have a lot of concerns around these compounded drugs, not just that I think some of the ingredients are problematic in these drugs, and we've seen evidence of that, but also the efficacy of these drugs derives from the fact that you deliver a very constant exposure of the active ingredient. You don't get big peaks, and you don't get big trows of the drug. You deliver a very level exposure, and the formulation work to do that is very difficult, and I'm skeptical that the compounders are achieving that. FDA said that the shortage was over of tirzepatide, the Lilly drug. They said that the compounders had to exit the market. The Compounding Association sued, and the FDA backed away from that on Friday night. And I'm surprised by it because I thought this lawsuit was weak. I thought maybe they had done that to try to extinguish the litigation, but the litigation itself wasn't a...
All right, we're good to go. I'm not sure what they're talking about. If you guys want to finish listening to that, oh, this is over the weight loss drugs. If you guys want to listen to that, you guys just let me know and I'll put it back up. But what I'm going to do is we're going to go through... Oh, shit. We're going to go through and find us a damn trade here. See if we can't put something on. It's really got to be there for me to put it on. Drug's going to have to get through 24. You know, I'm actually... In a sense, I'm more bullish than bearish, but that bullish, I mean, this thing has ran and ran and ran. It very well could continue to go, guys. I just think there might be some people that are upset. That tail is, in my opinion, getting put in now. It filled the gap. There was a gap here. Look to the bottom right. There's your gap right there at like 32, 32.12. What was the high of day? 31.50. So that's been filled. I gotta use the restroom because I had a coffee. I mean, again, this thing could just sit here above. If it's above 20 and holding, guys, you know, the only thing I don't like, I'm going to be honest with you, is the breakout at lunchtime. That lunchtime breakout was just so low in volume, you know. Oh my gosh. All right, I got to use the restroom, guys. I'm sorry. Give me 2 seconds. I'll be right back.
Changed significantly. We used to see resistance strains. We're seeing less of them now. We're seeing larger outbreaks now. This is a difficult to diagnose pneumonia, difficult to treat because you need specialized antibiotics. You typically need a class of antibiotics called macrolides, drugs like azithromycin or erythromycin. So this is something that you need to be aware of and alert to get diagnosed. That said, most people, for most children, this will be a self-limiting infection. And unless you have other symptoms like fever, a lot of pediatricians will choose not to treat it. But for children who have a persistent cough and have other signs and symptoms of an infection, certainly they should get looked at, and you should be alert for this time of the year.
Dr. Gottlieb, thank you very much. Nice to have you with us.
Thanks a lot.
Let's get to Pippa Stevens for a CNBC News update. Pippa?
Hey, Contessa. Here is your CNBC News update. The Biden administration is warning Israel to improve the humanitarian situation in Gaza, or it could risk losing U.S. weapons funding. Secretary of State Antony Blinken and Defense Secretary Lloyd Austin sent a letter to demand Israel take action within the next 30 days. It calls on Israel, in part, to let 350 aid trucks into Gaza each day. North Carolina's governor says at least 92 people are still unaccounted for after Hurricane Helene brought widespread flooding to the state nearly 3 weeks ago. He said the numbers could fluctuate as North Carolina's National Guard continues its search and rescue work. So far, 118 deaths have been recorded in the state, accounting for nearly half of the 243 killed by the storm. And the country's largest retail trade group says it expects Americans to spend more this holiday season. The group estimates we'll shell out between $979 and $989 billion in November and December. However, the National Retail Foundation forecasts a slowdown in the pace of sales growth when compared to previous years. Tyler and Contessa?
All right, Pippa, thank you for that. Coming up, Wolfspeed shares surging 20% after the chip maker landed a major grant from the Commerce Department. We'll tell you how much, what the money's for, and whether there's still room to run in this stock. We're back after this.
All right, let's get it. Sorry about that. I had to use the restroom. So what's everybody watching? I'm sure everybody's focusing on DRUG drug. Let's pull that down. Let's go over here and see what we have going on for the day. Woof. Let's check in with some of our... Let's go check in on some of these other names here. Damn, look how far extended it's away from VWAP. That's got to be 4 standard deviations. I'm sorry, probably a hell of a lot more than that. So let's see here. Let's go to Baba. Baba's still just getting tanked, man. This is why... Uh-oh. Hold on. I knew it. Are they selling it off? I knew it. God damn it. It's okay. I don't have a position on it right now. But I want one, baby. Oh, my God. I knew it. I told you guys the higher it was going, it had to hold that 100-day. Something about it was fishy outside of the fact that there was a shit ton of sell-side volume on this thing. every time we went up. And look there. They said, shit, you gonna give me my money. 200-day moving average? Shit, I'll take it. I'll take it. You won't take it. I'll take it. All right, let's see what we got here, man. And we have... So this is halted right now. 10-year yield.
But something in back-to-back basis. Long-dated Treasury yields really have been leading rates higher for the last 5 weeks. And maybe the catalyst was either the Fed lowering rates or maybe debt and deficits or maybe a much stronger jobs report or all of the above. But the 30-year bond is the last maturity. Look at a two-day chart going back to Friday on the long end that didn't trade above yesterday's high yields. It was the last one. It had 8 consecutive sessions. The streak ended last Friday for 10s. And today, well, it's not going to be the 9th session as you see. So why is that so important? Well, it's important because it might be giving us an early warning that momentum is breaking. And as you look at 10s and 30s on one chart together, going back to the end of July, when basically is the last time rates are at these levels based on yesterday's closes, well, maybe that event may be done. So we want to monitor that. Another area we should pay close attention to is the fact that since the Fed cut rates, if you look at the difference between
come on.
It was around 150 basis points. Today, it's over 180 basis points. So over 30 basis points wider, the widest in nearly 3 months. And that's after our...
All right, nothing. A whole lot of nothing. Okay, really quick, let's go check. Let's go over here. Let's make sure everything is correct. Let's go see what time this is opening back up for trade. This is holding right now, the 100-day. All right, the levels I have on watch was really the 100-day, to be honest with you, and it broke it. So let's look for that. Let's look for this level here. If it breaks, you still have. Let's see, we broke. You still have this previous high here at $27. So I'm gonna be watching 27. All right, we're gonna be watching for a bounce off of 27. And see if we reject that 100-day. And I'm going to keep my eye here. I knew I should have just went and grabbed puts. But like I told you guys, they were so expensive. And I'm like, man, I just feel it coming. You can feel it in the air. And the tail we put in this morning, I just thought we did. You know, we were consolidating. So it's like there's both sides to the story there. You know, I would imagine if we get the chance that if we bounce back and put in a low up here at like $30, that would also be cool for a break of the 100-day. This is really nice volume. Let's go over to the charts here. All right, we got to make sure when this opens up and be ready. I really want to already have my options loaded. What's our target? We're at everybody's, I'm sure, going to be at 25. Give me 1 second, guys. I want to see where our target's going to be. The 4-hour chart. Let's make it 25. I'm going to be looking at 25. So anywhere from 25, 26.50. No, there's not too much volume there. There's a lot of volume on the 26s and the 27s. Damn, these things are going to be so much money, though. 0.25. Was there news? Trump media halted to the downside. Okay. I guess it was after his Bloomberg thing. All right, it's opened up. It's opened up, guys. It broke. It broke. It broke. Break, 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 break. And look, right there, that quick. What did we say? Look for a bounce off of 27. In the 28, hit the 100-day. Now let's pull it back, Jack. Hold on, let's see here. What are we going to do? What's she going to do? Again, 27 is your high from Friday. That's Friday's high. And you bounced off of it. Now you're struggling to get back. You came in with the gap down. Gap down. 5 minutes. It's already done. It's done, guys. It's done. You had to be on it. I need a bounce back. I do. I need a bounce back. I need some type of a bounce back. I need this like 29. I need something better than that. You know, even if it consolidates here, you're still pulling that. You're pulling the. Hold on 1 second here. Trying to keep my eye on everything. Personally, I want to wait and see if the thing is I don't want to get back above the 50-day or the 100-day. If we get back above that 100-day moving average, that negates, you know, weakness to an extent, right? But again, we can still sit with a wick. That's no big deal. We might the best bet might be to wait until tomorrow. If we do get down to 25 today, we could get like a bounce back. More than likely to the 100-day. Tomorrow going into like Thursday. Today's Tuesday, correct? Yes. Because of the bank holiday's been messing me up for whatever reason. Just, you know, if you want to get short and you can short, that would be better than buying options. I just know some people out there don't have the capital. If you do, that would be your best bet. There it goes. Now they're going to really drill this thing on. They're really going to hammer this thing. I still need the bounce back. I do. I need a bounce back. I need this thing to calm down a little bit. I need this thing to calm its tits. Calm your tits. Like, look, we still have this 22. Dude! Come on! They're so expensive now. They're so expensive. Yeah, look at the volume. The volume just went crazy for the 25s. What a day. Dude, the market's been so awesome. I love volatility. I do. I love it with a passion. That's probably my favorite thing. If you ask me what is your favorite thing in life, volatility in the capital markets, in the markets. I love volatility. Look at that. Down to $1 now. Pushing $1. Somebody got filled at $1.18. I'm going to go here. I know it's acting slow. It's going bananas, so my stuff's acting up. Let's go, let's go, let's go, let's go. Alright, so we're... See, we're paying $1 for 25. That's like... It's kind of crazy if you ask me, because I feel like... Is that 25? So that's a 10% move. We're paying $1 for a 10% move. That's bananas. Like, you see what volatility does, and look at the volume coming in there. A bunch of people are going to get snaked. I feel it. I feel it. Look at time and sales. It was green as hell. This is not a sign of weakness. It's there. It's a mixed bag, but I'm weighing it more towards the buy side. Look how green this is. People cashing in on that pullback. And another thing, Walgreens, guys. We talked about Walgreens this morning. WBA. WBA. Look at it. It hit that almost $11. It's up 13% I told you guys if we could get $9, which I'm going to go back to DJT. Those puts are at $1 now. I'm watching them. $1 to $1.16. I guess we could have got a pre-market, but I didn't bring it up till about 9, till a little bit later. I was hoping to get this test of like $8.99, like actually $9. And look at this move, too, by the way, guys. Remember when I told you guys they put in a price upgrade? Sure, I wanted to be short, but I'd never shorted it. I traded it the day after the earnings off on that fall right there, but look at this rally. It's been a monster rally, guys. Monster rally. There's the support there at 52.50 to attempt to make a new high. There's a ton of opportunities out there, everybody. I'm telling you, there's a chance for you to learn how to do this skill and just take it however far you want to take it. If there's something you want and you're not able to get it because someone else isn't paying you enough, start now. Start now. I'm telling you. Start now. Buying, holding, owning the companies, and learning how to trade properly. It is the greatest equalizer ever invented, and we're lucky to have it. Some countries, you have to meet a certain threshold. You got to be in a certain type of family. Some countries don't have it at all. Right? We don't have that here, which is awesome. Outside of if you don't have 25 grand in your account, you're bound to PDT, which, yeah, it's crazy, but they need to change it for people. They do. All right, let's go to DJT. Let's go to DJT. DJT. Sorry, guys. I have some coffee, and I'm feeling good. We're 4-0 right now. 3-0 or 4-0? I want to say 4-0. 2 from last week, 2 this week. Right? 4-0 on trades, you guys. 4-0 on our trades. The past 2 weeks. Pull back. Attempt to hold the 100-day again. There's going to be massive volatility here. People are going to get snaked. I can just feel it. I'm watching 30. I'm keeping my eye out for $30. That's my level. Sorry that I'm clicking on these a little too much. If you guys hear me clicking. Drug. Let me know where you guys are tuning in from. Communicate with me. Let me know how you're doing. Let me know something. What's up? Say hello. Say something. Give me the finger. Something. I don't care. Bad press is good press. It's better than any press. And no press at all. So press. Throw some press in there. I know you guys can do it. Let me know where you're coming from. Something. Let me know you're having a good day, bad day. Tell me you just want to, I don't know. Say something. Let me know. Look at this, man. Let's go. Let's go. I knew they were going to fudge with them. Fucking opportunity all over the damn place. All right, time to bust a move. It might be time to bust a move. Come on, 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 come on. I guess I have the 25s up. Shit. Come on. Just like that. Come on, baby. Please. Hold on. It's too far out of the money, man. I don't like it. I don't like it. Here we go. 26. $29. I'm watching 29 right now. We got above the we got back above the 100 day, and now we're sitting here just chilling. I kind of want to move that up. I kind of want to move that up. Kind of want to move that up. Kind of want to move that up. So this is the range I'm watching. 29 to 30 bucks. Watching this area right here. This is our zone. Are we gonna reject here, or are we gonna reclaim it? So this is the area right there. Let's see what happens. Let's see what happens here, guys. Please be careful and do not rush. Look at the SPY just breaking down, man. And it's trying to put in a tail. That was it. They're so spready. The spread is going bananas, bro. Fuck, I don't want these. Fuck. You know what? Look, they just flipped. Oh, we're back under that trade line. Still under there. I don't even have a limit order out. I have the order up. I'm going to miss this trade. I feel like it's going to fail. I do. I feel like it's going to fail, but I needed it up there. I needed it up here. It's going to fail. That sucks. That's brutal. We're pushing $1 now on 60 cents. Fuck. It's all good. Just be patient, young grasshopper. Look, I knew it. God damn it. Congratulations if you got it. Congrats, guys. For those that took it. Sorry, I didn't have the chat up. What's that? It sucks, man. It's all good. Even that move back to VWAP, you could get rid of that at 90 cents. Yeah, see, look, they just flipped to 90 cents on the bid. 95 to $1 from 60 cents. That's a hell of a move. Overall market is at your back now, too, guys. SPY's just cracking level after level after level. So these are the levels we're watching, okay? The next support level is down here at 577.50. $577.50 for the SPY. It's holding. It's trying to hold the 100-day. You might get a spike here. It's underneath of it now, though. Give me 1 second to look around. I'm just going to play this.
Yeah, I mean, sort of fits and starts in these attempts at making new highs, and they've failed every single time. So today we're seeing some life out of them, and I think that's important to watch. But there is a really big correlation between small caps and the labor market. So as long as the labor market can stay strong, or at least stay exactly where it is right now, small caps do have room to find more strength. What you want to see from small caps is you want to see them confirm the move that we're seeing in large caps. So you want to see large cap stocks rotate into more cyclical sectors if the economy is going to stay strong. And if that holds, you want to see small caps also pick up and confirm that move. If small caps again fail to break out here, I think that's a signal to still be cautious and make sure that the portfolio is positioned with things in it that are defensive. And honestly, one of those things continues to be for me. And I think
I was just saying that's a no hit for me, guys. I'm not going to get a chance at that again. For whatever reason, unless we get a bounce back to trade line or whatever, and we can get these things down back to like 70 to 60, I'm not taking it. Because I'm not paying anywhere near $1 for a 10% move. I'm not doing... That's too much, guys. You should be paying $1 for like a 2% move.
Equal weight, and I think that what we like still is this free cash flow yield, which you can screen across sectors. So to Liz's point, there's a ton of great names in healthcare that have high free cash flow yield. I still like energy. I think with this energy pullback, you're getting 3 to 5% sell-offs just today because energy, broke 70. That's just political posturing. Nothing's changed even remotely fundamentally with these companies. And so I just think know what you don't want to own, and then from there, build a portfolio. And I do agree you want to own quite a few different things, but I still think RSP and the free cash flow yield help you own things outside of just the Mag 7 or the other big cap tech names that we always like to talk about.
You want to respond to that, where Bryn, no China,
Remember,
no international, no small caps, because there are a couple of places in there where you think our viewers should have more exposure.
Sure. I mean, I think there's positioning is important. So having some exposure, again, you never really know. I mean, China just went through, and when they provided all that stimulus, you had those stocks up a lot, and I don't think you want to be completely naked there. It may not be like a long-term holding there, but I think having some exposure allows you to just capture some of that upside.
my gosh, I was sitting here talking the whole time about what, oh my gosh. Key point to be made. Please hit the like button. Subscribe, donate to the stream. Hit me up on Twitter. Get a hold of me, all right? But donate to the stream. You want to sponsor your business, you want to get, you want to promote your business, stock. I don't care what you want to promote. You want to promote something? Holla at your boy. Listen, the QQQ, we just attempted to break out. We broke out and broke above 490. We reclaimed 490, you guys. And then we consolidated over top of 490, held. We tried to extend, and and that extension gets failed, and now we have broken back below 490. I'm watching for even a bigger move here. This might really start to get ugly. I gotta be honest. All right, I gotta be honest. This might really start to get ugly. You're below 490. You don't really have much here other than 486. Talk about it. 486. You got a little bit of 488. You got a low level there. Ain't nobody care about 488. Your level is here. It's your homegirl, 486. It's your middleman for the most part. So look, my stuff is just jacked. Jacked to the fucking tits. Okay, 488. I just don't know. What day was this? So Tuesday, Monday, Friday, Thursday, Wednesday. Tuesday, Monday. Keep an eye on that opening candle. The weekly candle. I think you need to watch this weekly candle and watch last week's opening price. Dude, what is going on? Sorry, my stuff's acting up. So do you hit the low last week? I don't know. But I would check out 485. 486, call it. Mondays. I'd be watching that Monday's low. Or Monday's opening price. Tuesday, today, Monday, Friday, Thursday. Tuesday, Monday, Friday, Thursday, Wednesday. Tuesday, Monday. Yeah, I'd keep an eye on that. I'd keep an eye on Monday's opening price. That sucks, man. You see how DJT's not going in? It's just kind of just sitting there. It's because there's a point where nobody's willing, like sellers aren't willing to step down and sell it at a lower price there. But they also don't want to own it. They want to be short. So you're seeing this thing just sit right here. This sucks. Wonderful job if you were able to take advantage of this opportunity. $145 now. Jesus Lordy. That makes me sick. From 60 cents. That's well over 100%. Oh my gosh. I missed the backside of the fucking trade. Oh my god, I gotta just stay cool, calm, and collective. Just relax, Way. Just relax. You'll have another chance. You'll have another chance. But I won't have a chance that cheap. Those shits was at low 60s. That's the point I'm making, man. Think about the person who paid 90 cents for it. Sure, they're off. They made a nice, nice little return, but they sure as shit. I'll tell you what. They were shitting their pants when they started holding, when they thought this would be a higher low. Let's go take a look here at let's see how Apple finished the day. I'm gonna be keeping my eyes on these options. But what a move. What a move, man. That's a hitter that everybody needs, especially from like Drug and DJT. You know, Drug going from $2.50 to $4 to 30 some dollars. All right. So Apple started the morning off. Microsoft never held. That's another name we were watching. ASML. Goddamn. Tanking. It's not a good look. Not a good look. But we'll see what happens with earnings. I think this is going to be... Everything is going red, guys. Everything. Let's watch energy. Energy is down. Alright, so like I said, I need these at 60 cents or so. It's a little too late now because I'd rather them 60 cents up here than 60 cents down here. That's about what I'm willing to pay for a 10% move. Or, you know, that was up here. Let me let my cat out real quick. Sorry about that. I know she has food. She just wanting attention. Okay, so and they were there. I tried, guys. I was trying to put out limit orders. I had it up. I just never sent it over, and it just left because I was trying to be, because it just fell, and then they went to like 75 cents. But there was a quick little opportunity. That sucks, man. It's all good. It's all good. We're still 4-0. Past 2 weeks, still 4-0 on trades. Citi was one of our other big trades today. Short and long. This is a really nice move. That was a really nice move. 30 to 41 cents. 41 cents. But obviously at 100, you know, 150, 125%. On DJT, it'd be a lot better. Let's go look at the heat map real quick. It feels to me everything's getting pulled back. Everything's getting drawn down. Let's look at Bitcoin real quick. Bitcoin, nice little breakout. Wait, it's actually green. Okay. This is it, man. It's a hell of a tail up there. It's 67.8. It's pulling back. You're just sitting in this box, man. Is it go time? I would think we'd mean like you would see a little bit more volume. Like I think if you get up into this zone and you take out this previous high right here, you start holding this as you start. If you can, like what I'm saying is the process climbing to this high off of this pivot high here, putting in a new high, you're going to start seeing some volume. You're slowly seeing it now. It is oversold or overbought. It is a bit overbought. Dude, even a policy. Bro, this commercial has been on here for years. Let's see. I think it's just overdone. But it could continue. Alright, let's go look at the heat map real quick. It's just important to see, you know, just to take a look at the broad market. So we know where money's going, really. You know, the whole time that the SPY and everything was consolidating, TLT was just falling. You know, it was just selling off and selling off and selling off and selling off. While the SPY and the Qs are going sideways. The Dow sideways. So that's the point of looking at the entire market. So we have healthcare, which is the second to third largest sector in the S&P. We had some banks. Look how red, man. We're going red. It might be a bright idea to put on like some UVXY calls. Now might be a little late, but let me see something here. Let's go back and look at so Caterpillar CAT had a downgrade yesterday, I think. I think Goldman Sachs or somebody downgraded it. Just why you came in with this huge gap down. Ran a test back up to 396, call it 397. Look at that. See if we can break the 20-day. This would be an awesome short, but this has room if it does go. That's all I'm gonna say. Let's see. No, come on. So Caterpillar, I would target this previous high here. Sorry. Right there. It's just my computer and stuff's acting up. Alright, pullbacks into 380. Come on. Wow. Look at that. Holy smokes. If that ain't a wedge. Look at that bad boy. Damn. Yeah. Talk about it.
Look like specifically due to Apple Intelligence and what that really is going to mean for the upgrade cycle.
Yeah, and that's exactly it. And I'll also just note today in that iPad announcement and for all the other devices that have been coming out recently, the marketing around this is Apple Intelligence. That's the thing you see when you walk in the store. But what they don't tell you is it's not there yet, and it's going to take some time to get there. So it's unclear how many people even understand that, Scott, that what they're being marketed and advertised, all these cool new AI features that we've been talking about since last June. We just don't know when that's all going to come to fruition and hit these devices. So you're right. It's going to take several more months before we see if this really is that AI-driven catalyst that the Dan Ives of the world really think we're going to see soon.
Yeah, also means we're just going to have to cycle through these analyst notes as they try and get a better handle on what's happening so they can sort of advise where they think all this is going.
We'll hear
Steve,
a little
thank
more
you.
on the 31st.
All right, look forward to that. Thank you very much. Joining me now here at the Case Investment Summit is John Kadunas. He's Calamos Investments President and CEO. Welcome. It's good to see you here.
Good to be here, Scott. Thank you.
Let's just get your take and your temperature, if you will, of what you think this market is going to do from here.
Well, I think we're going to continue to get a lot of volatility given what's happening around the world. I mean, we've got wars that are happening. We've got an election that's going to be very close either way. And so the markets are going to be going up and down. And, one thing we have to look at, a lot of the equity markets are still in, almost all-time highs. And you look at S&P, we've got potentially around 22%, price earning, a forward price earning. So I think it's almost fully baked, at least given where history's been.
Yeah.
So a lot of allocators have to look at that when they make decisions going forward.
Are you surprised at the resiliency of the market, given how you started your answer? All of these things have been in the face of this market, and then new ones pop up, and yes, they may take a toll for a day or so, but for the most part, we've been able to consistently bounce back and hit these record highs that you reference.
Our markets have been very resilient, especially the United States has been very resilient. And we can't, confuse the markets with the economy either, and that's what a lot of people do. I mean, there's still issues that are underlying in the economy. We had a good, better than expected jobs report, but then inflation came in really hot as well. So people have to look at all of that. But I'm not surprised. The U.S. economies and the world economies been pretty optimistic, and I think we're going to continue to see that.
So was 50 basis points a mistake? I know you had urged the Fed to do something because you thought rates were too high. Was 50 too much?
No, I don't think it was too much. I think they should have started earlier. I think given the information, they probably won't do another 50. I think it may have sent some, bad signals as to why they thought they had to do 50 rather than do it earlier and 25 at each time. But at the end of the day, they're going to get where they want to go, and I think it's not going to be that substantial.
Okay, so we start out talking about the stock market. We are here at an alternatives conference, which you have made a bigger part of your business too.
Sure.
Why?
Well, look, it's part of our DNA. Our founder, John Calamos, is basically the founder of Convertibles. He's written a couple of books. We've been in business for over 47 years. Alternatives has been in our DNA. Convertibles, we're the biggest convertible buyer in the country, number 2 in the world. And in liquid alts, we're top 3 behind JP Morgan and BlackRock. So it's in our DNA, and we're going from liquid to more privates. And so we've launched some interval funds in private credit, and we're incubating a couple more with our partners at Axia, which has been very successful.
Yeah. So what do you say? I know you just mentioned private credit, which has me thinking, where are we in the cycle of this kind of stuff? Where people hear, and we've had conversations, as I referenced earlier, is private credit a bubble? Are we at peak alts? Because now everybody wants alternative products to offer to retail investors. How would you answer that?
Well, if you look at all the allocations, they continue to increase their allocations in a lot of these portfolios in alternatives. And that we're not seeing that go away. We're starting to see a blend between public and private markets. And that's something that's been very, very interesting, especially with the instruments and wrappers that you have now that are giving you a little bit more liquidity, giving you returns right away. And so I think the private markets, especially private credit and private equity, are clearly here to stay.
And you don't have any concern that retail investors who are looking at this and hearing about the prospects of better risk-adjusted returns going forward don't know enough about what they're being invested in as these products are made more available through the wealth advisor channel.
Well, especially here in the RIA channels, that's increasingly growing versus some of the wirehouses that, been the traditional way to put product into retail. Look, it's a continual education process, but the democratization of these products to mom and pop, and this is a lot of what we do, is a real big thing, and it's a great thing. When you can invest with as little as $2,500 and be side by side with some of the greatest private investors like Apollo, Carlyle, Blackstone. It's something that's unique and has not been done in the past, and I think there's a lot of appetite for that, especially as education grows, where they can get the returns traditionally that only professional investors and really ultra high net worth individuals have had.
Right, it used to be if you don't have, I don't know, you pick a number out of a hat, $5 million minimum of investable asset minimum, it's like, don't even bother knocking on our door.
You couldn't get into these funds.
It's changing now.
Big time, yes.
And you think that's just going to continue to go that direction?
I think the market's changing completely. I think that these interval funds, especially, the liquidity that you have, some are like 5% per quarter, which is better than no liquidity or 5-10-year lockup, is a big deal. No K1s, which has been something that a lot of people don't want to deal with. So that's a great thing as well. And being able to get return on your assets from day one and not waiting for a drawdown 2, 3, 4, 5 years. So I think a lot of the market's going to go to these products. We're starting to see a lot more issuance in these products. And the true privates are going to be probably hold for the big institutions that want allocations to have an SMA in a particular sector where they're doing $5, $6, $1 billion increments, where a manager will just invest for that.
We appreciate your time so very much. Thanks for being with us.
Thank you very much.
All
appreciate
right.
it.
It's John Kadunis of Calamos joining us right here at Case. Up next, Franklin Templeton, President and CEO. Jenny Johnson is going to join us right here on set. She'll tell us where she is finding pockets of opportunity right now in these markets. We're live in Beverly Hills. We're back on the Bell after this.
force.
All right, welcome back. We're live from the Case Alternative Investment Summit today in Beverly Hills. Joining us now, Franklin Templeton President and CEO Jenny Johnson, along with Matt Brown of Case, who's back with us now. It's good to see you again. Welcome. Great to have you on our program.
Great to be here.
You know, I have to admit, I didn't know, and I don't think many people out there watching would know that Franklin Templeton is now a top 10 alts manager.
Yes, it is.
It sort of happened under our noses here. And you've done a number of what you've called bolt-on acquisitions. Why?
Oh, I mean, there's definitely a secular change into alternatives. I mean, companies are waiting much longer to go public. We've seen there's half the number of public companies. You know, as a traditional asset manager, you have to address that secular change. And so we bought Lexington Partners, which is a secondary manager. We have Clarion Partners, which is a real estate manager. And private credit. Honestly, banks aren't able to lend like they used to lend because of the capital requirements. And so it has created this massive proliferation around private credit. We felt we needed to be there for our clients to offer that diversity. So today we have about $260 billion in alternatives.
Wow. What does the runway look like to you? You just feel like, as I discussed with almost everybody here, they don't think that we're near the end of the runway, that there's a long way ahead of us where assets are going to continue to flow here.
Well, I think, again, I don't think people are rushing to be a public company CEO. I think that they are happily staying in the private markets as long as there is the ability to be funded. And so, and you see it. I mean, the average company used to go public after 3 years. Now it's 10 plus years. So as long as that's happening and you have this increase in it, you're going to have more and more investments there. And I think what's happened so far is it's only been the accredited investors. Now it's about, this is what Case does, it's about democratizing so everybody has access. Because think about those early growth years of a company. It used to be post-IPO, everybody had an opportunity to invest in it. Now you have to be an accredited investor. And that's why Matt created Case.
So as we hear more about this, I have heard some people suggest, Matt, peak alts. Now everybody's talking about alts, and everybody's talking about every part of alts. How would you counter that?
Well, I would say that many years ago, no one was talking about alts, and those are very lonely days. But especially as an entrepreneur building a business around alts. But look, it's definitely the topic. You've seen really a transformational moment in how investors are thinking about getting the best returns, creating portfolios that have true opportunity. I think, as Jenny mentioned, in the private markets, many companies are not going public. So how do you really participate in the growth of private companies and its private markets and private market investing? And firms like Franklin Templeton that have been focused on marrying their traditional business and expanding it with alternative investment capabilities really make them the ideal partner to be on our platform. They have the DNA, they understand the advisor community. They've been doing that for decades with their traditional business. And now with this additional added alternative investment capability, we're really excited to work with Franklin Templeton.
How do you bridge these two cultures of sort of investing in private markets versus public markets, educating your clients, educating your advisors?
Yeah, no, this is actually a huge part of this because traditional private alternatives managers would go into a pension fund, you sell to a pension fund, they know exactly what their cash flow liabilities are for the next 20 years. But you go into a financial advisor, some clients should have zero allocated and some clients maybe should have 40% of their portfolio allocated. And so that tip of the spear of that financial advisor who is determining what is suitable for the client. Because again, these are illiquid assets. So number one, it's education, and we've built a alternative by Franklin Templeton, which is education. Actually, Case has a great education platform for advisors. We also have built a team of specialists who can sit down with advisors and talk about what's appropriate. Because the challenge the advisor has is if they put the client in the wrong vehicle, they will get in trouble from a suitability standpoint. And so they have to be really careful in this process.
How are you thinking about the future of what the typical or modern, let's use modern, portfolio is going to look like in the future, where we only ever talk about 60-40. Now we're entertaining the idea, of some have suggested 50-30-20. We talked earlier. How are you thinking about that?
Look, I think the technology now enables people to manage portfolios to a goal or to a solution, right? So if you were doing a retirement portfolio, target dates were kind of the first solutions in there. I think that naturally will be added to have privates in that. And as you get closer to retirement, you have less illiquid assets in there, but you get the excess returns early on and you get the benefit of compounding. So I think portfolios are going to be much more managed appropriately to whatever the end goal is with the risk and the time frame of that end goal.
Of all the alts that we've been talking about here and that are being discussed in the ballroom behind me, what's your sense of which is the fastest growing part of it?
Well, there's about $10 trillion that's anticipated to be allocated to alternative investments over the next decade. So as we think about as a platform, we get to see the flow of the capital. Where it's going right now is predominantly in private markets, largely private credit, private equity, private real estate. But of course, some of the more semi-liquid and liquid strategies are also picking up steam as well. It really is about a diversified portfolio of alternative investments, taking a portfolio approach, and that's why Jenny and I really are aligned in thinking education must be first. Making sure that financial advisors and their clients understand the benefits and the risks of including alternatives in an end client portfolio.
I know you're trying to do your part, both of you are. I appreciate you spending time with us. Thank you again, Matt and Jenny. It's great to have you on our program, too. Jenny Johnson, Franklin Templeton. Up next, we're tracking the biggest movers into the close today. Pippa Stevens is standing by with that. Hi, Pippa.
Hey, Scott. Well, one struggling staple stock is having its best day in more than a decade. The name to watch coming up next.
Just about 15 minutes before the closing bell. Back now to Pippa Stevens for the stocks that she's watching. Hi, Pippa.
Hey, Scott. Walgreens is surging after earnings. The pharmacy giant reporting a beat on the top and bottom lines and announced major cost-cutting measures, including plans to close around 1,200 stores over the next 3 years, shutting 500 in fiscal 2025. The stock, though, is still down more than 60% on the year. And Enphase Energy is shedding 9% after it was cut to sector perform by RBC. The firm is expecting a slower rate of growth than the current consensus estimates suggest. That stock has shed more than 30% year to date. Scott?
All right, Pippa, thank you. Pippa Stevens still ahead. ASML is dragging down the chip sector today. We'll tell you exactly why when the bell comes back after this break.